Good morning, everyone, and welcome to the Traders Corner Investors Summit. My name is Anthony Chapman, and I'll be your host for today's event. We're excited to have you with us for what is a truly incredible lineup of professional traders and educators. So thank you for being here. Many of you were very, very early today, so thank you. We're currently trading in a very opportunity-rich environment where volatility is active, momentum is present, and for traders who are prepared, there are real opportunities across stocks, options, and beyond. Today's summit is live and interactive, and throughout the day, you'll hear from seasoned professionals sharing what's actually working right now in their trading. We'll also have a live Q&A, so be sure to take advantage of that because we got some real professionals here. So feel free to submit questions as we go, and let's get started. Our first presenter, let's begin with Melissa Armo. I'm excited to welcome Melissa from Swoosh. Melissa is well known for her work identifying institutional money flow, and today she'll be presenting trading on the side of institutional money in gaps, which she's really great at. Melissa will walk you through how she trades gap stocks using her golden gap methodology to pinpoint where institutional players are active and how traders can position themselves alongside that power money. So everyone, please welcome the great Melissa Armo.
Oh, thank you, Anthony. That was a very nice introduction. Good morning, everyone. I am in New York City today. It is absolutely freezing. So I am happy to be inside with you today, talking about stocks, talking about trading. As Anthony said, it is a wild time to trade right now. The market sold off on Friday, and we'll see where we go Monday. I have been trading now for 18 years. It's hard to believe, almost 20 years. And I trade nothing but gaps, and actually I'm mostly short. So on days like yesterday, I really am able to capitalize on the sell-off in stocks in the market. And we're going to talk a little bit about my method today. If it's something you think you're interested in, if you want to learn more about what I do, you can go to my website at www.thestockswoosh.com, or you can email me at melissa@thestockswoosh.com. So today we're going to talk about trading the side of institutional money in gaps. And again, this is me. I live in New York. I've been trading now for, feels like my whole life, but I really do enjoy trading. And as the years go by, it's very interesting now. Things change. Things can change in a dime. And I think a lot of people that were going long, all the dips that happened in the market and the rallies in 2025 are not seeing that now for 2026. So people that are trying to go long, it's been shot. I short in any market. I've been shorting, like I said, for 18 years. So you can short stocks in bullish markets. You can short stocks in bearish markets, but it's really hard to go long in a sell-off when the market's selling off. And we'll talk about that more today. If you're interested in anything that I do or signing up for one of my classes, you can email me at melissa@thestockswoosh.com or call me at 929-3200-GAP. Probably the best place to follow me is actually YouTube. A lot of videos there. And again, I do appear on TV talking about stocks, talk about the economy. And right now, like I said, it's a great time to trade. This trading is a great job in the winter. It is, I think, 1 degree right now in Manhattan. It's just so cold. I'm so lucky that I can work from home and do this from home because I would not want to have to go out every day and commute in this weather. And so again, trading is a great job because you have unlimited income, but particularly when the weather is freezing, you do not have to go out and commute or worry about, scraping snow or ice off your car, which I did, a long, long time ago when I lived in Pennsylvania and I had to drive to a job. But I don't have to do that now. And, it took me 3 years to figure out my whole method. It was 3 years of my life that I never want to relive, and luckily I won't have to, but it was a long period of time for me to figure out what I know, which I now share with people in a class, which I teach once a month. And, it's really interesting. As the years go by, different market environments, different things, we're living in such a tight-knit world right now where it's 24/7, and you have to know what's going on in the world. Even if you're not somebody that likes to watch the news all the time, again, I do watch the news because I appear on the news, but you got to know what's happening. You have to know what's happening, and you also have to take profits in your trades when you're up. So again, if anybody has any questions as we go along today, you can plop it in the room and I will see it. But you have one goal when you trade, excuse me, and that is to make money, okay? It's fun to trade. It's fun to press the buttons, but it's not fun when we lose. It's fun when we win. So you need a strategy where you will win more than you lose. Excuse me. And again, I know it sounds simplistic, but you can make money even doing a crappy strategy. You can make money taking a dumb trade, a bad trade. That's not what you want. You want to actually do something that will work, again, like I said earlier, in any market condition, any market environment, and where you're going to have more winners than losers, okay? So again, whether you want to do this part-time, full-time, I trade in the morning. I'm focused on the morning trading, which I'll talk about, but you can find a way to make time if this is something that you really, really want to do. Excuse me. Sorry, I need more coffee. Anyways, I put in here the stats for last year. 2025 trading room stats. All the winners and losers. Again, I've been trading for a long time. My average risk is about $4,500 a trade. So last year in the room, made over 1.5 million, was a win ratio of 61%. And these are all the trades we did here. Then I do options too. Now I risk more. The reason is I want to take more expensive trades and I want to hold them overnight. You could just do one or the other. Some people are trading the retirement account, they can't do day trades. They can only trade options, or some people can't afford to have a margin account. So fine, then you set up an options account as a cash account. Again, this shows all my winners and losers for last year, over 3.9 million, and I had a 67% win ratio for options. So last year, my stats was over 5 million for the year. And again, I've been trading for 18 years. You can trade with an advanced trader risk if you have the size in your account, or you can trade with a beginner risk. You could do one contract, you could do 100 shares. So you can trade my strategy with small size or big size, but you must be consistent. So again, this is another thing that people don't understand about trading. You have to be consistent with your risk, per dollar risk, not contracts. So sometimes I take a trade and I might take 2,000 shares. Sometimes I take a trade and I might take 5,000 shares. The dollar risk though is the same or close to the same. That's how you have equal consistent results. Otherwise, you could take a fabulous trade and not have, enough size, and then take a trade that loses and have too much size, and you're upside down with one winner, one loser. You see the difference? So consistency counts, and I talk about that and teach more about that in my class as well. The other thing you need, though, is also positive attitude. Sometimes in the winter, people get down. Again, it's cold, and the days are shorter in the winter. Although I will say it's starting to stay light out a little bit later here in the Northeast. December was really, really short days. It was getting dark like 4 something in December. But you've got to stay positive. Again, think about the benefits of this time of the year. Focus on making money. Right now it's earnings season. This is the best time to trade. This is the best time to trade, the best time to make money. Again, if you don't want to go outdoors, if you live in the Northeast and it's cold, focus on making money. Focus on learning a new trading system like mine. Take advantage of this time so that once the weather warms up, you go outside and have fun and enjoy the fact that you have free time to actually do things. And you get good and learn now, again, when you're inside. So in order to become successful, you need a system and a niche. And like I said earlier, my niche is really shorting. So it's not only trading gaps, which we're going to talk about today, but also shorting. So you can make money in the market. People do it all the time. However, not everyone does. Why? For every winner, there's a loser. You're not creating anything. When I make money in a trade, I'm not creating something that I can see. It's choosing the better trade over somebody else and taking money from another trader. When I short something, like I shorted the market yesterday. There were people that went long. So I made money shorting the market yesterday. And there was people in the market that were retail traders that went long yesterday and they lost. That's what it is. Again, it's a zero-sum game. So it's really the smartest people in the room are the ones that make money. And that's what people said, well, why is there so many people that lose and not a lot of people win? Because again, most people won't focus really on the right thing. Most people are just only focused on making money and not focused enough on learning what to do. So again, why the goal is making money, if you're not focused on learning first, you're not going to get to the goal or achieve the goal of being profitable. You follow what I'm saying? So how do you do that? You got to get a good system. And again, like I said, it has to work in any market condition. And you have to follow it daily. You can't veer off of it. Okay? So if you decide to come and learn from me, I have one focus, it's gaps, and specifically shorting. So I focus on fast moves, volatile moves. We saw that yesterday in the market. We shorted V yesterday. Visa had earnings. You could look at that chart too. If we have time at the end, we'll talk about it. That was a nice short. We did UNH. This was another one we did this week. Stock fell. So this is a daily chart. So let's talk about what is a gap. Again, a gap is, on a daily chart, it's the difference between the close and the open. So this closed at one price. The stock market, the US stock market closes every day at 4 o'clock and opens the next day at 9:30. So again, from here to here, what happened? Stock fell. It actually gapped down, and then we shorted it. Down here's the volume, okay? So again, this had a big move, had momentum, and it had a fast move, okay? And then that was a short. And again, any questions as I'm going along here, let me know. But if you're someone that, you know, is like, oh, I don't know how to short up and just going long dips, you have to position yourself so you know what to do, because what if this year you can't make money going long dips all the time? What are you going to do? Lose all year? Again, you need to how to go long and short. There's a lot of things happening in the world. Again, we're very interconnected right now. And the volatility is going to continue. But right now, it's a really, really special time to trade, as I was saying, because we've seen just so many big moves in stocks. That UNH is just one of them. I named Visa, I said the market yesterday, and there's just a lot of opportunity right now because it's earnings season. Some of the best trading I've seen has been going on just this month. Today is January 31st. I can't believe tomorrow's February 1st, but 1 month into the year, we've just seen huge moves already, okay? So how do I figure out what to trade? How do I make the pick? Well, I developed a rating system. This is what it took me 3 years of my life to figure out. I go through and rate the gap. I look at 26 points, and as I'm rating it, I tally it up. I look at it on the daily chart. If you come and want to take my class and learn from me, this is what you'd learn. This is the meat and potatoes of what I do, of how I make my daily pick. I wouldn't be able to do it without this. So for me, it's not guessing. It's not a 50-50 crapshoot. It's I'm going through and I'm rating the gap. So here's what I did with this UNH. We shorted this. This was a nice trade. Shorted it at 296.20. Boom. Fell, dropped, got out 284.50. Made over $14,000. Now, if you wanted to take less size, like I said, you could have taken 100 shares. You could have taken less size. Either way, this is more than a $10 move. Again, I didn't even hold this all the way down. This is the day that this fell, and here on the 27th, I shorted it, got in, got out, because I mostly focus on the morning, okay? So I run a trading room where I call the trades. I call this trade of the room. And I call where I get in, get out, and put the stop if you want to do the trade with me. Then we did this one. We did INTC, again, another gap. Stock closed here, gap down, open, fell. Shorted it at 43.75, got out at 43.25, boom. Had 6,000 shares. Again, you need a margin account to do this. Made $3 grand, in and out, very, very quick. Again, this kept going too. See where it went? So again, this was a short. So the stock gapped down, closed here, gapped down, fell, boom. That was a couple days ago on the 26th. Any questions here so far? Again, I called this trade of the room. So again, I got up in the morning and rated the gap and said, this is going to fall. Again, how do you make money in the market? You got to get the direction right. Anything you do, you got to get the direction right if you're going to get in the trade. Whether you do an option, whether you do a day trade, you have to get the direction right or you're not going to win. So what is a gap? A gap is the difference between the close and the open. Stocks gap most every single day. Not every gap is a good gap or what I call a golden gap. I'm looking for the gaps that are predictable, okay? And how do I do that? I use my gap rating system. And that is what I teach in my class. So it is a whole system which teaches how to find the best pick, how to enter the trade, how to exit the trade, and targets, okay? So again, this is it. This is all that I do. I don't do futures and this thing and Bitcoin and whatever. I only trade gaps. I'm mostly shorting. So occasionally I will go long. We've done some longs, but I really prefer to short. So I find that shorting gives me an edge. And specifically on days like on Friday, let me see if I can pull this up here. Can everybody see the Qs chart? Anthony, I don't know if you have the chat up for me to see questions or not. Can everybody see the Qs?
Yeah, I haven't seen any questions for, I don't know what's going on. People don't want to ask questions today.
I'll
Yeah.
just keep going.
I mean, it's such an exciting week too. So please, people, get on it.
Anyways, can you see the Qs?
The Qs? Yeah. The questions, yeah, I could see the questions.
Yeah. Can you see the chart?
Yeah, the Q charts, yes. Yeah, triple Qs
Okay.
trust, yeah, sorry.
So what happened here, this was Thursday, this was Friday. So Thursday, we closed at 629.43 at 4 o'clock. This is a gap. And then we opened the next day on Friday at 625.71. So this was a gap down, okay? Now I'm gonna go to the 1 minute here quickly. Rid of this. So again, initially, well, let me go to the 30th here. This was, let me squeeze it all. This was yesterday morning, again, closed here, gap down. This is where we opened, rallied, snug as a bug. And we shorted this, and I got this whole drop in here. And that was yesterday. So it was a beautiful sell-off, but a lot of people were going long yesterday, but the market was actually a short, okay? That was a nice move. Now, again, where we go Monday, I don't know. You know, you never know from a weekend, but that was yesterday's day trade. So again, here's another one. This is JPM. We did a couple trades in this too. Stock closed here, gap down, fell. Again, these are all January. All January. Again, we've had a great start to the year, some big moves. Again, whether you have 100 shares or 500 shares or 1,000 shares of something, the bigger the move, the better. You know what I'm saying? So again, I'm looking for momentum in the gap to make money. Because whether you have a small size or a big size, whether you're doing a day trade or an option, then you can make more money with momentum. So I'm not trading in and out for 10 cents, 15 cents, 20 cents. Again, think about it. If you have 1,000 shares of a stock and you short it and it drops $1, you'll make how much? $1,000. If you have 1,000 shares of a stock and you short it drops 10 cents, what are you going to make? $100. It's like too much risk for the amount that you'd make. So, I mean, simple. Which would you rather make? You'd rather make $1. So I'm trying to make at least that. But many of these moves here I'm showing you are much, much bigger than that. But the key to day trading stocks successfully is using a system. Trade a system that sets up with a daily high level of predictability and the directional move. Trade a system that works independently of the market and does not need the market to work. I explained that earlier. It's extremely important. If you take away anything from today, remember what I'm saying. Because again, if you're all caught up in this buy the dip stuff from last year, you're already getting in the chop from the last month. And I suspect it will continue and get worse for people who continue to buy the dip. Success or failure has everything to do with the quality of your system. So number one, you need a good trading system. Number two, it has to win more than it loses. So for me, again, my niche is shorting, just because of the fact that a lot of people don't know how to short. And I like quick trades. I like fast trades. I like to be done trading in the morning and out. And again, when I'm trading, I'm looking to get in pretty early. Like, I mean, I'd say aggressively. I do the prep work beforehand, before the market even opens. I know I like UNH or Visa or whatever, okay? But I really think it is also important to have a niche. You know, I mean, so again, I got into shorting because I like fast trades. I like fast moves. Stocks fall faster than they rally. And I realized that most traders like to go long. So then I said, wait a minute, there's something to this shorting here. I can do something different. And it's been really something that when I started trading, I never realized how many people didn't know how to short or didn't like to short. And then the more I realized that, the more I got into it. So my method is based on reading institutional money that moves stocks and gaps. Not all gaps are made with institutional money, that's true. This is one reason why people often are confused reading gap direction, but it is not confusing if you have a method to review it daily. And again, I'm using technical analysis, so you need charts. You got to have a live feed, you got to have live data, and you either have to have a margin account or an options account to trade with me. So again, my niche is gaps and shorting. So how do you make money shorting? The stock drops. That's it. That's how you can do it. And who can short? Anyone. Anyone can short. And you can buy a put, which is an option, and sell it to exit it, which is a short. A put is a short. So again, retail traders, professional traders, anybody can short. You have to have your account set up to short, but you can do it. And remember, selling happens very, very quickly, very, very fast, and it could go big. And I love that too. Now, I will go long. I'll show you. We did this LMT. This was a long, it's a beautiful chart. This is Lockheed Martin. We did the 530 calls. That went, this is an option. Okay, so I do options too. Called it on 1.7. Let's go back here and look at it. The trade was down when I initially did it. Again, this was a bullish gap. Closed here, gapped up, so I went long. I did a call, fell. I stayed with it, stayed with it, stayed with it, pooh, and it went up. And this was a nice trade, a beautiful trade. It ended up being 820% return on investment. Really, really, really big move. And this is actually pretty cheap considering the price of the stock here. So bought it at 5, sold it at 46, made $73,800. Again, I'm risking an advanced trader risk. What if you risk 2 contracts and 1,000? You could have made it for 20 grand. These are account making type trades. We don't get these trades every day, but we certainly get them. And because it's earnings season right now, like I said, we're getting the volume, we're getting the volatility, we're getting the big moves in stocks. We are getting trades like this. Here's another one we did. This happened to be a long too. This was CVX. We went long. We did the 160 calls. Did it on the 8th here. Oops, here. No, here it is. Closed here, gapped up, rallied, and again, we went long. See it here? We did the 160s. So I called this on the 8th. Again, the strike was 160, and you take it and you hold it and you get the traction in it. This was so, so, so cheap. $1.20, sold at $9. Again, these are big moves for options. You understand, 650%. And again, a couple of these a month. I mean, you're singing and dancing. This is how you can grow your account. Again, it doesn't matter if you even just do 1, but this is 10 contracts. Your risk was 1,200, sold at 9. Okay. So if you're someone that, again, doesn't want to do day trades, only wants to do options, that's fine. Again, some people can do options in a cash account. Some people can do options in the retirement account. Any questions on that? Or anything I said so far. But for the most part, though, I do look to the short side first. And if I find a really, 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 really good long, I will go long, but I prefer to short. Any questions from anyone about anything with that? So it's earnings season right now. You have stocks that gap up, you have stocks that gap down. Can you go long every gap up? No. Can you go long every gap down? No. Can you short every gap down? No. Can you short every gap up? No. That's how I embedded the whole point of the rating system, to pick it, to figure it out, to figure out what am I supposed to do with Visa? Should I buy it? Should I sell it? What should I do? Again, that's the whole point of the rating system. Someone's saying, so after gap, you buy or sell. It depends on what I'm doing. It depends on if I rate the gap and it meets my criteria. If it's a bullish gap and it rates 20 points or more, I'll go long. If it's a bearish gap and it rates 20 points or more per my 26-point criteria, I'll short it. Do I short after 12? I usually trade in the morning. If you're asking me if I ever do trades in the afternoon, yes, sometimes, but I mostly trade in the morning. But yeah, I'll do afternoon trades. There's nothing wrong with the afternoon. How far out do I do options? Usually weeklies. Usually weeklies. I'm not doing leaps or any long terms. No, I do not wait for a pullback. I'm trading momentum. If you're waiting for a pullback, it's gone. Again, that is what most people are doing, and they miss it. They miss the whole thing. So this is very unusual for a lot of people. Yes, you're right. Most people do trade pullbacks. Do you consider open interest on your options trades? What are your limits? I just in general won't do something if it doesn't have volume. That's not like a rule or anything. It's just, I'm just not gonna, like, I'm not doing penny stocks. I'm not doing low float stocks. I'm not doing anything if it's crap, if it doesn't have volume, and that's whether it's a day trade or an option. That's not like a rule. It's just like, I'm not even gonna do it if it doesn't have volume in it. Anyways, getting back to what I was saying about panic and fear, again, the market slid on Friday, just completely slid off. Again, people were long, they dumped it, it went poof. And again, you can say, well, it was because of Iran or the government shutdown. You can always find a reason fundamentally if you really are interested in that. If that's what you're into, fine. But I'm telling you, it happens in live time much, much faster. And if you want to take advantage of it, you have to be in the trade before you even find out the reason for something that's selling off. You follow me? You have to already basically be in it. There's a million places to find gaps. There's thousands and thousands and thousands and thousands and thousands of gaps every day, but they're not all good gaps or what I call golden gaps. You follow what I mean? And in fact, there's more things that are not good setups than are good setups, if that makes any sense. Okay, what was I saying next? Okay, so let's talk about how do I find the best shorts daily? How do I make the picks? The Golden Gap rating system, again, is a 26-point rating system, and gaps are created with large institutional money. That's what makes the gap in the first place. The professional gaps that happen and play out in stocks are formed by one thing and one thing only: large institutional money. Therefore, you need a way that will help you pick the correct direction to play the gap, and then confirm that the large money will flow with it, because that's what you want. You're never going to move a stock. You have to find where the big money is going. Is the big money dumping the cues or going long the cues? Again, after the fact, it's very easy. You could say, oh, they dumped it. They dumped it after the fact. But were you in the trade early in the morning with me to get the sell-off? Probably not. So again, after the fact, let's pull up the Visa. After the fact, anybody can look and say, oh, they dumped it. This was a beautiful move. We did this too. High was 333, low was 321 and change. But it's the key is getting it before that happens. You know what I'm saying? Not chasing it. So again, shorting gives me a niche. And mostly people get really, really, really scared when stocks fall. And so we're playing on that. We are playing on the fear that comes in. We're shorting, making money on that. Again, the reasons for that, it's neither here nor there. I don't have time to even deal with that, and I don't even worry about that. Again, if you have a small account, can you still short? Yes, because you can buy a put. So if you don't have a margin account, you can buy a put. Now, you can have a margin account and have 2-to-1 instead of 4-to-1 if you have under the 25,000. Or there's also prop accounts. So, I mean, there's plenty of places that you can trade if you don't have the 25,000 and you can trade on margin. There's lots and lots of opportunities and available places out there now for people to trade. And again, specifically, if you have under the 25,000, you could do options. Like I said, you could buy a put. And a lot of people are trading with me that have retirement accounts and they're doing options. They're buying the put to enter it and selling it to exit it. And that's a short, okay? Any questions here so far? How are we doing? Anyways, you can use the system to trade options, like I said. And what is your expectations to earn 1-to-1? Okay, so I'm looking for 26 points. That's what I want to find. I'm looking to get the direction right. Again, I'm preferring to short. I'm very focused on what I'm doing to make money and get in and out quickly for the day trades, and then I am letting the options play out longer. Now, again, if you're someone that's been trading for a long time and you've done this class, that class, try different things, you have to find something that you're like, oh, this totally makes sense. I get this now. You know what I mean? Like, if you think about it, I'm saying to you, stocks fall faster than they rally. Hopefully that makes sense to most people. That's common sense. But it's something that's not a lot of things that people think about. They just think about buying pullbacks, like we were talking about, as someone said earlier, and they think about doing dips, buying the dip. You're going to buy the dip, fine. How do you know when it's going to end? When it's selling off? You know what I'm saying? You don't. And you're losing the whole while. There's no automation. I manually use my brain every single day. Got to use your brain to figure everything out. Okay. Anyways, getting back to the whole part of education too, it's like if you understand what to do, you will trade better. You will make more money. You won't freak out if the trade goes against you, kill it, and then have it go into work. Or you will take more risk if you think it's really, really good and you understand what's happening. Or if you know you're going to get the market with you. Or if you know it has a big target. Or you'll do an option and you'll do a day trade. Like, I just can't even, it's just so difficult to like convey this to people. It's like, again, it's like a sixth sense that I have really when I'm trading. And anybody that knows that when they're trading with me, it's like, again, if you are doing something for a long, long time, you get good at it over time. And I think a lot of traders are not good at really any system because they don't stick with it long enough. And it may be challenging for you to find a good system. I'm not saying that, you know, sometimes you try things, it doesn't work out, you test things out, fine. But once you find something good, you've got to stay with it. I mean, I was lucky that I was able to figure out what I know, but again, the shorting piece of it and focusing on the short side really just gives me such an edge in the market. And again, Friday is just a great example of that. But for me, I'm taking calculated risk, not risk for risk's sake, like I said. And you can start out slow. You can build your account over time. You can figure out what you're going to do over time to build it up. I'd say give yourself, you know, 2 months, 3 months, 6 months to get where you want to be until you're really getting it down. You know what I mean? Until you're really like understanding what you're doing. Any other questions here? Anyways, the rating system is a 26-point checklist that measures gaps by rating them in the daily chart to find stocks to trade that have, number one, a high probability of directional bias for the entire day, big move on the day, early confirmation of the bias in the move between 9:30 and 10, and precise entries with follow through and a good risk to reward. So again, this is what I do. The purpose of the system is to help you evaluate which gap to trade each morning using a checklist. This checklist tells you what to trade, when, and in what direction. And honestly, you do not need an overall broad-based view of everything in the market. You can do one thing and get it down. And like I said, you don't even have to worry about what the fundamentals say or worry about the, you know, the economic data coming out or read the research reports or anything. You can use any charting service you want, Larry, as long as you have live data and live beam. You can use any broker you want, okay? So learn how to read institutional money and price patterns in gaps, and you don't need to do anything else. Because if your reason for doing this is to make money, I'm telling you, this will make you money. And again, it just so happens we've had a very big start to this year. I did not put the stats in for 2026. I'll do that before the next webinar, the next lecture, but I showed you some of the trades we did. I told you some of the trades we did yesterday. So if you want to come and learn my method, you will learn the 26 points, you will learn the entries, you will learn the exits in the Golden Gap course. So it's a class on how to find, pick, and play professional bearish gaps. Class is online. You can be anywhere in the world and take it. Class is $6,999 for February. I do it once a month. It's February 21st and 22nd, 9 to 5. And again, class is online. I am doing a blizzard package. We had a huge snowstorm in New York 2 weeks ago now, I guess it was. We still have a lot of snow in the ground, still freezing, but I'm doing a blizzard package through this Friday. If you want to sign up for the bundle, which gets you 3 classes and 3 subscriptions, the newsletter free to the end of this year, trading room free to the end of this year, market report free to the end of this year, and 2 one-hour mentoring sessions with me. This ends Friday. And the classes included in the bundle are the Golden Gap, the Trends class, and the Options course. You do them all in February. You could get in and start trading right now and start trading with us this week. And the bundle price is $89.99. Someone's asking a question. What time do you analyze your trades? The daily chart. That's what we've been talking about all morning, the daily chart. So again, I'm taking entries and getting in on the 1 minute, but I am doing the ratings and analyzing everything on the daily. So again, you know, I think that we've already seen, like I said, 2026 is already completely different than 2025. Completely different from 2025. And I think a lot of people are convinced, you know, that they can do the same thing they did last year, this year, but that's not true. You can take a snapshot of any period in time and look at it of the market where you could do this thing, this thing, this thing. It could be for 5 weeks, it could be for 5 months or whatever. But again, the whole idea of making money is that you could do something over the course of weeks, months, years. Stay with that, do the same thing and be successful. I teach all of that in the class, whoever is asking about that. I was going to say something else too, and I forgot. Here's this LMT. We did a couple trades in this. I'll just quickly bring this up here. Again, beautiful chart, really nice chart here. Again, if I do go long, it's usually like a really, really quality long that I'm absolutely in love with to do it, which we did do this. So this had earnings too. And again, look at the move that this had the other day. So we were in a call into this move up, I will tell you here, on the 29th. Someone asking about percentage of your account value. That's something that is definitely up to you to decide. If you are fluent in the program, fluent in the system, then I think you could risk a higher percentage than someone that's brand new. I think if you have a lot of confidence in yourself and you know what you're doing and you got it down and you did the classes, you can risk more than someone that's brand new or never traded gas before, is not familiar with what they're doing, or someone that's never traded at all. So again, I'm just going to give an example here. Let's say you have $10,000 in an options account and you're brand new. I wouldn't risk more than $300, $400, $500 a trade, okay? Now, if you're someone that is really good and you've done the classes and you know what you're doing, then you could risk up to $750, maybe even $1,000 per trade. But I will tell you that I'm an active trader. So I might do 1 day trade a day or 2, but I might do 5 options a day. So you have to take that into account. If you want to be as active as I am and do all the trades, then you have to say, well, I'm going to risk this much and divvy it up and do this many trades. Do you follow me? So if you want to risk 1,000 a day, you say, well, Melissa might call 5 trades today, or she just called 5 trades today. You risk $200 a piece, like that. Because again, we're active. I mean, so I don't think there's anything wrong with trading with a small account and building it up. You know, I do show examples of beginner risk, which I did in here for the options. I know everybody wants to make tons and tons and tons and tons and tons and tons of money. I get it. But if you don't know what to do, you're not going to make any money. And if you have a small account, you have to be very thoughtful about what you're risking, because you don't want to lose your capital. You're trying to grow it. Do you know what I mean? And so you don't know when the next big one's going to be, when the next big LMT trade is going to be, or CBX or whatever we're doing. You don't know. So you have to be in it to win it, basically. You know what I mean? And again, 10 contracts, that's good size. It's like 1,000 shares of something. And some of these stocks that I call high flyers, but they're expensive stocks. So obviously it's a lot cheaper to trade options than it is to do margin trades in some of these stocks. Like I didn't go long LMT as margin trade. It's expensive. I could have, but it was a lot cheaper to do it as an option. Any other questions? So I've been doing this a long time, and you know, I have only been doing this. If you go to my YouTube, you can go back, like I said, almost 20 years and look at my videos on YouTube for a long time. This is all I've ever done. So, you know, I've just been doing it for a long time. I'm very experienced in what I'm doing, reading the market, reading stocks, reading directional bias, and reading the fast moves, the quick moves. Someone's asking a question. When you use options, do you typically buy at the money? Sometimes I'll do at the strike. Sometimes I'll do away from the strike. And if I do that, then I will do it like maybe that's the target. So it depends. It depends. I look at the cost. I look at how many days I think I want to do it. But that's neither here nor there. I'm doing it either at the money or I'm doing it away from the money where I'm seeing that that's the target, that it's going to go to a certain number. But LMT was very confident that that would get to 600, and then it did. You know what I mean? And CVX, I was very confident that would get to 170. You did. You know, the thing about options is you've got to get momentum in options to make money. Again, everyone's worried about the time value. Listen, something could go in a day. It could go in a day. It could go like that. It could go in 1 hour. It could go in one overnight, in a gap. So again, everyone's worried about the crunch time of options with the time value and decay. But if you're in something that's going to move in a big, big way, you only need 1 day to get it. I mean, again, everybody loves it when it goes the same day that I call it. But sometimes it takes a couple of days. Sometimes it takes a couple of days to get it. Okay. Listen, thanks so much, everyone, for having me. Email me at melissa@thestockswoosh.com if you want more information. If you want to sign up for the Blizzard special, you have till Friday. Think about what I said today and have a good week.
Melissa, thank you for that excellent presentation and for clearly explaining how institutional money creates opportunity in the markets. We also appreciate the generous offer you've made available to our audience today. And thank you for being here. Everyone, thank you, Melissa. Thanks for being here. Next up, we're joined by Chris Sayre of Big Trends. Chris brings 38 years of experience in the financial markets and specializes in systematic options trading. His presentation today is titled "How Our QQQ Options Strategy Has Been Doubling in a Day." Chris will walk you through a focused approach to trading triple Q options using price action and disciplined profit targets. Chris, welcome, and please take it away.
All right, you want me to go ahead and switch myself over to the presenter?
Yeah, I got to do that for you.
Oh,
sorry.
you got to do that. Okay, I see that.
Yeah.
How are you?
I'm good. How are you?
Doing well, thanks. A little cold.
Yeah. Chris, you are the presenter. I think you're on mute. I'm sorry, Chris, we still can't hear you. You don't appear to be on mute right now, but we can't hear you. Yeah, sorry. Chris is having some audio issues at the moment, so we're just gonna wait. He might have to like log in, log out, and log back in. That might help. Randall's asking, will this be recorded and available to view somewhere? Yeah, Randall. You'll get a link in your email, and just click the link, and it'll take you straight to the YouTube, and you could review all of this. So, looks like Melissa's having a good year. All right, Chris is back.
Can you hear me?
We can hear you now. Yeah.
That has never happened. So
Yeah.
love the gremlins. Okay. Let's see here. We still good as we do. Anthony,
All right.
can you hear me?
Yeah. Okay, you're back. Yeah, we can hear you. For a
All
second,
right.
we lost you.
Yeah, I don't know what that was all about. Been doing this over 14 years, and that has never happened. So always a first for something, isn't there?
Yeah.
Sorry about that. All right, you ready for me to roll?
You're good. Yeah, go ahead.
Okay. All right. Hey, ladies and gentlemen, it's Chris Sayre. I'm live at the Big Trends World Headquarters in Lexington, Kentucky, where I was saying with Anthony, I don't know if you caught that before we had the audio issues. It's a little chilly here. It says 13 degrees. We had the storm come through that I'm sure many of you all are aware of. But like Anthony said, we're going to be talking about QQQ option strategy. So if you're not familiar with the Qs, we're going to talk about them. One of the most highly traded, most liquid securities out there. Before I go any further, they make me read this to you. The information provided in this presentation is based on our proprietary research and is intended for illustrative purposes only and are not to be construed as specific advisory recommendations. Stocks and options trading have large potential rewards, but also large potential risk. The past performance of any trading system or methodology is not necessarily indicative of future results. See our terms of use on the bigtrends.com homepage for more information. So as I said, as Anthony told you, I work for Big Trends, bigtrends.com. It was started by Price Headley in November of 1999. Fun fact for you, I was actually one of Price's earliest clients. I was a trader many, many years ago. I'm 57 now, been doing this since I was 18 years old. You can see that I have a background in the financial services industry. Last bullet point, you can see that I joined Price and his team over 14 years ago. And as you heard me telling Anthony, been doing this for 14 years, never had an audio issue like that. But one of the joys of my job, besides getting to do the presentations like these, is getting to interact with our clients and traders just like you. So if there's anything that we can do for you, anything that I can do for you personally, don't hesitate to reach out. Be glad to work with you. Speaking of you, let's talk about what you're going to learn today. As you can see there in yellow, the name of our trading system is QQQ Options Playbook. We call them alert services here at Big Trends. You can call it a subscription, you can call it a newsletter, but it is a trading system. We're going to talk about how we boosted results with less work, tactics from our many decades of experience. As I said, started in November of 1999, so we're over 26 years old. I'm a visual learner. I believe most of us are visual learners, so I've got tons of success stories and some losses and chart examples so you can see what these trade looks like. And as I told you, and as you can see there, QQQ Options Playbook is the name of the strategy. I'm going to reveal some of the details about that for you today and how you can subscribe today and maybe start getting your first trade as early as Monday. So why QQQ is one of the most powerful trading vehicles. I'm not going to read every word here on the slide for you. Tracks the NASDAQ 100, packed with the market's highest octane leaders, elite liquidity and efficiency. You heard me talking about that earlier. One of the most highly traded securities day in and day out. It does have higher volatility than most broad-based market ETFs, which is great for traders. As Melissa was saying before I came on, when you're trading options, which we do here at Big Trends, you want things to move, and that's what we're looking for in the Qs. And as you can see there on the last bullet point, ideal for systematic and rules-based trading. So you may have noticed I've got a background in finance. Price Headley, our founder and CEO, has a degree in economics from Duke. He's a CFA, he's a CMT. All of our analysts have business backgrounds. We understand how to read financial statements and break all that stuff down, but we're not doing that here at Big Trends. We're traders, we're technicians, we use technical indicators, and we're in and out of these trades in just a few days. So trading shares of QQQ would be attractive enough, but our QQQ Options Playbook takes things to the next level. So let's start by looking at a winning trade example. So something I want to point out, as I told you on one of the earlier slides, I've got lots of case studies for you today. So some things that are going to apply to each one of these case studies. We're going to be talking about money, right? That's why we all do this. Yeah, it may be a fun hobby, but if you're going to do it, try to get paid, right? So all of the trades today are going to be based on allocating up to, but no more than $1,000 a trade before any commission or subscription investment. But please hear me when I say this. You do not have to be $1,000 trader to be a subscriber to our QQQ options playbook. You do need to be willing to allocate about $500 a trade, because the average recommendation over the last 12 months has been just under $4.30 a contract. However, as I said, the Qs are one of the most highly traded liquid securities out there. So if you're a larger trader, no worries about getting in and out. But as I always say, please make sure you trade with what fits in your financial situation. So that's the money piece. Every chart that you see today, daily chart, each bar, red or green, represents 1 day of trading action. So let's talk about it. On Friday, January 23rd, we got into this trade on the Qs. These were calls, as you can see here. We're very specific in how we call out these trades to our clients. We're only trading one security, QQQ, but we tell you the exact expiration. We give you the strike price. We tell you the direction, and we tell you what to pay. So there's no doubt about what to do. Now, what we're using down here, this is percent R, stands for percent range. Now, Larry Williams, we give all credit to Larry Williams for creating the Williams percent R indicator, but Larry used a negative scale. We like using the positive scale, 0 to 100. Now, all the charts today are from Thinkorswim, but you do not have to be a Thinkorswim user to be a subscriber. Now, I'm not going to tell you the exact setting for percent R. However, when you sign up today, you're going to get access to a couple resources, and one of those is called the Settings and Rules Sheet. And it's a 2-page PDF outlining the trading system for you, and it's going to tell you exactly what setting our team uses for percent R. But what I will tell you, if you look over here to the bottom right, you're going to see some thresholds. You're going to see 60 and 40. So one of the scenarios that we like is when percent R here is above 60, we will enter calls up there. And then as you can see, on Tuesday of this past week, we got out of the trade for 100%. Now, all trades are going to target 100%. All right. We're going to use a 50% stop. So risk 1 to make 2. So think about how much you've already learned in the first 8 minutes. We're using daily charts. We're only trading the Qs. We're using percent R. We have 2 key threshold levels that we look for on percent R. You know, we're risking 50%. We're targeting 100%. And you know, the average recommendation is less than $4.30 a contract. And you know, we tell you exactly what to trade and how to trade it, all in the first 8 minutes. Now that trade, if you'd allocated up to $1,000 to that trade, you would have made $882 in gross profit before any commission or subscription investment. Now here's a little summary of the strategy guidelines. Average holding period, 2 days or less, but no day trades. So we want to get this move right very quickly, like you saw on that first case study. What type of strategy? 3 different percent R signals analyzed on a daily chart. So 3 different percent R. Again, percent R stands for percent range. What options do we trade? Straight calls and puts. No spreads of any kind, debit or credit, no condors, butterflies, any of that stuff. If you can simply trade a call or you can simply trade a put, then you can be a subscriber to our QQQ options playbook. And there's a key piece of the system that I'm sharing with you now, using 3 DTE expiration. That stands for 3 days until expiration. Now, as I mentioned earlier, I'm 57 years old, been trading since I was 18. Back then, the only options that we had to trade were monthly options. Those are still in existence. Those are the options that expire the 3rd Friday of every month. Then the exchange created weekly options in about 2005. And then in 2016, they went to Monday, Wednesday, and Friday on some securities, and securities like the Qs, they went to dailies in roughly 2020 22. So they've been around for a few years now. So we're using 3 days until expiration. So if you see 3 days until expiration down here, but you see 2 days up here, we don't want to be in a trade on the last day of expiration, okay? We don't want to deal with that last day volatility and theta decay. Now, as I showed you on that first case example, we're using daily charts. Now, you have to be available at this time of day to be a subscriber. New trades can trigger once per day. Monday through Friday, we enter the signals before that daily bar closes, and alerts are sent between 3:40 and 4 o'clock Eastern time. And before anybody says anything, these options trade until 4:15 p.m. Eastern time. Don't learn that the hard way like I did years ago, okay? Don't get surprised and caught off guard when you're in a position and you're like, oh goodness, this thing's still trading. All right, so they do trade until 4:15 Eastern time if you aren't aware of that fact. Now, the defined session eliminates noise and allows us to use the power of those 3-day until expiration options. Eliminates noise. Why do we have that in red? Well, as I told you here at Big Trends, we're technicians. We're very systematic. We keep the subjectivity to a minimum. We're not like, oh, there's a Fed announcement coming up, or oh, XYZ company's getting ready to have earnings, or oh and oh and oh. We factor out all the O's, okay? We've done all the research over time. We believe we have a system that has a positive edge to it. So we don't worry about all that news and noise that gets put in our face each and every day. Now, speaking of each and every day, scanning for signals every day has resulted in high trade frequency, which is something I've heard over my 14 years that traders want. And as I showed you, they want large profit potential. Now, how to get the most bang for your buck while managing your risk? These 3-day until expiration options allows us to get a lot of leverage for a small investment. Now, I've told you this fact a couple times already. Here it is again. The average contract price over the last 12 months has been $4.27 a contract. So for about $500 a trade, you can be a subscriber. Now, trades are going to be exited after 2 days at 3:40 if they've not been closed before then. As I shared with you earlier, this avoids being affected by the final day of volatility. What does this mean right here? If they've not been closed before then. Does anybody remember what the profit target objective is that we look for? It's 100%. What stop level are we using? 50. That's what all that means. Okay, I have an example of a trade alert for you here later in the presentation, but we will get you in and we will give you the parameters of the trade. And if those parameters aren't reached by the end of that second trading day, then we will send you an alert closing it down via what we call the time stop. So why should you care about this strategy? Here's a look at the overall performance. Now, the strategy was started in January of 2023, okay? And as of this morning, if you'd have started back then with a $5,000 account, allocating $1,000 to every trade, all wins, all losses, total them up, you'd be up $22,589 before any commission or subscription investment. And as you can see over here on the left, folks, that's a 451% return trading one security and no compounding. Simple math. Take all the losses, total them up, take all the wins, total them up, do the math, $22,589. And as we have to tell you, past performance doesn't guarantee future results. Here's a way to look at that visually. 5,000 is now $27,589. Same $1,000 a trade, no commission, no subscription investment. And once again, past performance doesn't guarantee future results. So we look for a specific setup in step number 2. Each day is going to fall into one of 8 categories, okay? Each trading day, one of 8 categories. 3 of those categories are tradable patterns. I told you that earlier on that strategy guideline sheet. We look for the percent R, again, that stands for percent range, to be within certain windows. So remember, I told you that. Remember the 60 and the 40 level with the percent R? And then we confirm those setups with candlestick patterns, all right? Now, we use the historical profit factor to determine which days were the best for long trades via calls, short trades via puts, or neither. Now, I talked about ample trade frequency. We're traders, right? We like action. But if I've learned anything over my almost 40 years of trading, some days the best trade is no trade at all. We're not going to force trades out just to get trades out, all right? So as I've told you a few times now, we're very systematic here. Now, what does historical profit factor mean? It means that the QQQ security, trading the way that we trade it, has a positive edge over time. It does not mean that every trade's going to be a winner, all right? It just means there is a positive edge to what we've done. Now, here are some more winning trade examples. Again, all daily charts. July 2nd, we get in. This is percent R down here if you just joined me. Okay, percent R, percent range. You look over here to the far right. We're up above this 60 level. We have a nice long green candle. We get in, we get out the next day, making our 100%. That trade made $814 if you'd allocated up to $1,000 to that trade before any commission or subscription investment. Here's a trade on August 6th, got in, very similar setup, percent R above 60, long green candle, got a nice gap up the next day, making 100%. Trade generated $936 in gross profit. Here's a trade, September 18th. Yup, we got in even after a gap up. You see percent R up here, well above 60, right? We're in, we're out. 2 days later, making 100.33%, $909. Now, you'll notice the dates here on the calendar. If you noticed on one of the slides that I shared earlier, we will get into trades on Friday afternoons. We will enter trades before holidays. I've interacted with some traders over the years. Oh, I don't hold over holidays. I don't hold over weekends. Again, we've done the testing. We believe there's an edge to the system. We don't buy into all of that superstition and myths, as we call them, that you shouldn't hold things over the weekend. Okay, we will do that. Now, here's a trade that got past our target for a winner that was a little larger than expected. So we got in at the end of September. Again, you see we're well above 60 here on the percent R. We've got our green candle that we like. We enter, and then it gapped up, and look at that. We made 143.66%. That trade generated $1,293 in gross profit before any commission or subscription investment. Now, I've told you this a few times already. I'm proud of it. I've been here over 14 years. I love interacting with our clients and getting to know them. I have several testimonials to share with you today. These are all unpaid, unsolicited testimonials, but the clients have given us their permission to use their testimonials in our marketing and presentations like we're doing today. Needless to say, I'm blown away by the last Q's trade. Trades like this really take the pressure off, and I can just relax for the rest of the day. I'm still smiling about the Q's trade we closed this morning, Phil S. Again, unpaid, unsolicited. Now, as I've told you, we're trading a single ticker, but frequency has not been an issue. Here are examples of back-to-back winners that were taken in October. Now, here's a trade entered on a Thursday, okay? On a Thursday, we got percent R above 60 down here. If you just joined, this is percent R, stands for percent range. These are daily charts, okay? We get in on this green candle. That Friday, we get out, we make 100%. So notice that is a Friday, the 24th. That trade generated $754 in gross profit, okay? And as I pointed out earlier, we're very specific in telling our clients what to trade. We're not just saying, hey, buy some calls on the Qs, all right? We're very specific. We give detailed trade instructions. Again, I have an example of a trade alert here in a few minutes. Now, that was the in on the 23rd, out on the 24th. Now, did we take the rest of that Friday off? No, we sure didn't, because that Friday afternoon, even after this gap up, okay, we get in on a Friday afternoon, hold it over the weekend, and walk in on Monday and make 100%, $696 in gross profit on that trade. Again, you see percent R still well above 60. We get the green candle that we like, and we enter that trade. Now, listen, as I told you when I showed you the performance stats earlier, not every trade is going to be a winner. So here's an example of a losing trade. Entered on the 28th. Got the setup that we like. I've been teaching you. Percent R, well above 60. Green candle, enter. And 2 days later, it rolled over and we lost 54.07%. Again, not every trade is going to be a winning trade. So when you sign up, don't put half or all of your account in the very first trade that we send to you. Okay? Be very prudent. Always do with what's best in your financial situation. Now listen, not all winning trades are going to hit 100%. Okay? And all losing trades are not going to hit 50%. As I taught you earlier, we will get you out of a trade if it hasn't hit the 50% stop or the 100% target by the end of the second trading day. And that's a rule, as you can see there, that we call a time stop. Let me share some examples with you. We get the setup that we like, percent R above 60, green candle, we enter about what, 2 months ago now on this trade, and we close it out 2 trading days later. It made 71.08% via the time stop. This trade generated $708. So remember, the new trades come out between 3:40 and 4 o'clock, 3:40 and 4 o'clock Eastern time. And then we'll close it down 2 trading days later at 3:40 if it hasn't hit the 100% profit target or the 50% stop. Here's another time stop for you on December 19th. Again, you see percent R above 60, green candle. 2 days later, we close it down for 71.71% via the time stop right before Christmas. The trade made $588 in gross profit. Here's one more for you. December 23rd, got in. Yep, we held it over the shortened session on the 24th. The market was closed for the Christmas holiday on the 25th, and we get out on the 26th. Now, granted, it was only 13.18%. Trade made $106. Listen, as I told you, not all trades are going to be winners. Not all trades are going to be 100% winners. Not all trades are going to be 50% losses. This is reality trading. We will help you navigate the system. Now, as I told you, love hearing from our clients. Here's another testimonial. Again, Price is the name of our founder and CEO, Price Headley. Joan sent this to Price. Just wanted to thank you for your QOP, that stands for QQQ Options Playbook. That's the name of the newsletter. Trade setups. I'm finally growing my small account after many years of failure and stalemate. Although I'm not courageous enough to stay in for 100%, 85% and 90% have been great for my account. I'm so encouraged now. Thanks, Joan F. Remember, the system started in January of 2023, and through this morning, if you'd have started with a $5,000 account, allocating $1,000 a trade, you'd be up $22,589 in gross profit. As I pointed out earlier, that's 451% return trading one security. And once again, that's no compounding. That's taking all wins and all losses and total them up, right? And as I have to tell you, past performance doesn't guarantee future results. Now, I've got a few people asking, like, what type of deltas are we using? How far in the money you're going? All of that stuff. Those are great questions, but I'm not going to reveal all of that to you today because that's part of the secret sauce, right? Just like McDonald's isn't going to give you the recipe to, you know, all of everything that they do, or maybe Chick-fil-A or one of your favorite restaurants, okay? But as I've told you, and you've been with me for the entirety of the presentation, I told you you're going to get access to some resources when you subscribe today. One of those is called the Settings and Rules Sheet, and it's going to tell you exactly how our team does the option selection process. You'll get that as part of your package today. QQQ Options Playbook, again, is the name of the trading system in the newsletter, and it's been finding an average of 8 new options trades per month. So not a trade every day, right? As I taught you earlier, there's 3 setups that we look for out of 8, and some days there's no trading action. Now, here's another example for you. In November, look at all of this down action, and we stepped in and bought calls, okay, right here. In the very next bar, our clients were rewarded, making 119.17%, $982 in gross profit. Here's a trade for you in November, even after a long down move, right? And what I want you to notice about this, a lot of the trades that I've shared with you today, percent R has been where? Percent R has been above 60. Well, here's an example of where we will buy calls when percent R is below, if you look over here to the far right, below 40. And if you notice, this is a red candle. It's a red candle. That is our setup candle, okay? And then 2 bars later, made 100.48%, $824. Now, please understand, we're not trying to call absolute bottoms. We're not trying to call absolute tops, right? We're trying to call quick swing trades on the QQQ security. Here's a trade for you just a couple weeks ago on calls. Now we have the percent R above 60. It is a green candle here on this setup candle. Next bar is a loss. As I told you, not every trade's going to be a winner. Not every trade's going to be a 50% loss, but losses are going to happen. I don't want you to subscribe today and expect perfection. That's why I talk to you about being prudent and diligent in your capital allocation toward each trade, okay? This is a marathon, not a sprint. We want you to stay and trade with us. Now, here's a trade we got in on January 20th on that Tuesday. Yep, we bought calls even after this big drop here. Here's an example again of a red candle, and you see percent R there below 40. We get in. Next bar, we get out. On Wednesday for 100%, trade generated $900. Remember, all trades today are based on a $1,000 allocation before any commission or subscription investment, and past performance doesn't guarantee future results. Future results are going to vary. Now, trading these 3-day until expiration options can be seen as aggressive, but with our unique trade management, it has been extremely successful. Let me show you how it's performed once again. Started in January of 2023, and remember, we're trading one security and one security only using calls and puts. $22,589, all trades, all wins, losses, time stops, all of it. No compounding, up 451% on a $5,000 account, allocating $1,000 a trade before any commission or subscription and investment. And of course, past performance doesn't guarantee future results. Now, I'm going to show you how you can get real-time trade alerts when this strategy finds a trade. Now, this is only available to the first 34 traders, and the way Anthony and his team do it, every one of these events, so impressed by what Anthony and his team do. There is well more than 34 people in the room today. So thank you, Anthony, for inviting us again to be able to present to you and your community. But we had to limit the number of spots, and today it's 34. So again, the name of the newsletter is QQQ Options Playbook, and as I told you here at Big Trends, we call them alert services. So we want you to get started with a 3-month subscription. As I told you, you get resources when you subscribe. Once again, the name of our founder and CEO is Price Heedley. He does weekly video updates for you. You're going to get the settings and rule sheet access. You've heard me reference this a few times. It's a 2-page PDF. It is a condensed version of a strategy session that Price has recorded for you. It's a digital on-demand video. You'll have access to it. It is a deep dive in the hows, whys, and whats of why our team created this trading system. And you may be saying to yourself, Chris, what if I have questions? I don't want to be out here being a subscriber and be confused or maybe frustrated and not knowing what's going on. No worries, folks. Again, we've been around for 26 years. We give you a dedicated email address that goes directly to Price and his analyst team. All of that information is revealed to you in the welcome email that we'll send to you today when you subscribe, along with the purchase receipt email. Now, the total package value is $891. That's based off a monthly list price of $297. But as I said, Anthony and his team have been so gracious to invite us to be here today. So we have created a special package for them and their community and ultimately for you all. So what is it? It's 3 months of trade alerts from our QQQ options playbook. As I shared with you, total package value, $891. Again, it's only available for the first 34 traders. How about $171? And folks, that's not per month. That's for all 3 months. One-time investment for $177. You get 3 months of trade alerts. You get 3 months of access to the trading resources. How do you take advantage of it? Well, you go to members.bigtrends.com/corner, okay? Because you're at a Traders Corner event, members.bigtrends.com/corner, and I'm going to take you to that checkout cart. Here we go. Very simple, very easy, and most importantly, very secure. Billing information up here at the top left. First name, last name, email. In that email field, take your time. I know you're excited, want to get signed up. Take your time, type it in correctly. I would like to respectfully request that we get your trading email address. Chris, what do you mean by trading email address? Well, I've heard from clients over the years, hey, I get 50, 100, 150 emails a day. And I say to them, hey, Mary, hey, Bob, why don't you create a separate email address just for your trade alerts? I want your trading email address, okay? Put your trading email address in there. And if you don't have one, I would, ask you to consider that. Consider that. That way you filter out all the noise. You're not missing trades. You simplify your trading life. Get a trading email address. Use the other email address for all the stuff you sign up when you go shopping and when you're online doing other things and all that. But when you're serious and focused about your trading, have an email address for your trading. Contact information, we put that in the chat question box there for you. Like I said, the office is closed today. We will be back in on Monday at 9 a.m. But it's up at the checkout card up there at the top. It's at the bottom. I'll show you that here in a second. You do see that we accept the 4 major credit cards, Visa, MasterCard, Amex, Discover. Just below that, down there at the bottom, you see in that yellow gold rectangle, we accept PayPal. So 5 ways for you to sign up. And guess what, folks? Does not automatically renew, okay? Does not automatically renew, and it's $177 for 3 months. Not $177 per month, $177 for all 3 months, no automatic renewal. So what'll happen? 3 days prior to your expiration, our team will send you an email presenting you with an opportunity to renew. If you miss it, you ignore it, no worries. Your subscription will simply expire in 3 days. I think you'll be upset that you let it go, but that, I'm biased, right? I work here. But you've got to do with what's best in your financial situation. Terms and conditions are listed twice, once there, down here. And as I mentioned, the contact information is listed down here at the bottom as well. It's 1-800-BIG-TRENDS, 1-800-244-8736, or email clientcare@bigtrends.com. And as it says down here just below, we're here to help. Folks, we've been around for over 26 years. I was a trader just like you, early client of Price's. As I told you, I had the opportunity to join him and his team over 14 years ago. Why did I share that? Because I'm proud about what we do, right? Our longevity. I mean, how many businesses are you interacting with on a weekly basis that have been around for 26 years? I don't care what industry they're in. How many businesses are you doing business with? We have in the options trading industry. Members is plural and Big Trends is plural. So members.bigtrends.com/corner. Remember, first 34 traders. Maybe we got some FAQ here. What type of strategy is used? Buying calls or puts? How are you going to receive those trade alerts? Real time via email. You heard me talking about that, okay? WhatsApp is also available. What is it? It is our solution that we've been using for over 2 years now to send out trade alerts in a different format other than email. You will always get email. That's why I stress the importance of getting that email address right in the checkout cart. Always email. Do you have to use WhatsApp? You do not. But we do not text. The cellular industry thinks they know what's best for your cell phone, and they said, hey, you can't send out trade alerts anymore. We're like, all right, so goodbye. and we did partnership with WhatsApp. Again, it's free, it's fast, and it's easy to set up. You can put it on your computer, your laptop, your tablet, your mobile device, or all of the above. We give you setup instructions in 2 locations. In that welcome email you've heard me reference, you can also find it when you sign up in your Big Trends account under the My Account section. But let me stress, you do not have to use WhatsApp to be a subscriber. You can simply sit back and get the trades via email. Maybe after the first week or 2, you change your mind and you want to get set up for WhatsApp. Go to your Big Trends account under the My Account section, sign up, or reach out to our team. Someone will be glad to assist you. When are the trade alerts sent? Between 3:40 and 4 o'clock Eastern time. Remember, these options trade until 4:15. When are trades closed using the time stop? 2 days later at 3:40 p.m. Eastern time. How many trades per month does it average? 8 trades per month. Day trades, I know that's a concern for some people. No day trades in our QQQ options playbook. As I've taught you throughout the presentation, the average recommendation, $4.27 per contract over the last 12 months. Resources, remember, you get these 4 resources. And I want to stress this too. You don't have to use the resources at all. You don't. You can just sit back and get the trades. But if you're curious, you want to know, you want to learn, we're there to support you, okay? When Price started the business over 26 years ago, he wanted to educate traders. That's why we provide those resources. But I understand you're busy. You may not care about how we do it. You just want the trades. That's fine. We'll get the trades to you. But we do have the resources available if you want to use them. Here's a reminder of what just one trade has been able to accomplish. The trade that we got in a week ago Friday on the 23rd. Yep, we held it over the weekend, got out on Tuesday for 100%. Trade generated $882. Now, granted, that's traded off $1,000 allocation. Let's just say you did one contract, right? Because I told you the average recommendation has been 427. Here's 441. So let's just say you traded a 1 lot. Cut that in half. One trade could cover your 3-month subscription, even trading a 1 lot. Now, why did we get into this trade? If you just joined me, this is the %R, percent range indicator. There's the 60 threshold, there's the 40. 2 key levels in using this indicator. We've got %R above 60, and we've got our green candle here on our setup candle. That's why we entered that trade. Now, as I told you earlier, I have an example of the trade alerts. So what do they look like? 3:55 came out on that Friday. Buy to open. It's trader lingo. What does it mean? It just means you're starting in a new position. Let's just say we're at a party together, picnic, party, whatever. And I hand you your favorite beverage and it's closed. You got to open it to enjoy it, whether it's water, soda, or maybe an adult beverage. You got to open it to enjoy it. Same thing with the trades. You got to open it to try to make some money. So buy to open. Always trading the cues. We're not trading anything else. It's all we're trading. Super focused. We tell you exactly the expiration. Look at that. January 28th. We even give you the date and the month. We tell you the strike and we tell you the direction. Now, I told you earlier some folks were asking about deltas and how far in the money do we go and all that stuff. Here's what I'm going to tell you about this. Our team uses an indicator, and this is the first time I'm sharing this with you today. So if you stuck around, thank you for sticking around. Our team uses an indicator called average true range, ATR. And they use a particular setting for ATR that you get on the settings and rule sheet and a multiple of that ATR to do the option selection process. So MGM, John, there's your answers. That's how we do it. Now, we tell you exactly what to pay for that trade. And we also remind you that they trade until 4:15. You're welcome, MGM. Okay, trade until 4:15. Now, I told you that was a Friday afternoon. We didn't freak out. As I told you, we don't worry about any of that stuff. Monday morning, 9:06. Market opens at 9:30 Eastern time. So before the market opens, we tell you the stop, we tell you the target. We also tell you to work these trades good till canceled. That just means you operate under these two parameters unless you hear differently from us. So yes, you have to monitor the trade. You have to see if it hits 220, you get out. You have to see if it hits 882, get out. We're not going to send an alert saying, hey, it hit 220, get out. Hey, it hit 882, get out. We give you the information, you've got to act on it. Now, one of the tools that I use, especially during the trading week, obviously, I use a tool called an OCO. It stands for one cancels the other. OCO. You can have both of these orders working at the same time. So you can go work your full-time job. You can go to the golf course, the pickleball court, take care of the grandkids, maybe take care of a loved one. Do you have to use OCOs? You don't, but they're a great tool, especially if you don't have time to screen watch. Okay. And then if the OCO's not hit by the end of the second trading day, you know we're going to send you out a what? A time stop alert telling you, hey, those parameters haven't been hit. Just a little reminder, shut this thing down because it's the end of day 2. So we get you in, we get you out. Another testimonial. Hi, Chris. You guys, girls have become life-changing for me. You're doing awesome. It's been a spectacular 2 months. Thanks for the great trades, Ed D. Now listen, as I told you, these testimonials that I've shared with you today, unpaid, unsolicited, but permission granted from the clients to use them in presentations just like today. Love, love, love hearing from our clients over the years. Now, as a reminder, this strategy was started in January of 2023 through this morning. $5,000 account, as you can see, is now worth $27,589. That's based off allocating $1,000 a trade before any commission or subscription investment. And as we have to tell you, and as you've seen through the slides today, past performance doesn't guarantee future results. We have to tell you that, okay? Now, as I told you, I have a special package for you today. What is it? It's 3 months of trade alerts from our QQQ options playbook. Total package value, $891 for the first 34 traders. Now, I can't see my inbox. I can't see our order form, but I'm going to take a guess. There's less than 34 spots. And as I told you, there's more than 34 of you in the room. And again, thanks to Anthony and his team for inviting us. And thank you all again for showing up to hear me speak today. Special package for you all for taking your Saturday and sharing it with us. $177 for 3 months. That's not per month. That's for all 3 months. members.bigtrends.com/corner. Okay. No www needed. It's simply members. It's plural. Big Trends. It's plural, right? So members.bigtrends.com/corner. Okay. I'm going to take you to that checkout cart. Now, what I want you to notice, and if you've been with me, you're going to see this email field highlighted in red. As you can tell, I'm passionate about it. Maybe a little OCD about it. Why? We can't tell you how many times over the years I've heard people, I put in my wrong email address, or I typed it wrong. I never got my purchase receipt or my welcome email. And maybe they type in .con instead of .com, or maybe they left the @ sign out when they're typing out their email address. Folks, take your time, get it right. But once again, put in your trading email address. We're going to send you 2 emails today, purchase receipt and a welcome email. And in that welcome email, it's going to list all of those resources, weekly video, settings and rules, strategy session, the dedicated email address, okay? It's all going to be available for you. And if you sign up today, I know there's more speakers coming after you finish listening to all the speakers today. But when you sign up today, you can log into your Big Trends account this weekend. You can watch that strategy session. You can watch the weekly video updates. You can study that settings and rule sheet, and you can be ready for Monday's trading action, right? You could, I'm not guaranteeing, but you could get your first trade on Monday afternoon. Now, again, no guarantees, but the only way you know if anything's going to happen is if you sign up today and you're one of the first 34 traders. members.bigtrends.com/corner. All right, Anthony, I think I'm right or close to my time here. Hey, Luis, good to see you. Win-loss ratio, month of January, it's just over 50%, Luis, in the month of January. Historically, Historically, Luis, it's just sub 50%. And before everybody shuts down and goes, oh, I'm not subscribing to a newsletter that has a win rate less than 50%, do the math, folks. If you're risking 1 to make 2, okay, do the math. You can make money with a win rate less than 50%. All right? Your numbers, people, you get it. Do the math. But in the month of January, it's been over 50%. Okay? Past performance is no guarantee of future results. Even if we're talking about into inception, we're talking about the month of January. But as I taught you all earlier, the system's been around since January of 2023. We believe we have a positive edge, right? But I have to tell you, past performance is no guarantee of future results. Members.bigtrends.com/corner. Get your 3-month subscription for $177. John is asking, what's the renewal price? $177. John, others that are listening, don't tell my boss when I said this. Yeah, I'll guarantee that you can renew for $177. It won't automatically renew. So if it gets 3 days prior to your expiration and our team sends you something maybe a little bit higher than that, like the 891, John, say, hey, Chris said in that presentation that I could renew for $177. I got your back, John. And anybody else that wants to sign up and you want to renew in 3 months, just said, hey, Chris told me on that Saturday that I could renew. You're welcome, John. Thank you. It's a great question. Hey, I'm a little bit, I'll just say it, a little bit arrogant. I've been here for 14 years. Mr. Headley, Price Headley, our founder and CEO, gives me a little leeway sometimes. I'm stepping out on the ledge, if you will, and saying, yeah, we'll renew you for $177 if you want to renew. I think you'll want to go longer term than that, John, after being in for 3 months, but give us a try. And you can do that today. Members.bigtrends.com/corner, 3 months for $177. Anthony, am I on time?
Oh, you're on time and you're doing great. Thank you.
All right. I think that's all the questions, isn't it?
Yeah, that's all the questions I saw.
All right. Anything you need from me before I let you and your team keep rolling? And man, thank you again for inviting us on this Saturday. What an impressive crowd you guys have.
Yeah, I think we have the most committed people after these last few weeks. So,
yeah, that's awesome.
Yeah.
That's awesome. All right. Well, hey, man, thanks again. Have a rest of your great weekend. Same to you folks out there. If you're out there, please be safe. I know we got some crazy weather patterns going around the states and stuff like that, but be safe. And Anthony, we look forward to you having us back again real soon.
Thank you, Chris. Really appreciate it.
Thank you.
Chris, thank you for that clear and structured breakdown of your QQQ option strategy. We appreciate the valuable insights you shared along with your special offer for attendees. So be sure to check that out, people. Go to bigtrends.com and check it out. Everyone, Chris's offer link is now posted in the chat as well. It's posted like 3 different times. So I was trying to get the correct hyperlink so you could go directly to it. Next, we're joined by Jeff Tompkins of Altos Trading. Jeff is an award-winning hedge fund manager and serves as chief investment strategist at Altos Trading. His presentation is titled How to Forecast Market Direction Up to 3 days in Advance. Sounds great to me. Jeff will show how traders can use a simple indicator to forecast market direction across stocks, ETFs, futures, Forex, and crypto. So everyone, please welcome Jeff.
Thanks so much, Anthony. Great to be here.
Thanks, Jeff. I got to make you presenters still. Apologies.
Yes, no problem.
How are you doing today?
Doing well. Yeah,
Good,
great to be here as always.
Yeah. I'll make you organizer as well so you can see the questions. Thank you.
Assuming I'm good to go, and hopefully everybody can hear me. But okay, great. All right. Well, I'll go ahead and dive in. So once again, great to have everybody here today. As Anthony mentioned, I'm going to discuss how to forecast market direction up to 3 days in advance using my proprietary slingshot strategy. So let's go ahead and dive in. Before we do, I'll just cover a quick risk disclosure and disclaimer. Trading securities and options involves risk. Prior to buying or selling an option, an investor must receive a copy of characteristics and risks of standardized options, and of course need a broker to trade securities and options and must meet suitability requirements. We're going to be going over some various results on our session today, and I'll be actually sharing real money results out of my personal trading account. But just know that anything I do share, due to the time critical nature of trading, brokerage fees, activity of other traders, I don't guarantee anyone will mirror that performance. All right, so we're going to start out discussing some of the difficulties that we face in trading and investing, and why is the market so difficult to trade? Well, there are of course a variety of reasons, but a lot of it can really be boiled down to psychology. And so I'm going to quickly walk you through this psychological curve as it relates to the financial markets, and kind of discuss what often occurs here when we place trades, and then how to overcome this. So anytime we get into a trade or an investment, we obviously start out with some degree of optimism, maybe even enthusiasm, exuberance, euphoria, right? Otherwise, we wouldn't be getting into the trade. But for any of you who have traded for a period of time, know that markets can change, right? They can throw us a curveball, and that optimism and enthusiasm can quickly transition to anxiety, denial, fear, even despair. And this is where we get panic selling in the markets, right? And eventually that subsides and even transitions back into renewed hope, relief, and optimism. And this cycle just kind of repeats itself. But the key thing I want to point out here is that often when we're getting into, for instance, bullish trades, it's often at a point in the market when there's a high level of financial risk. And this is where we tend to get greedy, right? And then when there's panic selling, this can actually be the best opportunities to get into the market and to place directional trades. And that's when other people are fearful. So we're going to talk just briefly about the psychology of failure and how the slingshot methodology is going to overcome this. Okay, so anytime we enter a directional trade, our goal is to buy low and sell high, but unfortunately that goes against our human instinct. So instead, when the security's gone down, we tend to sell it, and then when it's already gone up, we tend to buy it. We then panic when price falls because we're afraid of losing money, and then we buy when it's rising because we're afraid of missing out. But then to compound that problem, we're wired to repeatedly make this same mistake. So we buy high and sell low because that's what our emotions tell us to do. So without a solid trading plan, we're vulnerable to our emotions, of course. And in addition to that, if you lack a strategy that can identify momentum shifts or trend changes, meaning that you don't know when to get in or buy low and get out and sell high, this can pose a major problem for us, right? And we all are vulnerable to this. So what we're going to do on the session today, using the slingshot strategies, we're going to turn the tables, okay? So instead of being greedy when there's a high level of financial risk, or fearful when other people are panic selling, and it might actually be the best time to invest, we're going to completely flip this around and use a contrarian approach. And it's at its core largely why world famous investors like Warren Buffett and Carl Icahn and George Soros have been so successful over such a long period of time. And it's that old Warren Buffett adage, be fearful when others are greedy. So this is the contrarian approach that's kind of embedded in and built into the slingshot methodology. So what I'm going to give you today on the session to make this easier is, number one, you're going to discover the slingshot setup that's worked 100% of the time. Now that's a bold claim. I'll show you evidence of it, but if you apply this setup to the major indices, the S&P, the NASDAQ, going all the way back to the dawn of the stock market, you're going to find that this plays out every single time. Okay, and there's not much in terms of inevitabilities in the market, right? But this is one of them, and we'll take a look at that. So I'm going to show you how to identify the setup, how to trade the setup, how to profit from the setup, how to get in near the bottom and out near the top. Now, of course, we're not going to be able to precisely pick the exact bottom or top of a trend or a trend reversal, but we can get remarkably close. Okay, how to apply this setup to any market in any time frame. So what I'll demonstrate today can really, the methodology behind it is universally applicable. So it can be applied to any asset, any time frame, but we'll look at some different asset classes and whatnot. So I'm also going to give you a really powerful trick to help eliminate a lot of your losing trades, okay? So we can't eliminate all of them, right? We're always going to have losing trades. That's our overhead in the trading business. Obviously, like any other business, we want to minimize our overhead, maximize our revenue. And so this can help us do that. It can help keep us out of bad trades. Okay, we're going to look at some trade examples and then stick with me to the end and show you how you can copy my success and get the trade signals I use to make a living in the markets. And I'll give you a little background on myself here momentarily. But first, imagine if you could buy low and sell high without using any guesswork. So all too often we use some degree of guesswork or intuition in our trading decisions, right? And we want to eliminate that as much as possible, because as we just looked at on the psychological curve, right? It can create challenges for us. Now, there's actually a volatility study that's made this possible since the beginning of the markets. And it's a unique setup I call the slingshot that's allowed traders to buy low and sell high with 100% accuracy. So once you learn the rule of this setup, you're going to know with a high level of confidence when markets are vulnerable to selling off, right? And when they're likely to rebound. Okay, and if you apply this to the major indices, the NASDAQ, right, the S&Ps, you're going to see that this plays out with certainty, right? It is never failed going back to the dawn of the stock market. So here's where there's one of the most powerful components of the slingshot is that it warns us of potential market sell-offs. And that alone is worth its weight in gold, because as I'm going through this, just keep that psychological curve in the back of your mind. Right, this is a big challenge that we face when we're in, long positions. For instance, there's the fear component, right? What if a black swan event comes along? What if we go into a full-on bear market? So you're constantly guessing about what might happen, and then it injects all this fear and causes you to make irrational decisions. Okay, but if you can eliminate that and know with a high degree of certainty when markets are vulnerable to a sell-off, that alone changes everything. Now, we're gonna use what I call volatility bands. And so once these bands of the market can't be stretched any further, they have to bounce back, right? We wouldn't have the market structure that we do if this didn't play out. And this rubber band effect makes it possible to accurately identify tops and bottoms in the market. Again, we can't get exactly, the exact top and bottom, but we can get remarkably close. So we're gonna start looking at some charts, and I'm gonna walk you through how to understand this and navigate it, and then ultimately trade it if you decide to do so. So this is a past chart of the S&P 500 index, okay, the SPX, and I'm going to be selecting some of the worst market conditions that we've experienced, okay? So this is back from early 2020 during the COVID crash. All right, and I'm just going to, for now, walk you through kind of what's going on here. And as I'm doing this, keep that psychological curve in your mind, right? So at this point in time, we're kind of at the tail end of this decade-long secular bull market. S&Ps are putting in new all-time highs. Okay, we have what going on amongst the investing crowd? We have FOMO mentality. People are uncertain about how much higher the market can go, but there's also considerable downside risk, right? So when people are afraid of missing out, they make an emotional decision and they start buying into the market. Okay, but again, thinking of that psychological curve, this is when there's a high level of financial risk. Okay, so a lot of downside potential if a catalyst comes along to derail the bull market. So think of this from a contrarian perspective. This is where we actually want to look at selling. So if we have open long positions, we might want to look at taking profits on those or protecting them with hedges. Okay, this is when most other traders are going to be buying into the market. So most of the retail crowd is going to be buying in at this point. Now, we all know what happened, right? There's this dramatic sell-off over the course of a few weeks. S&P's down over 30%. Okay, panic selling ensuing, but it creates opportunity. Okay, and we'll talk a little bit more about the catalyst, but the incredible thing is at this point in time, the catalyst that caused this, there was no resolution. Right, it would unfortunately go on to get much worse, but we didn't have viable treatment options, vaccines, all these things, and yet the market recovered very quickly, much more quickly than the catalyst that caused it. Okay, so this creates opportunity. This is where most other traders are selling. We have panic selling going on, but this is where we want to look at buying. Okay, and so this is where your Warren Buffetts, your George Soroses, your Carl Icahns are coming in and taking advantage of the panic selling and buying. Okay. Now we get this incredible run up over April, May, June, and look where we end up. We're right back up to where that sell-off initially ensued. Okay. Now this is where most of the retail crowd is going to be catching on and starting to buy back into markets. Okay. But the smart, quote unquote, smart money bought in back in March. Okay. So you're going to know how to do this, how to navigate this. Okay. When is the market vulnerable to a sell-off? When is it likely to rebound? And where should I take profits? Okay, and I'm just going to point something out real quick. Notice how in June, when S&Ps were back up near that initial sell-off level around that 3,200 handle, right? We get a little bit of a pullback and then some sideways consolidation. Keep that in mind because I'm going to elaborate on that. Okay, so before we go no further, I'll just give you a quick background on myself. Again, I'm Jeff Tompkins, and I have over 2 decades of experience trading the stock options and futures markets. I received my professional training as an intern at the trade desk at Morgan Stanley back in the early 2000s. And 10 years ago, I founded Altos Trading, where I currently serve as the chief investment strategist. We've rapidly grown to over 60,000 members in over 100 countries across the globe. I'm also a hedge fund manager, so I manage money for my clients at Altos Capital. The slingshot methodology is one of my core strategies that I use inside my hedge fund. And I'm also the founder and creator of the Trade Trend Signal software, which we're going to be looking at on the session today as well. So by the end of our session, you're going to discover one trade setup that has never failed going back to the beginning of the stock market. It's so reliable, it's worked 100% of the time on the major indices. It hasn't failed once, okay? That includes the recent tariff crash, the 2022 bear market. It happens repeatedly with astounding predictability, so you just need to know how to identify it, okay? So whether you're just starting out or you're a seasoned veteran, this is must-have information for today's markets. So we're gonna talk a little bit about volatility now. Why volatility is one of the only leading indicators of market direction. How to identify when markets may be vulnerable to a sell-off. Okay, that alone can completely turn your trading around because it largely eliminates that fear component that we all have when we're placing trades. How to identify when the market is likely to go up. How do I determine exactly how far the market is likely to go up? Okay, this is all embedded into the slingshot. And then how to get your hands on a tool that will change your trading forever. And that's another bold claim, I realize, but it's one I make from personal experience, right? This is something that's changed my trading forever. I've gone through all the trials and tribulations, all the struggles, blowing up accounts. I've done all that, okay? And ultimately this helped me get past that. All right, so let's dive into the slingshot. Why do I call it the slingshot strategy? Well, as you pull the slingshot back, right, muscle energy is transferred to elastic energy in the bands of the slingshot. After the slingshot's released, the elastic energy is transferred to the stone as energy of motion. So it's what's referred to in physics as kinetic energy, right? And there's that energy creates that continuation, right? And so we can kind of apply this principle to the financial markets in the form of supply and demand, right? So when you have demand, right, there's buying pressure, like we looked at on that chart during the COVID crash. There's all this panic selling, but it creates opportunity and demand. The smart money comes in, buys in at lower prices, and then drives the market back up. And I can assure you that wasn't retail volume driving that price action, right? We'll come back to that chart and break that down a little more with the slingshot. But first of all, I want you to know that once the band becomes overstretched, it's going to give us a buy signal, and then we can enter the market with high confidence that prices will go up to the initial resting point of the band. Okay, and we'll visualize this on some chart examples here momentarily. So I'm just kind of laying the groundwork here. But I want to dive a little bit deeper into volatility because this is going to be important. Now, there are different types of volatility. Okay, there's mainly historical volatility and implied volatility. So obviously, as the name suggests, right, one looking back at what the volatility was in the past, and implied volatility being more forward-looking. Okay, so we're concerned about current volatility and forward volatility or implied volatility. And that's actually a predictive indicator. Okay, there aren't a lot of predictive indicators out there. Most stuff is lagging. It's looking at what happened in the past. Okay, that's an easy trap to fall into. We've all done it, right? You get an indicator, you look back on the chart, it looks incredible. You go to use it in the live markets and it fails miserably. Okay, so we want to eliminate that as much as we can. Now, once these volatility bands stretch to a certain degree, they have to bounce back, as I mentioned. Okay, but they're basically going to tell us when prices move too far from the mean or the average and is likely to reverse direction. All right, and we're going to do that with an indicator called the Bollinger Bands. Now, it's a popular indicator. It's available on virtually any retail broker or charting platform, but they're like any other indicator, a multitude of ways to use it. Okay, we're going to use it in a very unique and specific way that can help us pinpoint turning points in a security with astounding accuracy. Okay, so for now, I just want you to visualize this. Okay, and I'll kind of walk you through what's happening here. So it doesn't matter what this stock is, right? It could be any stock. Let's call it ABC stock. ABC stock is starting to rotate lower, and it's breaching the lower band. And by the way, if you're not familiar with this indicator, I'll give you just a high-level overview of what it is in just a second. But I just want you to visualize we're breaching the lower band, okay? And then we get a sell-off in the asset, right? So this is where people that aren't short, right? They're long the stock, they're long ABC stock, are starting to sweat, right? They're panic selling. They're experiencing losses, okay? But ultimately, that supply-demand curve shifts, and buyers come in. and drive price right back up to the initial volatility expansion level. Okay, so this is what the slingshot looks like, and we're gonna break it down even more and then look at some other examples. I'll quickly give you just an explanation of the Bollinger Bands and why we're using these and how we're gonna use them. They consist of 3 lines on your chart, okay? So we just take a simple moving average of the securities price. That's gonna be the center line that you see there. And then we take the standard deviation of the securities price. Okay, now standard deviation is just a mathematical measurement of average variance. But the important thing is that it measures how spread out numbers are from an average value. We won't go into the calculations, and you don't need to know them because obviously the indicator does it for you. But here's the important thing. Because standard deviation is a measure of volatility, when the market becomes more volatile, the bands widen. And when the market is less volatile, the bands contract. So keep that in mind because that's an important component of the slingshot. Now, as far as the settings, most platforms will default to a 20-period SMA or simple moving average for your center line, and then a 2 standard deviation setting for the outer bands. I'll be referring to them as the outer or upper and lower bands. Okay, those are the settings that I use universally. I don't change them for time frame or asset, and they're likely going to default to that in your platform. Now, like I mentioned, as with any other indicator, there's a multitude of ways to use the indicator, right? You give it to 100 different traders, it's used 100 different ways. Some of the common ways that the Bollinger Bands are used is to buy at the bottom band and sell at the top band. Now, the problem with that approach is that price can hug the upper or lower band for extended periods of time, so it can trail the upper or lower band. So this approach can work in, sideways markets, tight consolidation, all those things, but then it fails miserably when you get a strong directional move. So for that reason, we're not going to use that approach. Another common one is band contraction and expansion. Now, this is important, and we are going to incorporate this into the slingshot because it can be a good indicator of an impending big move in the security. But the problem is we don't know in which direction the move will occur. Okay, so we're not going to use that as a standalone, but we will incorporate it into the slingshot. Now, another is to buy or sell at the middle band. We call this a mean reversion strategy. And it can work in strong trending markets, but then it fails in sideways ranging markets. And that's often what you find with strategies, right? It either works in a very specific market condition like a strong trending market, but then it fails in consolidation or vice versa, okay? So we're not gonna use that approach. What we are gonna use with the slingshot is it's a unique approach where we wait for the lower band to break, and I'll elaborate on what all this terminology means, but basically price is gonna hug the lower band and then ultimately rebound to where the breach initially occurred, okay? So this is the essence of the slingshot. And we'll look at it on some charts, but we're going to use the Bollinger Bands to accomplish this. And this is an indicator that has been around for many decades. It was developed by John Bollinger, as the name implies, and it was originally kind of developed as an overbought, oversold oscillator, but we're going to use it again in a slightly different way. Okay, so as I mentioned, price can exceed or hug a band envelope for prolonged periods during strong trends. Okay, so that could be a sell-off, it could be a market rally, but we're first going to be concerned with, is the market likely to sell off? So that's where we wait for the lower band to break and then wait for a buy signal. And then we exit when price returns to the breaking point. Okay, so we know when there's a higher risk of a downside move in the market. We're going to know when we should get back in on the long side, and then we'll know where we should take profits on those trades. Okay, and this slingshot occurs with astounding predictability. So if we look at the major market indices, the S&P, the NASDAQ, they've all returned to the initial volatility breakout level with 100% accuracy, going all the way back to the dawn of the stock market. That includes the tariff crash of 2025, the bear market of 2022, the flash crash of 2015, the flash crash of 2010, the crash following the 2008 mortgage crisis when markets lost over half their value in the second half of the year, the 2000 dot-com bubble, even the Corona crash, every black swan event, market correction, major crash, bear market, you name it, this is played out. Okay, so let's now apply the Bollinger Bands to the chart and walk through what's going on here. How are we going to identify this? How are we going to navigate it? And ultimately, how are we going to trade it? All right, so we're back on this chart of the S&P 500 from back in early 2020. Okay, we have the Bollinger Bands plotted. If we look at the left edge of the chart, so in the February time window, okay, what do we notice? And we want to always reference price to the indicator. So S&Ps are putting in new all-time highs, okay? And as I walk through this, think of the psychological curve we looked at the beginning of the session, okay? S&P's near all-time highs. Okay, they're bumping up against the upper band. Okay. What do traders have? FOMO mentality, right? How much higher is the market going to run? What am I going to miss out on? What's the downside risk? Okay. Well, as we all know what happened, right? So S&P start to rotate lower and they breach that lower band. Okay. This is where the slingshot starts to get pulled back. Now, there's a few critical components that have to line up here for this to qualify as a slingshot. Number one, we have to have previously been in vol contraction. How do I identify that? The bands are relatively narrow, the outer bands. They're parallel and horizontal, okay? So we're in low volatility market conditions. Okay, when we get the breach of the lower band, what's happening? You can see it, right? The outer bands are starting to diverge. Okay, so we need a simultaneous divergence of the outer bands when you get a breach of that lower band. Okay, that's your warning. There's a much higher probability of a sell-off in the asset. Okay, there it is. S&P's down over 30% in just a few weeks. It creates buying opportunity. Okay, buyers come in as other people are panic selling, drive the price right back up to that initial volatility expansion level. Okay, and I mentioned earlier, notice how when we get back up to that roughly 3,200 level, price stalls. Okay, and then it pulls back a little bit, and then it goes into consolidation. Okay, this is no accident. You'll see this all the time with the slingshot. Okay, this is likely profit taking from the traders that got in back in March near the bottom. Okay, so this is where we want to look at taking profits. This is where the slingshot's released. Let's look at some other chart examples. This is one of Apple. Okay, what do we see on the left half of the chart? Apple's in a strong uptrend. It's trailing the upper band. Okay, and by the way, this is a daily chart. Okay, but then it pulls back a little bit around the middle of the chart. Okay, it tests the lower band. Now, prior to that, the bands are running parallel to each other. Okay, we get a test of the lower band. Now, for any of you who are, candlestick pattern analysis traders, you would recognize these as two bullish reversal candlestick patterns, right? And remember that approach we talked about, buying at the bottom band, selling at the top band? Okay, so I would venture to guess a lot of people got trapped here, right? They thought, oh, I've got two bullish reversal candles off the lower band. This is probably just a normal downside retracement in the broader context of this uptrend, and it's going to resume back to the upside. But it didn't, right? And we would have known that likelihood because we had prior parallel bands. Okay, we have a test and breach of the lower band and a simultaneous divergence of the outer bands. That tells us there's a high likelihood of a rotation lower in the asset. There it is. Apple sells off into a key support level down around 168. That attracts buyers. Price comes right back up to the initial volatility expansion level. It then went on to make a more significant upside move. This is actually an extension of the slingshot that can also be traded. But notice how when it's back up around that 196 level, where that sell-off initially, gains steam, it stalls, right? And it goes into some sideways consolidation for about a week before it then continues to the upside, okay? Again, profit taking. All right, let's look at another chart example. This is the Qs from back in 2018. Okay, similar scenario to what we looked at on the S&Ps, right? We're hitting new all-time highs. Price is bumping up against the upper band. We're in low volatility conditions. We have narrow, horizontal, parallel outer bands. Okay, price comes down, tests the lower band. Okay, probably trapped a lot of people. We're trading at that point in time around 2 standard deviations away from the 20-day average. Okay, and then we get a breach of the lower band. And what happens simultaneously? The outer bands diverge. There's our slingshot. We want to, if we have open long positions, we want to take profits. We want to protect those maybe with hedges, or we can put on speculative bearish positions. There's the sell-off. And we actually had several embedded slingshots inside of this larger slingshot. Again, that's more of a complex component to the slingshot strategy. We're just going to lay down the basics for now. Okay, but it created buying opportunity. And what happens? Price comes right back up to that initial volatility expansion level. Okay, and then starts to pull back a little bit from there as well. Does this work on intraday timeframes? Yeah, it's the same principle. It's really all psychological. All right, so this is a 5-minute chart of AMD advanced micro devices. Okay, what do we see on the left half of the chart? Okay, the bands are parallel. we have consolidation or basically arranging price action, bouncing off the lower band, then up to the upper band, bouncing out. That was an approach we looked at. That would have worked pretty well a few times, right? Until it didn't, right? We get a breach of the lower band, the bands start to diverge, and we get the sell-off. That creates buying opportunity, and price comes right back up to that initial volatility expansion level. All right, now, probably the most straightforward part of the slingshot is identifying when the market's vulnerable to a sell-off, right? You get a breach of the lower band and a simultaneous divergence of the outer bands. Okay, so it's a transition from vol contraction to vol expansion. But the most challenging part is identifying the buy zone. So you can certainly trade this on the way down, but some people don't like the short, or some people just buy, right? And that's perfectly fine. But we need to be able to identify the buy zone. When is the market likely to go back up? So that's really the trick, is to identify when the band is overextended and then ready to snap back. And I spent well over a decade and thousands of hours trying to determine when momentum is shifting and a new trend is starting. So I used to do this all manually, and I was incorporating really too much intuition and guesswork, gut feelings, all that stuff. But I ultimately was able to develop a reliable algorithm that can help me navigate this, okay? And I had to configure it to work on all time frames. I had to duplicate the success across all markets, because I don't just trade one asset class. I trade, trade equities, ETFs, futures, options. So I wanted it to be adaptable, okay? And I also wanted it to reliably forecast a move and not lag like most indicators do and tell me what already happened in the past, because then I'm getting into the trend way too late. And that's ultimately what I was encountering, is when I used other approaches, like waiting for a rotation down into a support level or looking for bullish reversal candlestick patterns. Often I was missing out a lot of that move. But the end result is that I had a tool that could give me accurate buy and sell signals near the outer channels of the Bollinger Bands, up to 3 candles in advance of the move. So that means if I was trading off a daily chart, right, I had up to 3 days of advance notice of where I should enter the market. So really, when you formulate the right combination of momentum studies, volatility studies, price action setups, you can actually accurately identify buy and sell signals near the outer bands. And this is what I built into my indicator called Trade Trend. Okay, so Trade Trend is going to give me accurate buy and sell signals up to 3 candles in advance of the trend. Again, that means if I'm trading off a daily chart, I have up to 3 days of advance notice. If I'm intraday trading off a 5-minute chart, let's say, I have up to 15 minutes of advance notice. And this is all done with a proprietary momentum algorithm. It reads the market in real time. It also provides trailing stops, so it reads the trend strength, the momentum, the volatility, all of that, and it helps me lock in profits on successful trades and forecast short-term and long-term trends with astounding accuracy. It can be applied to any asset class: equities, ETFs, futures, Forex, even crypto, on any time frame. And I love using this for my directional option strategies, which, for any of you who trade directional option strategies, know are very time critical, right? You've got to be exactly right on your timing in your entries prior to hitting your expiration cycle, right? So I love using it for that. It doesn't repaint. So once you get a signal set in stone, you can confidently know that that is your signal, right? And this is often what we encounter with other indicators when we look at them in hindsight on a chart, right? They can look really good on a chart, and then you go to use them in the live markets and they fail miserably. This is often due to repainting, right? So the indicator does not repaint. It has built-in protection to help avoid whipsaw market conditions. It helps us capture most of the trend before it reverses. It's designed to limit losses and let profits run. There will always be losing trades, okay? But the critical thing is that you have a strategy that has positive expectancy, right? Meaning that if you factor in all your winners and losers, your win rates, and the magnitude of those winners and losers, you should have a positive expectancy. So over the long run, you can make money. All right. This indicator can be used with any other indicator or system for added confirmation. Okay, so it can be used as a standalone, or it can be used with the Bollinger Bands, for instance, like we're doing with the slingshot strategy. Okay, and ultimately help us remove the guesswork. Now, I mentioned I'd give you a really powerful trick to help eliminate a lot of losing trades. Now, again, we can't eliminate all of them. There's going to be losing trades, but when we're trading directionally, okay, there's a specific order type that makes a huge difference. And I've actually looked at this data across major, broker dealers. Most orders are market and limit orders. And it's not that there's anything wrong with that. They can be appropriate even. But when we're trading directionally, okay, for me, it makes a lot more sense to use a buy stop or sell stop order. So if I'm looking at a long trade, I place a buy stop order slightly above the current mark price. Okay, and that way there has to be follow through in my forecasted trend direction to get filled on the trade. So if for whatever reason I'm wrong, okay, the market doesn't follow through, then I simply don't get into the trade. Okay, so it keeps me out of what would otherwise use a bad trade. Whereas if I use a market or a limit order, okay, I'm in. So I could, put a limit order down at a lower price thinking I'm gonna get a deal on this trade at a lower price. But what if it just keeps going that way? Then I just got, not only did I get a bad fill, but I'm in a losing trade off the bat, okay? So this is actually built into the trade trend indicator. So when we get a forecasted signal, like it says, the indicator tells us it's forecasting the market to go up, it's going to give us an exact entry price, and it's gonna tell us to use a buy stop order, okay? So we have to hit that price level, and there has to be follow through. So a lot of these trades, you're in a successful trade off the bat. Now it can still reverse on you down the line, but at the onset of that trade, at least you're with the momentum and not against it. Okay. Now I use this approach. I use the trade trend indicator. I use the slingshot strategy in my trading as well. And I believe in backing up everything that I teach with real world, real money results. Okay, so these are my broker statements from back in 2020 during the COVID crash. And I also believe in picking the most difficult market conditions, right, to share results from, because yeah, anybody could cherry pick an easy market condition and say, hey, look what I did. But what about the worst market condition? How'd you do, right? Because most people lost a ton of money back in that period of time. Okay, so of course this is now Schwab acquired TD Ameritrade, but this is my TD Ameritrade statement from back in February. So I was trading the slingshot on the way down. Okay, so this is really just the last week of the month, my positions that last week. I was pretty light on positioning. I was trading relatively small positions, but I saw the slingshot getting pulled back, so I started putting on some short positions. Okay, and in that last week, by February 28th, booked over 13,300. Now in March, I got the buy signal from the trade trend indicator. Okay, so I'm just again using that indicator with the slingshot strategy. Okay, I was still being very conservative, only putting on 1, 2, 3 contracts, but I started to put on more positions. So I unwound my shorts, got into the long positions on that buy signal, and by the end of March, booked over 27,000. So when most other traders were panic selling, losing money, and uncertain about when to get back into the market, I did over 40,000 on relatively small position sizing, and I was predominantly in cash at this point in time. Okay, so I can't guarantee anyone will replicate these results, but I can tell you that this is exactly how I accomplished this. I simply used the slingshot strategy and the trade trend indicator. So this can be applied to any market, any time frame. You can do this with any size account, okay? That's totally up to you. But trade trend will give you predictive buy and sell signals before the move occurs. Okay, so you're gonna get a buy or sell warning before the expected move, okay, with the exact entry price up to 3 candles in advance. So again, that means if you're trading off a daily time frame, you're gonna have a warning of a buy or sell up to 3 days in advance. Now it could trigger the next day, but it could trigger 3 days later. Okay, if you're trading off a 5-minute time frame, you have up to 15 minutes of advance notice. Okay, and what's incredible, and I'll let you know how you can get this indicator in just a second. If you apply it to a chart of the S&Ps, the NASDAQ, okay, go back as far as you can on your chart. Go back all the way to the dawn of the stock market. You're gonna see that it's forecasted every major market crash and rebound in the history of the market. So any black swan event, market crash, and we'll look at some chart examples here in a second. Okay, you're gonna see the trade trend sell signal. Okay, when the market rebounds, you're gonna see the trade trend buy signal. Here's some examples. This is the flash crash of August 2015. Okay, S&Ps, not doing a whole lot. They're pretty range bound. Okay, you wouldn't, expect anything crazy to happen August 19th, but trade trend flashed a sell signal. Okay, it says get ready. There's a higher likelihood the market's going to rotate lower. It literally gave me 1 day of advance notice before the S&Ps crashed. It also gave me a buy signal early October on that double bottom before the markets rebound. And I'm keeping the Bollinger Bands on here so you guys can spot the slingshot now, right? You see the slingshot? Breach of the lower band, divergence of the outer bands. Okay, this is the '08 mortgage crisis. Okay, May 21st. Doesn't look like anything crazy is happening, right? We're just a little bit of a downside retracement, right? Then we start to breach the lower band. Trade trend flashed a sell signal. Okay, literally about 3 or 4 days before the markets started to go on to lose more than half their value. Going back over 2 decades, the 2000.com bubble. Okay, there's the slingshot. You guys see it? Okay, there's the trade trend sell signal. It also gave me a buy signal late September, early October before the markets rebounded. This is the 2022 bear market. So right at the end of 2021, we put in new all-time highs. Literally 1 day after the most recent all-time high in the S&Ps, trade trend flashed a sell signal. Okay, and it gave me advanced notice before we went on to a full-on bear market. This is the 2025 tariff crash. Okay, see the slingshot? We have vol contraction, narrow bands. Okay, price starts to rotate lower, breach the lower band, the bands start to diverge. Trade trend flashed a sell signal, literally 2 days after the high. Okay, it actually gave me 3 triggered sell signals on the way down. And then it gave me a buy signal on April 9th, that day when the markets just staged this huge reversal, right? And then of course we know where we've gone from there. Many additional new all-time highs in the market. Okay, I traded this. I traded the tariff crash. This is just one of the tickers I trade, the micro S&P futures. Okay, so I use the trade trend indicator. I use the slingshot methodology. Okay, and just trading this one catalyst over 40,500. Okay, and I wasn't trading crazy size here. Okay, I just had a couple contracts on. Now, guys, virtually every system will produce winning trades, but the problem is they don't keep you out of the market when conditions are not favorable, and you end up giving your profits back on the losing trades. So we're here to help you fix that problem. I do a lot of futures trading. Okay, this is right out of my Thinkorswim account using the trade trend indicator as a standalone. So you can use it as a standalone. Okay, now you can see I have losing trades in here. The indicator helped me keep those relatively contained, and it helps maximize my winning trades. Okay, and I have days like this. Okay, these are all one contract trades. They're all one contract trades. This is real world, real money example of using trade trend with the slingshot. So I was trading a few futures markets here. Okay, I traded on the way down on the sell signal, traded on the way up on the buy signal, over 26,600 in P&L on the day, and over 115,000 in open P&L. I was trading about 3 or 4 contracts here. So guys, my promise to you is I want to help you have days like these. I can't guarantee you'll replicate my results, but I can guarantee that I'll give you access to the exact indicator that I've used to achieve results like I've shared with you today. Okay, so this is a one-time opportunity to join me to discover how I make consistent income in the markets day after day, week after week. I reveal every one of my special techniques and indicators that makes profits like this possible. I don't hold anything back. I don't give you a redacted version of anything. I gave you the full Monty, okay? So I just can't guarantee you'll replicate anything, but I'm here to help you, okay? And so I'm gonna walk through what you get for the special package that we put together for the event today. That includes 12 months of trade trend. That includes the exact entry and exit signals, so you're never left guessing what the directional forecast is, or if you want to take a trade off of it, what price you should get in or out. It includes live interactive sessions. It includes members area access to all of our past recorded sessions. So we hold weekly strategy sessions like we're doing today, okay? And we go over different strategies each week. And that includes coaching for me on these sessions. So I'm there hosting these. And again, you can go back and get years and years of high quality education, okay? Because you get all the recordings from past events. You also get training on trade management. We have a whole curriculum on adjusting options trades that aren't working out and mitigating losses, and in some cases taking losing options trades and transforming them into net profitable outcomes. and a whole lot more, okay? This is all designed to help you cut the learning curve, okay? So I'm gonna walk you through the package here real quick and then let you know how you can get it. So you get 12 months of the trade trend indicator, you get live interactive sessions, you get coaching from me on those sessions, you get access to our exclusive invitation only Facebook group of over 900 members. You get extra online education. You can watch it at your leisure for trade management, how to mitigate risk in trades, and in some cases take losing trades and transform them into net profitable outcomes. But ultimately learn to trade equities, futures, Forex, options, whatever asset class or market you're interested in trading in. We're here to help you do that. You're also going to get a couple bonuses. So my top 2 weekly trade trend picks. Each Monday, I go to work and I find my top 2 signals, buy or sell signals, and I send them out to all of our members. Okay, so you get 2 picks a week, 104 picks a year. Okay, so as you're getting up and running with the indicator, you can kind of see how I'm selecting these. Those also come with supplemental options alerts if you prefer to trade the option in lieu of the stock or ETF. And then you get my latest ebook, How to Create Risk-Free Trades. This is a money management ebook that also goes into tactics to mitigate risk, and in some cases eliminate it from your trades. So the total retail value on this package is over $5,000. We're taking 90% off the retail today only. So this is a webinar only special at $497, and you get everything you see here. This is limited at the 90% discount to 25 seats. Okay, so you can still get any of these things after those seats are scooped up. It just goes back up to the retail price. And of course, I don't want you to pay the full retail. So if you want that 90% discount, all you need to do is go to altostrading.com/slingshot, and you can lock in that 90% discount. You're grandfathered in for as long as you want to be. We don't lock you in any contracts, so you can cancel anytime. Most of our members stay with us for many, many years, but you are grandfathered in. We never raise the price on you. And that discount is good for as long as you want it to be, okay? I know I'm at time, so I'm gonna go ahead and pass it back to Anthony. I wanna thank all of you for being here today. Anthony, I'll hand it back to you.
Thank you so much, Jeff. I just put your offer in the chat box, so be sure to check that out, everyone.
Thanks so much. Thanks, Anthony.
Yeah, Jeff, do you have time for a couple of questions?
I do, yeah, absolutely.
Okay, we're running a little bit over if that's okay. Hopefully it's not too bad for Mr. Sinnig.
Yes.
When Bollinger Bands expand, this is high vol, and when it contracts, it's low vol. Is that right? William's asking.
Precisely, William. Yep, you got it spot on. So when we have narrow bands, they don't have to be horizontal, but they're typically going to be parallel and narrow, and that's indicative of a low volatility market environment. When the bands are widening, and that's what you want to pay attention to with the slingshot is that transition, right? When they start to widen, that means that volatility is getting injected into the market, right? And it's likely to persist. Volatility doesn't generally expand and then immediately contract, right? So yeah, you got it exactly right.
John is asking, is the renewal price the same, $177?
So it's actually $497 for the entire year. But yes, it would, if you decide you want to continue after your first year, you're still grandfathered into that 90% discount.
Terry's asking, which platforms do the indicators work on?
Okay, excellent question. So we have Trade Trend available for Thinkorswim, TradingView, TradeStation, NinjaTrader, Metastock, and Wealth Charts. And when you claim your 90% discount, you'll get to select which platform you want the indicator on.
Paul's asking, I can't sign in to purchase. He's trying to purchase right now. He can't sign in.
Oh, okay, it may be that just a lot of people are hitting the page all at once. Give it a second, try again. If you do have any, that problem persists, send us an email. Our email is just support@altostrading.com, and we'll work with you. Just mention that you were on the event today and that you want to that you're claiming one of the 25 discounted seats, and we'll honor that. So if you guys have any, if you're genuinely trying to enroll and you have a problem, just shoot us an email, support@altostrading.com. We'll get that fixed and we'll lock you in. We won't say sorry you missed one of the 25 spots. So yeah.
One last question, I'm not sure if you could answer. Are you able to show SLV from Friday?
I'm on my computer that I don't have my platform pulled up and ready. Let me just see. if I could pull it up on TradingView here real quick. Is there enough time? Because I don't have it ready to go.
We're already 4 minutes over.
Okay. Yeah, on abbreviated sessions, it's hard to start sharing charts and showing. So I didn't have that prepared because I didn't think there'd be enough time. But if you want to look at a chart, shoot us an email on that as well, and we can screenshot a chart for you and show you the signals. Let's go with that.
And one last question. Will it work for interactive brokers? Oscar's asking.
We don't have the indicator program for interactive brokers, no.
Okay. All right. That's all for the questions then. Thank you.
Thanks so much for having me. It's a great pleasure. And thanks everybody for attending.
Thank you. Yeah, Jeff, thank you for sharing that forecasting framework and for explaining how it can be applied across multiple markets and timeframes. We also appreciate the special offer you've made available today. Everyone, Jeff's offer link has been placed in the chat box, so thanks again, Jeff. Up next, we have Dr. Daniel Sinnig of Trading Indicators. Daniel is a trader and professional software engineer who specializes in identifying hidden market structure and liquidity zones. His presentation today is titled Seeing the Invisible, where high probability day trades take shape. Daniel will show you how hidden liquidity zones form and how traders can use them to structure high reward, low risk trades. So everyone, please welcome Daniel to the summit.
Hey guys, nice to be here. Welcome everyone to the summit. It's a great honor to be back here at the Traders Corner Summit today. And yeah, what a crazy market since Thursday. Who would have thought we see 35, 40% drops in gold and silver, especially in silver. We're going to get to all of this. Let me just quickly share my screen, Anthony, and we're going to get started right away. Perfect. And Anthony, I believe you need to, and oh, there we go. Okay, perfect. Okay, so let me just go ahead and.
You have an extra 5 minutes as well because we ran over.
Okay, no worries. Yeah, thank you. Okay, so just gonna pick my screen here. There we go. All right. Anthony, please confirm that everybody can see my screen now, and then we're gonna get right into this trade, into this session.
Yes, we can see your screen. Thank you.
Perfect. All right. So, yeah, as Anthony said, my title seems a bit complicated. It's called The Hidden Landmarks of Price Action Trading with Liquidity Zones. May sound like a mouthful. In fact, it is a mouthful. But as you will see, and what we're going to be showing you today is actually something that everybody can apply. It's quite mechanical, despite the complicated title, and despite it being very straightforward, it can really give you an edge in the market. How this all works, we're going to discover today in this session here at the Traders Corner. All right, so I'm going to start off just to ease into this topic with perhaps something controversy. So I'm going to start off with this famous quote here from the Wolf of Wall Street. Probably many of you have watched that movie. It's a great movie. It's very entertaining. And at some point, you know, this quote was made in that movie by this dude here. He said, nobody, I don't care if you're Warren Buffett or Jimmy Buffett, nobody knows if his stock will go up, down, sideways, or in circles. Now, let me ask you guys the question. Do you believe that it's true? Maybe put like a yes or no into the chat box if you believe that this is true. Because if you believe, I'm not going to wait for the answers to come in, but if you believe that this is indeed true, I think then we are here at the wrong conference. Because if you believe that it's not possible to forecast to a certain degree of certainty where the stock market is going to go, where a particular stock is going to go, where a futures contract is going to go, then I believe we are at the wrong conference. Because today, what I'm going to be showing you, and what Jeff was showing you before, and some other traders as well, is exactly the opposite. We're going to be showing you what you can do to predict. There are no guarantees, but to make an educated prediction of where the stock is going to be going in the future. Let's face it, stock trading or any form of trading is really about predicting the future, where and when price will be in the future. And how this can work and which techniques we use to make this happen, I'm going to be showing you today in this presentation. Now, you may ask, who is this guy talking about, the Wolf of Wall Street, predicting the future of a stock or price? So I'm Daniel Sinnig, and I'm one of the founders of tradingindicators.com. I'm from Germany originally, even though today I am greeting you from our headquarters here in Montreal in Canada. It's a really cold day today. I walked to the office this morning at minus 18 degrees, very fresh, but I made it. I'm happy to be here. And yeah, I have created trading indicators about 10 years ago. And as the name suggests, we specialize in creating innovative trading indicators. This is really our bread and butter. This is what we've been doing for many years. We've built over 1,000 trading indicators for clients all over the world. We have clients in the US, of course, in Canada, where we headquartered, in Germany, in Europe, Australia, really all over the world. It's been quite a journey. It's been a very fascinating, very rewarding. But perhaps just, since we have a bit of time, Anthony said I have 5 more minutes, perfect. Just to give you a bit of background of where I am coming from, because interestingly, my background originally is not in finance. It's not in technical analysis. When I was younger in my career and earlier in my career, I always wanted to become a professor in software engineering. I loved programming and software. So I went through all the levels. I did my master's, I did my PhD, I did my postdoc. I started teaching in various universities in Montreal and also in Germany. But you know what? During all these years in research and software engineering, I was also fascinated by the world of trading and the markets and how you could make money at the markets. So I decided, yeah, let's start trading on the side. But as you start off, and maybe many of you have made the same mistake, as you start off, you tend to make all kinds of mistakes. You tend to take too much risk and trade when market conditions are not right. You revenge trade, you overtrade, and so did I. I made all these mistakes. And after donating quite a bit of money to the markets, I came to the hard realization, oh boy, trading is not as straightforward as I thought, and I need help. And for me, needing help meant I need better tools which will help me make better trading decisions. So I rolled up my sleeves and I started coding. And the very first indicators which we've ever written, or which I have ever written, they were solely for my own purpose, to help me in my trading, to help me make better trading decisions. But once I realized, these are actually making a difference, I thought maybe other traders could benefit from these indicators as well. And this is really how the story behind tradingindicators.com started. All right, now this was more than 10 years ago. We've come a long way since then. Our indicators have become so much more advanced than the ones that we had at the very beginning. And 2 of our most advanced indicators, which we use every single day on every price chart we open, I'm going to show you today. All right, so please stay tuned for this. Now, I do need to remind you, however, that trading does contain risk and therefore is not suited for every investor. If you trade, make sure to only use risk capital, which is money that you actually can afford to lose. When it comes to backtest performance or hypothetical performance, or really anything based on historical price data, keep in mind that this is not necessarily indicative of future performance, and any trade ideas and setups discussed in this webinar should not be construed as trade advice. These are for educational purposes only. All right, with this out of the way, let's get into what we've planned for today. Well, so before we look at charts, I'm gonna be giving you a bit of background information of what the theory is of what I'm going to be showing you. It's going to come all together at the end, but please bear with me for 5 minutes to talk about landmarks on every chart, because that's going to be instrumental in the central concept of what these 2 indicators, which I will show you, will bring to the table. Then we're going to go on to talk about my most powerful, or the 3 most powerful setups that we trade every single day from a day trading point of view, but also from a swing trading point of view. We're going to talk about our liquidity IQ indicator, and then we're going to look at some live charts afterwards. Let's talk about landmarks on every chart first. Well, when looked at with the naked eye, and perhaps you agree with me, perhaps you don't, but at least to me, charts tend to be quite unpredictable, even chaotic. Look at this chart here, where an uptrend immediately reverses into a downtrend, only then to reverse back into an uptrend again. And things tend to be even worse on smaller time frames. Look at this one here on the 5-minute time frame. It's completely chaotic, it's erratic, and you can't really make any clear picture of what you're seeing here. It's like up and down, sideways, down, and so forth. Quite chaotic. But this is your first takeaway. It's going to be important in just a bit. Once you zoom out, once you go to higher time frames, so you go from the 5-minute time frame all the way to the 4-hour time frame, It's the same chart. Things tend to become more clear. They tend to become more structured and systematic. Please remember this. This will be important. This is a central concept of the indicators, which I will show you, which will do what we call a multi-time frame and higher time frame analysis. All right, but we're going to get there. Now, what we observed about 3 or 4 years ago when we first created this indicator is that every single chart, it doesn't matter what it is, it could be a stock chart, it could be a futures chart, it could be an FX chart, a crypto chart, every single chart, it could be on the daily time frame, on the 5-minute time frame, it could be a tick chart, it doesn't really matter. Every single chart has certain landmarks, certain levels to which price is reacting in a certain way. And if, and it's a big if we are able to spot these levels on your chart, we can, to some degree, predict how price will react to these levels and set up trades, interesting trades, profitable trades in that process. So this is possible on every single chart. And this is why what I'm going to show you today is applicable to any type of trader, day trader, swing trader, longer term investor alike. All right. Elaborating a bit more on this concept. So here's an example. So let's say on this hypothetical chart, let's say this historical high back in the day, okay, this one formed the landmark. I'm going to explain to you what makes these landmarks valid or not. This one formed the landmark. Or perhaps this series of swing lows down here, this one formed a landmark or a certain zone. What we often can observe in the future is that price will revisit these levels like drawn attended to by as magnets, like magnetically drawn to. So price here came back up to this historical landmark and then bounced off from it. Or it came down here to this series of swing lows and then bounced off from it. This is observable on every single price chart. Now these landmarks, they can have all kinds of names, and many of you have heard about these names before, like support and resistance levels, liquidity levels, or whatever it might be. So different names, and from a fundamental market point of view, these are created by supply and demand, by market forces, which are applicable to any market we trade. These forces are there. For example, support levels. These series of swing lows, these are created by big money orders, big block orders stepping in, buy orders are stepping in, preventing price from going further down, and that price will go up again. You can see it here and here and here. Or vice versa, when price is approaching these series of swing highs, these are internally caused by market forces where supply exceeds demands. Big block sell orders stepping in, preventing price from coming further up, and that price will drop off to lower price levels. And you may ask, okay, what does this have to do with us retail traders? We retail traders don't have the buying power to move the market in this way. And you would be absolutely right. 100%. A retail trader of our small orders, we can shake the markets this way. These swings in the markets, these are called by the big guys, the culprits, the big money traders, the institutions, the ones who have the buying power to move the market. But what we can do as retail traders is the following. While the big guys, they will call the shots, they will move the markets. We as retail traders, we can identify these points and then follow the patterns and profit in the process. And what I will show you today and right now is an indicator designed to spot these levels. And once you know where these levels are, where these landmarks on the chart are, we can find promising trade setups in the process. And before I show you this indicator, let me just walk you through 3 of these most promising setups that we trade every single day in our trading room. Setup number 1 is this one here. We call this the bullish or the bounce setup in general. This can happen for the bullish case, but also for the bearish case. But let's just stay on the bullish case for now. What is this setup? And this happened to be a setup where the reward oftentimes outpaces by a big factor the risk on the table. So something that every trader finds attractive. So how does this work? Well, in this case, you can see it here. Price came down to this key level here. This is a support level, a liquidity level, and then bounced off this level. This is tradable. It's tradable in the way that we could enter as price comes down to this level, put our stop loss right below this level here, because this would invalidate this trade if we actually drop below. because the anticipation is we're going to be bouncing off this level towards higher price levels, towards the middle in between support and resistance. This is our bounce setup, where we are bouncing off a level, either support or resistance, towards the middle in between these levels. A setup where the reward and the gain that we can get typically outpaces the risk on the table. Setup number 2 is, we call this the zone break setup. Nothing in life lasts forever. Nothing in our trading lives lasts forever. Eventually, these levels are broken. But if this happens, and when this happens, new opportunities are opening up for us once again. Because in this case, we can simply trade the breakout. We can simply enter in the direction of the breakout. In this case, the bearish direction where support is broken, in anticipation that price will continue in direction of the breakout for quite some time. We can see this in the bearish case, but also when resistance is broken to the upside. We simply enter in the direction of the breakout. And once again, this is a setup where the reward typically outpaces by a big factor the risk on the table. Because once again, you would put your stop loss just above this level here. Because if you break below, but then come back up again, it's invalidated. You want to, cut your losses short, something that every textbook will tell you. This setup supports this for sure. All right, but there's one caveat. Look what happened here. We broke this setup, this level. We initially went down, but then prices came back up again. And we can see this all over again. The market tries to fake you out at this point. We're coming back up again, and only then the actual move downwards begins. We call this a retracement back to the broken level. This can happen to the downside where support is broken, but also to the upside where resistance is broken. You can see it here. Price broke above this green line here. Initially it went up, all right, but then it came back down. Look where it came down to, right back to the broken resistance level. And then the actual move continued. We call this the zone break retrace setup, where resistance is broken and it comes down to the broken level. And this time, resistance is acting as support. You probably have heard it before, that resistance can change roles when it's broken. Resistance can become support, support can become resistance. And this is exactly what we're seeing here, where price comes down to the broken resistance level, and this can form a launch pad for the actual move to happen. This is the zone break retrace setup. Now, enough theory, let's get into the charts. But of course, you may ask yourself, all right, this all sounds nice and dandy, but how can we actually find these levels directly on the chart? How is this possible? Because this lives and dies with the fact of finding these levels correctly. You're absolutely right. And this is why we have spent years of development with our team to develop an indicator specialized on exactly this, on finding these key levels on your price chart. This indicator is called Liquidity IQ, and as soon as it's applied to the price chart, you will see these levels drawn out for you, allowing you to spot these key setups instantaneously as soon as the indicator is on the chart. How this works, let's discover it together right now. So I'm going to go over to the price chart. All right, so moving over, and we're going to start off with this chart here. It's a blank chart. This is a chart of the Nasdaq futures on the 5-minute time frame. And there might be some savants out there, but just by looking at what you see right here, do you see any clear structure? Does this seem like logical or clean or clear to you? Just by looking at this naked chart? Well, at least to me, it does not. And this is where my concept of landmarks comes in. Because with the naked eye, charts oftentimes tend to be completely unreadable and chaotic. This is really hard to read. But look what happens as soon as I apply our indicator to this chart. You will see in just a second that we can actually make sense of what's going on right now in this market for this particular symbol. So I'm going to switch it on right now. It was hidden before. And as soon as it loads, it'll take a second or so. Let's try to make sense of it, of what we are seeing right now. All right. Okay, let's start off where we are right now. All right, so let's look at these lower end of the price action here. So we can see, okay, we came down quite a bit, and now price is trading. in the proximity of this key support level. You can see this little red line here. This is a key support level, which we know from all the way back here. This indicator will never draw it after the fact. It will draw these levels as soon as they are recognized, and they will stay there. There's no repainting involved. So, all right, so we're trading near support. Let's just keep this information for now. But let's try to understand what else do we see. Let's see how did we actually get there? Okay, so let's go back a little bit further, just to understand a little bit of what has happened here. I'm going to show you now all these different patterns, which will come to life, which I just explained to you. So what has happened here? So back on Monday, this goes back all the way to the beginning of last week. Back on Monday, what did we see here? Well, price broke for the first time above this key resistance level. You can see this little green line here. Price broke above it, was even labeled here zone break. We are breaking above this key resistance level. We came up, then we came down again. Does this ring a bell? What is this setup? A break above resistance. We're going up, down again, and the actual move continues. This is our zone break retrace setup. We would only be able to find this if we had knowledge about these levels. The actual move continues here. Then we're trading sideways in between resistance and support for a while. You can see it here, prices moving back and forth. Then moving back here, we break below support. All right, breaking below support, price continues downwards for quite some time. And guess what happened then? We came back up again. And where did we stop? At this broken support level, almost to the T. You can see it here. And then prices bounced off the support level, this broken support level, now acting as resistance to the downside again. And now we're trading near the support level. You bounce off support here. These should always be regarded as zones. It never really gets to the exact price point. These are zones. Prices bounce off this level, came up, bounced off it again, and we're still trading in the vicinity of this level. And now for the future, what could we expect? Well, we're going to see where the market opens on Sunday night, but as we come down to this level again, maybe one may anticipate another bounce of this level towards higher price levels when the market opens on Sunday night. So right now, we would be in a long bounce, so we can see it here. The indicator even tells you this right now is a long bounce setup. We're in the proximity of a support level, and we might be bouncing off this level towards higher price levels from here on. All right, so that was an example for a very small time frame for the Nasdaq futures on the 5-minute time frame. Let me go change it up a little bit. Let's look at some higher time frames. So I'm going to go here into this chart here. I'm just going to hide this for a second, and let's look at gold. I'm sure everyone in this room has heard about what happened to gold on Thursday, on Friday, and silver, both of them. Whoa, what a huge move down. All right, this was to some degree, at least for me, expected, because prices were so extended, they were so expensive, and I was certain if at some point a pullback, a correction would be happening, it would be a sizable one. This happened, of course, we had a sizable pullback, but what's interesting right now is where did prices stop? They didn't just stop at this level. Here's the futures contract arbitrarily. They stopped here when they came down because this was a key technical level. It just stopped above this resistance, this former resistance level. Wow. I can see prices broke above resistance, came up, then down, and this resistance level is now acting as support. This is zone break retrace, once again in the making. And even here it's written out in our setup box, long break retrace. And once again, depending on where markets open on Sunday night or on Monday, if you trade the cash market, this could be potentially an interesting opportunity to enter into a long trade, anticipating that this is our zone break retrace set up to the long direction. This is just a correction down to the broken level, and which could be acting as a launch pad for the actual move further up. And this, if this were true, then we would be seeing the next days, weeks, and maybe months, another push higher in gold towards all-time highs. Yeah. This is possible for me to spot because I have knowledge about these levels. I can use that knowledge to make sense of my charts. Let's change it up one more time. Let's look at Bitcoin. BTC. Spot Bitcoin. What are we seeing here? Bitcoin is also interesting. And once again, look at this We're going to take the indicator off one more time. Look at this chart. Honestly, to me, it's really hard to read. But once I apply the indicator to it, look what happened here. Look what I see here. Price came up to resistance. This blue level here, that's resistance. We bounced off. The indicator even flagged to us something called a liquidity capture, which is especially, when you can see it here a couple of times, which is especially event which basically indicates, hey, this is a candle where it wicks into a resistance level, and this candle has abnormally high volume. Now, when this happens, oftentimes it increases the chance that we're going to see a bounce of this level rather than a break of the level. So we came up here to this level, we bounced off it. Look what happened then. We came all the way down to the support level. Liquidity kept us all around. We bounced to the upside. Back to resistance. Liquidity capture, bounce. Up, bounce. Finally, we broke it. It's not a perfect science. But after the zone break, we came up to this resistance level with a capture and bounce down to the broken resistance level. Here's a zone break retrace, bounced again, up to resistance here, bounced again. It's almost picture perfect. And where are we right now in Bitcoin? Let's have a look. We are in the vicinity of this key support level with a liquidity capture event. And I would not be surprised on Sunday or whenever, actually Bitcoin trades 24/7, if we do see a bit of a bounce of this level, at least towards this level here in Bitcoin, maybe even to the middle of these two levels. Because right now, once again, we are trading at support, getting into the support level here, we may be bouncing off this level towards the middle in the next couple of days. All right, so let me back up just a little bit. What have we seen so far? Well, we have seen our liquidity IQ indicator, which will draw you these levels immediately when it's applied to the price chart. To me, in my trading and in our trading here at tradingindicators.com, this has become an invaluable tool because this knowledge of the levels is what you will need to predict of how price or where price will stop in the future, where price may bounce off in the future, and if price breaks it, where price may retrace back to into the future. Once again, trading is about forecasting the future to some degree. This indicator will help you do that. We call it the instant technical chart assistant because it does the technical analysis for you immediately when it's applied to the chart. But guess what? There's another indicator which works complementary to this one here and which can help you further filter out some of these setups that you're seeing. This indicator is called MA Rush. The title sounds a bit obscure, but it's actually quite a bit of a simple indicator because it's our trend indicator. You may have heard before, the trend is your friend, of course until it ends and bends, but the trend is your friend. That's something traders believe in. That's what technicians believe in. Why? Because the odds that a trend is continuing are simply higher than the odds of the trend completely reversing. In other words, it's always easier and typically more beneficial to trade with the trend than against it. And what this indicator does, it will show you directly on your price chart what is the prevailing trend direction, allowing you to further filter your setups. Potentially only taking a bounce setup if that's a bounce to the upside when the trend is bullish. Perhaps only taking a bearish setup, like a bounce from a resistance to lower price levels, if at the same time the trend is bearish. This is what we use this indicator for. How this works, let's check it out directly on the chart. I'm going to go back one more time to my price chart, and we're going to change it up one more time. Let's take a look at JP Morgan. A great stock. We trade this all the time in our swing trading room. JP Morgan here on the daily time frame. Actually, this was our trade of the week in our newsletter on Monday. So we're active traders. And what happened on Monday, last Monday, you can resend it to you afterwards. Our prices came down to this red level here. This level is a support level. So prices came all the way down here, and we're at support. Okay, this is a good setup by itself for a great stock. But, and look at the nice bounce that happened afterwards. But let's have a quick look of what trend is telling us in addition to all this. We just have to go back all the way here. And of course, for JP Morgan, it's quite obvious what the trend direction is. But we can see it here. Our MA Rush indicator told us back in February 2023, hey, the trend for JP Morgan has switched from previously being bearish to bullish. And look what a run it has taken. And ever since, what we've done is we have taken only the long trades in JP Morgan when we saw a long setup. Just like the setup we saw here when prices came down on Monday or Friday last week towards this key support level, because the call was quite easy. Prices came down to support after having all-time highs. This is a bounce setup to the long side by itself, which was reinforced by having a bullish trend at the same time. Beautiful. Another example. Lewis Corporation. Let's look at this one here. Same thing, bullish trend. Take my word for it. MA rush hour indicator shows us a bullish trend. Once it loads, we're bullish here. We came down to key support, this red level here. This is support. Let me just enable quickly the labels. 1 second. Our indicators come with quite a few settings to style them properly. Once this is enabled, you can see it here. We came down to the support level. Yeah, support level with a liquidity capture and a beautiful bounce off this level towards higher price levels. Beautiful. One more, Hartford Group, HIG. There we go. Oops, HIG, there we go. All right, the Hartford Insurance Group. Look at this bounce setup. Similar that we trade over and over again. Why? Because it had the right technical setup. What happened here? Long-term bullish stock. This stock has been bullish as per our MA rush indicator for 5 years or even more. Long-term uptrend, the trend is your friend. We came down to this key support level. We call this also out in our trading room. And what a bounce we have seen from support to higher price levels. Reinforced by the fact that at the same time, we not only had a bullish setup, but we were also in a bullish trend. Two things are coming together, predicting the same price direction. This is where the magic happens. And this is why, if I go back to my slides for just 1 second, this is why we call these two indicators as the dynamic duo, because they complement each other so nicely. MA Rush will give you the prevailing trend direction, and Liquidity IQ will give you the setups that you would like to trade. And then you just combine two things together. If they match up, it's a great trade. And sometimes they don't match up, you will skip the trade. Because in trading, patience is a virtue, and you want to focus on these setups, which are the most promising ones where really everything comes together. All right, so let me explain you before I can answer some simple requests, how you can get access to these two indicators. First off, I should mention that the offer I'm going to show you today is available for these platforms. For TradingView, of course, you've seen them on TradingView right now, for NinjaTrader, for MotiveWave, and for MT4 and MT5. And it's a really special offer. So this is something we've never done before. I thought, Traders Corners is the right venue to try it out. It's by far the best offer we've ever done in our history for these two indicators. So let me explain to you, first of all, what these two indicators normally cost. So typically, normally that's the regular price on our page, we offer these two indicators in combination for a monthly subscription offer for $197. And this includes our Liquidity IQ indicator, the one that shows you these support and resistance levels, and it also includes MA Rush as a bonus. Why? Because these two indicators, they complement each other so nicely. But of course, we're not only going to give you these two indicators, we're also going to show you and train you how to use them. Today, I could only give you an overview of what they do. They can be configured and optimized. We're going to teach you how to do this. And in addition to all this, we will also put our money where our mouth is and live trade with these two indicators, with our real money account on February 18. Let me say it's a long time from now. Well, I'm going to be on a trip next week, so I can't do it next week. But nonetheless, on February 18, we will have our next live trading workshop where we're going to use these two indicators to live trade the futures market. It's going to be a day trading workshop, but these indicators work for both day trading and live and swing trading. So that's included. Bonus number 3 is an invitation, an exclusive invitation to our weekly member sessions. These happen every Tuesday at 12 p.m. They are recorded, so if you can't make it, you can watch the recording. You will be invited to these sessions. You will also receive the bootcamp for these two indicators, which will allow you to configure them to your liking so you can take full advantage of these two indicators. And you'll also get an ebook and some video guides on how to trade with them. That's already a great offer. But as a special thank you for being here today, for listening to me speak to you, and during my German accent, we've thought, okay, let's make something really special today for you guys. We're gonna slash down the price from $197 to only $47 a month for these two indicators, valid for the first 3 months. Then it's going to go up to the regular price, but at least this will give you and allow you to try out these two indicators pretty much risk-free. Now you put them on the chart, you may like them, I'm pretty sure you will like them, and you're going to stick with us, but if you don't, your risk is minimal. So we're going to slash those price down to $47 only, and this is available for the first 5 orders. You have to be a bit quick for this. And if you want to take advantage of this offer, simply go to tradingindicators.com/CornerAnthony. Please put this link into the chat box as well. So tradingindicators.com/corner. Now, one more thing. You may say, okay, it's $47 a month, and then it's going to be really expensive, $197. Well, you will have the chance during your subscription at any time, it doesn't matter when, to let us know, hey, Daniel, I would like to get the lifetime license of these indicators. And you let us know, and we will then upgrade you to lifetime, and we will take into account of what you have already paid for your subscription. So this will be possible to you, and we've thought this is an easy into these indicators. You get them at the very discounted price for 3 months, and if you at any time want to get the lifetime, we're going to acknowledge what you've already paid, and we'll upgrade you to the lifetime license. And from that point on, you have them forever. Nobody will ever take them away from you. All right, real quick, what's in the package? Well, our Liquidity IQ indicator will be in the package with all the bells and whistles, which I've shown you today. My favorite indicator, I have it on every single chart I'm trading, no exceptions. That will be included. MA Rush, our trend indicator, will be in the package. The indicator which will show you what's the prevailing trend direction, bearish or bullish. Use this indicator as the perfect filter for your setups. You will be invited to our next live trading workshop, where we place real money trades for a real account, no demo account, using these two indicators. Here's a picture of our last session, for one of our last sessions. This will be included, and you will be invited to our members only training sessions every single Tuesday at 12 p.m. Eastern time, and you'll be invited to our Discord channel. If you miss a session, or if you can't make it, if you're an appointment, you're busy, it's in the middle of the day, I get it. These are all recorded. You can rewatch the recording shortly afterwards. All this will be available or made available to you if you take advantage of this offer today. But don't wait too long. This is for the first 5 orders only. As I mentioned before, it is the lowest we've ever come down with these two indicators. And remember, whatever you pay for your subscription later on, you can use that money to sign up for the lifetime license. All right, so this is our offer for today, available at tradingindicators.com/corner. All right, so Anthony, do we have some questions that came in? Let me see if I do something here, if I can see them in my webinar tool. 1 second. Was the chat enabled? Let me just quickly see.
Yeah. It should, if it's not it.
Okay, yeah.
Oh no, I gotta make you an organizer, sorry. Look, make sure to ask some questions, everyone. It's a great opportunity.
A minute or two to attend to these. So let me quickly see questions. Okay, there we go. Let's have a look. How much is the lifetime offer? It's $9.97 for the life. And if you think, hey, Kimi, as you said, hey, I want to get the lifetime right now, you can do this as well. Just simply drop me a note. Absolutely. All right. Okay. Let me see. look at Silver's for Jeff Tompkins. Is Liquidity IQ is level 4 data? No, there's no special data requirement for it. It just works off any regular chart. You don't need to have a special data subscription for it. That's no problem. Can you use it on a 2-minute chart for NQ? Oh yeah, absolutely. Okay, let me do this right now. All right, so let's go to MNQ. Okay, let me just quickly go here and go to the 2-minute chart. All right, and in fact, this brings up a great topic. So I'm gonna go to the 2-minute chart of MNQ. The indicator is loading. We can see, okay, the levels are being printed. But what I didn't show you, and you can see these levels, these breaks and so forth. So really nice signals. But one feature which I forgot to mention is the following. I'm gonna just show you this right now. Look at this parameter here. It says time frame. So right now you're on the 2-minute time frame. And by default, the indicator will show you something like this. This is what you see by default if you are on the 2-minute time frame. Just wait for a second for it to load. Okay, it's loaded. So you can see all these levels here, lots of small little levels coming up here on the 2-minute time frame. But remember what I said at the beginning, things tend to become a bit clearer and more meaningful and more significant once we zoom out to a higher time frame. Well, we thought about this concept as well. This is why in the indicator settings, we have a parameter called reference time frame. And in there, you can select whatever time frame you want. And once you do this, observe what happens now. I'm gonna go here to, let's say, the 30-minute time frame. Observe what happens. I click on it, it takes a little while to load. And then once it's loaded, you can see it. Just a second, still loading. There, everything changed. Because now the indicator will consider the 30-minute time frame for its calculations while you are on the 2-minute time frame. This is a huge difference maker because that way you can eliminate the need to go to all these other different time frames because the indicator will fetch this information automatically for you. So you can trade off from the 2-minute time frame for very refined entries, yet see the levels from a much higher time frame where they are more significant. Big difference maker. This is built into the indicator. And once again, the offer is the following: only $47 a month for the first 3 months. And this will be prorated should you ever want to consider the lifetime license for these 2 indicators. Available at tradingindicators.com/corner. All right. With this, Anthony, this brings me to the end of my presentation. So I apologize if there was a question which I overlooked. But if there was, you can always reach out to us directly via our homepage, tradingindicators.com. Go to support, then click on contact, put your question into the contact form, and this one will go straight to my inbox, and I will answer every single question personally this weekend. I promise. All right, guys. With this, I wish you all a great conference. Arthur said he just signed up for the $47, but he wants to sign up for the lifetime. Perfect, Arthur. Send me a quick note by email, and we'll make it happen. Absolutely. Great. Perfect, guys. That's it. Thank you so much for listening. I hope you could understand me properly. And yeah, I hopefully see you soon in our trading community. Thanks, guys. Thanks, Anthony. Thanks for having us. Bye-bye.
Oh, thank you, Daniel. I think I should call you Dr. Signal instead of Dr. Sinnig.
Yeah, maybe. That's a nice
Dr. Signal. Yeah.
I like the sound of that. Yes.
Yeah, I mean, seems like you. Thank you for that insightful presentation and for demonstrating how market structure can reveal high probability opportunities. We also appreciate the generous offer you've shared with our audience today. Everyone, Daniel's offer link is now available in the chat, so be sure to take advantage of it. I enjoyed his signals. Next up, we're honored to welcome Stephen Primo of Pro Trader Strategies. Stephen is a former stock exchange specialist with 49 years of professional trading experience. His presentation today is titled 4 Steps to Trading Consistency. Stephen will share the foundational principles that have supported his long-term consistency across market cycles. Mr. Primo, welcome to the summit.
Hi, thank you very much, Anthony. I don't know if you can see me all right yet, but if you want to make me the presenter. There we go. I just saw it coming on my screen right now. Can you see everything clearly? All right.
Yes, we could see it. And do you need to see the questions as well, or would you like for me to look for those for you?
Oh, you can read them. That would be fine at the end.
Okay. Yeah, I'll do that.
But thanks for that
so
introduction.
Be sure to ask questions. Yeah, be sure to ask questions, audience. All right. So thank you.
Okay, thank you and welcome everyone. I have a great educational presentation for you today because I'm going to be sharing with you the 4 steps to trading consistency. Now, these are 4 steps that I was taught nearly 5 decades ago that can really increase your odds for success. And it doesn't matter what market you trade. It makes no difference what strategy or system you're trading, what time frame. These 4 steps will really increase your odds for success. Now, let me give you a short example here. Let's look at this older chart of Adobe, okay? This is where most traders have difficulty. They don't have any idea what's going on or which direction the market is going. For example, someone could look at this and say, well, we're in a downtrend. We're making lower lows, lower highs. But with the first step that I'm going to be teaching you today, you would have known we weren't in a downtrend at all. And in fact, we were actually in an uptrend. So once you knew that we were in an uptrend, you could apply any method, any signal that you want. Let's say, for example, you decided to buy here. The second step would tell you where to place your stop. Third step would tell you where to exit. And finally, the 4th step would tell you how to protect your trade. And ultimately, when you did exit off these 4 steps, you could have potentially captured 22.5 points in a matter of days, all without the help of news, without the help of convoluted indicators. These are 4 simple steps to trading consistency that I truly believe can increase your odds for success. And you'll learn them all today at no cost. You're going to be yours, and you can start applying them as early as Monday if you'd like. Now, everything you're seeing today is displayed coming from the platform I developed and designed with Pro Trader Strategies. It's the PTS Primo charting platform. This is an educational platform that actually teaches traders how to trade. So welcome once again. My name is Stephen Primo. If you're new to my presentations, I've been trading now for nearly 50 years, 5 decades. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years, I was a specialist. That's where we get the name specialist trading. Now, specialist doesn't mean you're any more special than anyone else, but in the old days, before electronic trading, the way you actually made a trade was you would call up your stockbroker. He would put you on hold and then call the floor trader on the floor of the exchange. Let's say he wanted to buy 100 shares of IBM. The floor trader would take down that order, write it down, walk over to the trader who specialized in making a market in that. In fact, that was one of the stocks I specialized in making a market, IBM. And you would buy or sell the stock from the specialist, and then he would go back and tell your stockbroker, well, you bought 100 shares of IBM at this price. And that's the way it used to be, very antiquated, very old fashioned, but that's the way we used to trade in the old days. So I traded that way, in that style, during the crash of '87 and the bull market that followed. I left the floor in the mid 90s to manage money and to also trade my own account. And about 15 years ago, I teamed up with my sister site, Pro Trader Strategies, with one goal in mind, and that was simply to educate traders. You see, we are first and foremost an educational company. In my 5 decades of trading, that's what I see, which has actually been the most abandoned by all traders. What most traders do is they follow the system of the markets. In other words, they'll say, well, I guess we're supposed to listen to some trading guru tell us what to buy or sell. Or I guess I'm supposed to listen to this indicator tell me if it's overbought or oversold. Or I guess I'm supposed to wait for the earnings to come out to find out what I want to do. You see, when you trade that way, you're basically saying to the markets, I don't know what to do, so you're going to have to tell me. And that really is why I believe 85% of all traders fail. I know this from personal experience because that's the way I used to trade nearly 5 decades ago. And if it didn't work for me then, I don't think it's about to miraculously turn around and work for everyone. The only thing that I have seen in my own personal experience and through other traders is when traders make their own trading decisions. They don't listen to some guy in a chat room. They don't wait for some announcement to come out. They have a simple plan in place, and then they just execute it on their own. So that's the service we provide. We take all the things that I've accumulated in my 49 years of trading and then teach them to students around the world. I'm happy to say we have students in over 115 countries and in every state in the United States. And you'll see the attention to detail we have today in trying to educate you in today's educational class. Now, before I begin, we're required to share this with you, so please take a moment to view our disclaimer. I'm going to share with you a lot of performance results by looking at these 4 steps, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And since we are first and foremost an educational company, all examples are strictly for educational purposes only. Now, we have a good crowd here today. If you'd like to get more education on a daily basis, probably the best way is to follow us on X, formerly known as Twitter. Every day I post anywhere from 5 to 7 different snapshots of signals that our methods or strategies have generated. I also post little bits of financial wisdom. So I suggest copying down our handle right there at SPC LST TRADG. Lots of great free education on a daily basis. Please feel free to follow us on X. Now, as I stated, when I first started trading, I did everything probably that you're doing right now as well. And I struggled for my first year. In fact, I couldn't make a dime, and I didn't think I was going to be on the floor that much longer. So I'd like to begin by sharing something with you that my mentors taught me, because at the time, I basically had about maybe 20, 30, or 40 indicators on my screens. I was following every trading guru. We didn't have chat rooms or trading rooms then, but we had a lot of, not blogs, but a lot of documentation and newsletters that we could read. And I waited with bated breath for all the earnings and the economic announcements to come out. And trust me, I couldn't make a dime. So I was lucky enough to have a couple of mentors on the trading floor. They were specialists themselves who had been on the floor some 30, 40 years. And this is what they said to me. They said, Steve, trading is really simple. It's the trader who makes it more difficult than it has to be. I mean, think of it. Are you making your trading much more difficult than it has to be? Are you looking at far too many indicators, watching far too many markets, too many time frames, listening to far too much outside noise that my mentors used to call like news events or so-called gurus or trading rooms? This is really what overcomplicates your trading. And think of it, it is the easiest thing in the world to overcomplicate your trading. Anyone can do it. You can be trading 20 minutes and overcomplicate your trading. You don't have to be that much of a long-term trader or have that much experience to overcomplicate yourself. But it takes a lot of conviction and it takes a lot of courage to simplify your trading. But trust me, once you do that, you'll get onto that road to success that you've been looking for much, much faster. And that's going to be the theme to today's 4 steps to consistency. You'll see how extremely simple these tactics are, but how they can really work for you. Okay, now in order to be consistent, you must always apply these 4 steps. And remember, it makes absolutely no difference if you trade crypto, if you trade daily bars of stocks or 15-minute charts of the British pound, or if you trade 5-minute charts of the E-mini futures. Absolutely makes no difference. You can apply these 4 steps to all markets. Now, excuse me, let's start out with step 1. And the first thing you have to ask yourself is, am I on the right side of the market? Seems simple enough, right? In fact, everyone that goes into a trade is almost assured that they are on the right side of the market, right? In fact, why would you take the trade unless you were on the right side of the market? But once again, look at statistics, and the facts say that 80 to 85% of all traders fail. You only lose money when you are out of sync and on the wrong side of the market. In other words, if you buy and the market goes down, you're not on the right side. If you sell short, not meaning that you sell and get out of a trade, but if you go short, bet that the market's going down and it goes higher, you're on the wrong side of the market. So this is the most important thing you have to do. So let's take a look at that chart again, Adobe, all right? And get used to this. We're gonna be looking at this for a lot of examples here. So once again, we could look at this and say, well, we really don't have an idea. It's going up, going down, going up. But here is the most powerful yet the simplest way to define what the overall trend is. What my mentors taught me is, regardless of what market, regardless of what time frame, you must always apply the 50-period simple moving average. It must always be on your chart. And then you ask yourself, where is price in relation to the 50-period simple moving average? Because if price is below, if the majority of price is below, well, then the overall trend is down and you do not want to be a buyer. You don't want to go and be out of sync with the overall trend. But if price is above, as we see here, well, then the overall trend is up and we will only be a buyer. We will never go short above the 50-period moving average, and we will never go long, we will never buy below the 50. Why? Because trading is a numbers game. It doesn't mean that this works 100% of the time, but if you follow this simple rule, you will put the odds in your favor to be more consistent. Now, if you don't believe me, go back and look at your last 10, 20 trades. I can almost guarantee you that the reason you lost money was because you were buying below the 50-period moving average and going short above the 50-period moving. So in this example, we are obviously above. So that's telling us the overall trend is up. Therefore, we want to look for a buy setup. Now, let's say you're a student of candles, okay, candlestick patterns, and you see right here, there's a bullish engulfing pattern. It's a very positive pattern. So you say to yourself, okay, well, since I'm in sync with the overall trend, I'll take this buy signal, but I'll go long if we trade above the second bar in that formation. Okay, that's a sound enough plan. That sounds good. Let's go on now to step number 2, which is, where do I place my initial stop? Now, most people say, well, wait a minute, I thought we're supposed to find out where we get out with a profit. No, you first of all have to think, what if I'm wrong? What if this doesn't work? How much am I going to lose? Where should I get out? Okay. Now, in our courses, we have upwards of 6 or 7 different stop placements for all of our students. But I'm going to share with you just the most generic, the simplest way to define a stop, and that's what's called the most recent short-term pivot low. And the way we do that is, if we were to buy right here, you want to go backwards and see where the most recent short-term low is. Now, a low is a 3-bar pattern, a pivot low, where you have a low followed by a lower low and then a higher low. These 3 bars kind of form this V approach. So the stop would be placed just below the lowest of those 3 bars right here. Okay, very, very standard benchmark type of stop placement. Once again, we offer numerous different stop placements for people that want to take on a lot more risk, for people that want to take even less risk, but we'll just use this generic one. Okay, this now leads us to step number 3. Now we can ask, what is my profit target? And the reason why we want to know where we're getting out if we're wrong first is because that's going to help us define our profit. For example, if we were to buy here and all of a sudden it turned around and went down and we lost money, how much would we lose in terms of points? Not how much dollar amount, because everyone has different share size, but how many points would we lose? Well, you just simply calculate where your entry point would be and where your exit point would be. And in this case, it's 11.25 points. Now you ask yourself, am I willing to risk 11.25 points? Is that okay? And if you say, sure, okay, well then what we want to do is at least make twice that amount. That is a good risk reward ratio. We're making twice the amount we're risking. So twice the amount of 11.25 is 22.50. So we would just simply add that to where we would enter, 22.5 points, and this gives us our exit level right here. So now we know, even before entering into the trade, where we're going to enter, because we're on the right side of the market, where we're going to get out if we're wrong, and where we're going to get out if we're right. This is the way a professional trader trades. You know all these things prior to even entering. I can't tell you how many new students I get that say, well, I kind of figure that on as I go along. I kind of figure out where I place my stop and where I'm getting out as the trade unfolds. Well, that's just more like gambling. That's not really trading like a professional. I'm trying to instill things that will last you a long time. And this is a very sound but fundamental way and simple way in which to apply. This leads us to our 4th and final step, which in my opinion is the most important, and that is, how do I protect my profits? I would venture to say that probably the most uncomfortable feeling a trader can have is to have a trade in place on paper, having a very nice profit, and then seeing that paper profit turn into a major loss. Probably one of the worst feelings, because you were feeling great and thinking, I'm going to be exiting pretty soon with a nice amount of cash, and then you watch the profit dwindle and now you have a big loss in your hands, okay? So you want to protect that profit if you happen to have one. And we can do this by what we call our 50% rule. And what that means is, if we were to enter right here, and this is where we want to exit with a profit, where would the halfway distance be? Well, it would be somewhere around here, okay? That's the 50% level. So this rule states that if price gets up to that level, either a little before or a little after, it's not magic, it can be just around here, it's up to you. What you want to do is cancel this stop and move it to where you entered. That way, if we get up halfway and then we start to roll over, well, you didn't have a nice paper profit turn into a loss. That way, at least you'll just break even. So you're not going to sit there and go, gosh, this doesn't work. How come I always get into the wrong markets? How come my method never works? That way you protected yourself. So this is what I feel the most important thing, especially in the beginning. So let's watch the trade unfold. We haven't entered yet because it went down the next day. But now we're in the trade. So we've entered. And we just simply watch and wait to see. And at this point, we're at the 50% level. So we're going to cancel this stop placement right here and move it up to where we went long, right here. So now what we're doing is playing with the house money. We have nothing to lose. Now, there's a number of ways to trade this, and we teach you in our courses and work with you. A lot of our students like to exit entirely at the 50% level. Some of them like to take half off the table. In other words, if you have 200 shares, they'll sell 100 shares and move the stop unchanged for the remaining portion of the position and then get out at the exit. There's a lot of different ways, but the simplest way is just to move your stop up to unchanged. Now, the only thing left to do is now to watch the trade unfold, because you've moved your stop to unchanged. You're not risking anything. You have your exit in place, your limit in place to get out. And so this is the way trading really is. I've often told my students, if you're trading correctly, it's very boring. You know, if you're trading and you have 3, 4, 5 screens in front of you and you're yelling and screaming and you have phones ringing and you're trying to calculate a number of trades at the same time, that's, once again, that's overcomplicating. Anybody can do that. It doesn't take a lot of character to overcomplicate your trading. But trading should really be like fishing. It should be like you go out, you cast your line, and you just wait. If that's the way trading is for you, you're trading correctly. You're trading like a professional. All right, so let's see what's happening. Let's watch the trade unfold. We have our stop at unchanged. We have nothing to lose, and we have our limit here for a profit at 247. Let's watch the trade unfold. It's kind of going lower to sideways, heading up a little bit, but now it's ultimately getting us out. We made 22.5 points, not based on any news or earnings or what somebody said online or what somebody said in a blog or in a chat room, not based on an economic indicator or earnings. It's based on you, once again, just applying a simple way of trading and putting you in charge, where you don't have to rely on an outside source. Remember, once again, in my 49 years, almost 50 years of trading, the only traders I know who are still around for my days on the trading floor are the ones that make their own trading decisions. They don't go to chat rooms, they don't subscribe to blogs. They simply have a plan in place and they execute it like this, okay? Remember, trading is simple. It is the trader who makes it more complicated than it has to be. Let's look at another example, okay? Let's say you are a technician, and we look at this older chart of FSLR, okay? You're a technician, you look at a lot of technical analysis, a lot of patterns, and you say to yourself, hey, this is a classic bullish wedge, okay? So how does this work? Well, the standard way of applying this is when price, you see this kind of downward approach here, when price closes above this down line, and you have this nice support here, this is a very bullish pattern, and usually price will go back to the old high or even higher. So let's say you've been tracking this stock, you've been waiting for it, you're real excited. The guy in the chat room says you got to buy this if it closes above that downward line. So you're all ready and set to go, and lo and behold, the very next day, it closes above there. So what do? You jump in and you buy, because you can't wait. You're probably going to make a ton of money because it's probably going to make new highs, right? Well, what's the first thing we tell our students? Step 1. Are you on the right side of the market? Now, I know you probably think you are. Most of our students say, well, Steve, it's a perfect technical analysis pattern. It's been around for years, for decades, for ages. It works all the time. I have to be on the right side of the market. But that's not what we teach our students around the world. The first thing we teach our students is to apply the 50-period moving average. And then you ask yourself, where is price in relation to that 50-period simple moving average? Now, going back about a week or so, it was above the 50, but for the past 1, 2, 3, 4, 5, 6, 7 days, it's been below the 50-period moving average. More than enough for the market, not me, not some guy on TV, but the market to tell you, I want to go lower. The overall trend is down. So the market is telling you it wants to go lower. So why are you fighting it? Why are you trying to buy? So if you'd taken our classes, you would have said, okay, I'm not going to buy this. It probably is not going to work out. Remember, the odds are not in your favor to buy below the 50-period moving average. And look what happened in the next couple of days. You may have been even stopped out, and you would have been sitting there thinking, why did I buy this? Gosh, I've been going down from the minute I bought it. So let's say you never bought it. You say, wow, I really dodged a bullet there. I'm glad I learned about this 50-period moving average rule. And you say, but I can still trade this, right? So I can go short. And you say to yourself, well, I'm a technician and I see some type of ledge right here, some type of support. So if we trade below there, I'm going to go short. So that's going to be my sell area right there. Okay, that sounds like a good plan. You're below the 50-period moving average. You can go short below the 50-period moving average, buy some puts. That's a good plan. All right. Step number 2, where do I place my initial stop? Well, we're going to, once again, we provide you with 6 or 7 different stop placements. Let's use our standard basic stop, which is in this case, a most recent pivot high. So if we were to go short right here, buy some puts, whatever we decided to do, go back and see what the most recent high was, and that would be right back here. Now, a pivot high takes 3 bars, okay? You have a high bar here, a higher bar here, and a lower. You kind of make this kind of arrowhead approach. So this is where you would place your stop, just above that, okay? So you would enter to go short here, and if you were wrong, you would be stopped out here, which leads us now to step 3. Now we can ask, what is my profit target? Remember, our profit in this case is going to be determined by where and how many points we're willing to lose. So if we were to enter here and all of a sudden it just went straight up, how many points, not how many dollars, but how many points would we lose? Well, in this case, it comes out to 8.20 points. So if you can risk that amount, if you say, I have enough cash in my account to risk 8.20 points for 100 shares, maybe 500 shares, it's up to you. Well, you say, okay, that sounds good. So you want to now double that amount. Twice the amount of 8.20 is 16.40. So since we are now betting for this market to go down, we are going to subtract 16.40 from our hypothetical entry, which would come down here, and this would be our exit point. We would place a limit to cover right here. So now we know where we're entering if it trades below to go short. We know where we're getting stopped out if we're wrong, and we now know where we're exiting if we're right with a profit, all before we've even entered the trade. This is the way professional traders trade. They know everything about the trade before even getting in. Which leads us to the 4th and final question. How do I protect my profits? Because what if this trade, the minute we got short, excuse me, went straight up? We'd feel terrible, right? We feel, wow. And even worse, what if it went down and we had a profit, but only on paper because we haven't exited yet, and then it decided to go right back up? Then we feel a lot worse. So we want to incorporate the 50% rule, meaning that if price travels to half the distance where our exit point is going to be, then we'll cancel this stop here and we'll move it down to unchanged. That way we won't risk anything and we won't lose any money if it decides to turn around and go back up. So let's watch the trade unfold. 1 bar, 2 bars, and then 3 bars. Guess what? We are at the 50% level. So now we're going to cancel this stop and move our stop to our entry price. So now we're not risking anything. Once again, we're playing with the house money, because if it goes up, we didn't lose any money. And if it goes down, well, that's great. We're going to have a profit. This is the way to trade. Protect yourself, because we never know what's going to happen in the markets, which leads us to the only thing left to do is to watch the trade unfold. Remember, you've got everything in place. You've got your stop in place. You've got your exit in place with a profit. There's no reason to be looking at 20 different indicators. There's no reason to be going to chat rooms to find out what to do or listening to guys on TV. Listen to the market. In fact, that's the only thing you should be listening to, not some outside source. Take it from someone who knows. I used to do that. I had newsletters to about maybe 20 or 30 of the so-called trading gurus of the time, had about 20 or 30 indicators on my screen, and was following far too many markets, and nothing made any money. So that didn't work 50 years ago. I don't think it's miraculously going to start working today. Follow this plan and just make your trading boring, just as if you were fishing, because the only thing left to do is watch the trade unfold. You have everything in place. So let's see what happened. The next day, wow, we went down really well, going lower, and then finally we got to our point and made 16.5 points. Not looking at any news, any indicators, just following our simple plan. These are the 4 steps to trading consistency. You now know them. You can start applying them as early as Monday, okay? There's nothing you have to buy here. This is our way of trying to educate you, to show you in good faith that we really are an educational company and we want you to succeed. If there's one thing I've learned in nearly 5 decades, there are more than enough profits to go around on a daily basis for everyone. It's not like there's a finite amount of profits on a daily basis and you have to capture it and hurry up and get yours before someone else steals it from you. You're not competing against anyone else. The market is asking you to come along with it. That's your job as a trader. It's a 2-step process. Follow and listen to what the market wants to do and just jump on board. That's all you got to do. It's that simple. Remember, trading is simple. It's the trader who makes it more difficult than it has to be. Now let's look at some other markets. These are older markets here. There's a 1-hour chart of the British pound. This is one of our strategies that generated a buy signal. We would have placed our stop right here. Here's our 50% level. In just about 3 hours we got there. You would have moved our stop up to unchanged where we entered right here. And then we exited for a 95 pip gain. That's roughly in just about a day, $1,000 per unit that you potentially could have captured using the same process. Here's an older chart of SMCI, just a very quick short profit of 6 points. Here's our buy setup, our buy signal if we traded above. Here's our stop just below. Got up to the 50% in roughly 3 days, and in 4 days made an exit with 6 points, okay? Another example here was a buy using one of our strategies in NVIDIA a long time ago. Our stop was the bar right before. At the halfway point, we could have exited half our position or waited until we got out about 3 days later with a 14-point gain. And then finally, this was, sometimes you see how this works. It works even better sometimes on the gap ups. Here's a buy signal using one of our strategies. The stop was just below. Here was our 50% level, but we never had to worry because just 1-2 days later, we exited because we gapped up above the 50% level with a 17-point gain in just 2 days. And look what happened after that. Went straight down. Okay, now we just gave you 4 steps to consistency. Once again, they're yours free. You can start using this as early as Monday. How would you like to have a couple of more edges like that? Entirely different, can be applied to any market, any time frame. Or how about maybe 5 or 10 more edges like that that can be applied to all markets, okay? Well, we have a great offer for all of you attending the Traders Corner conference today. We're going to offer you our Trading Floor Edges course. Now, this is a 10-video course, which includes over 49 years of trading experience. It's things that I've accumulated in my 49 years that you won't find anywhere else, because most of the things I've accumulated have come from my years on the trading floor and taken from later days when I was managing money and also trading my own account. Many more high probability trading edges similar to what I shared with you today, but entirely different. 2 more techniques that will elevate your trading. How to be in sync with the overall trend. I share with you one of the ways, which is using the 50-period moving average. 3 more different ways on how to do that. 3 more steps to a successful trade. Here are some of the best things, how to fine-tune your entries. So many of our students say, well, Steve, my strategy is okay, it's just my entries are improper. I'm getting in too late or getting in too early. Okay, we have 3 steps to a successful trade. And we also show you how to fine-tune your entries as well as next level exiting techniques. Now you're going to learn how to exit in any market and in any condition. Now you can apply these edges to any market, any time frame, but here's one of the best things in this 10-video course. It's what we call our superior candlestick trading edge. I know a lot of students trade with candlesticks. I know I do. And if you haven't, I'm sure you possibly have in the past. But most students tell us that are new to our courses say that they didn't see the type of results that they were promised when they first started trading candlesticks. They just have the consistency. Let me share with you what I mean here. Here's an older chart of W-day, workday, okay? As we can see, we're in a nice uptrend here. Higher highs, higher lows. Now, the standard format for trading candlestick patterns is as a reversal pattern, meaning that you're looking for a pattern that tells you that the trend is going to reverse. So if we're in an uptrend right here, you'll be looking for a candle pattern that's telling you that that uptrend is going to cease and is now going to go lower. And what do we have here? One of the most bullish, or I should say bearish patterns right here is a bearish engulfing pattern, okay? So If you were following the traditional way of trading candlesticks, you would have sold based off that. And look what happened after you sold, okay? A loss the very next day or two. This is what a lot of students tell us. They say, well, you know, I have some little wins every once in a while, but most of the time, I'm not seeing the type of results I thought I would get. Well, the candlestick pattern we're going to be sharing with you would not have sold here at all. In fact, it would have bought just 3 days prior, and you could have captured 35 points in the following week. So this is what we're going to be teaching you in its entirety, the superior candlestick trading edge that is included in this 10 video course. Okay, so let's break this down. Now, you're going to get many more techniques, just like the ones I share with you today, along with a superior candlestick trading edge. And remember, all of these things you can apply to any market, any time frame. So it makes no difference what you trade, what system. It makes no difference what market, crypto, currency pairs, makes absolutely no difference. Now, normally, excuse me, this 10 video trading course goes for close to $1,000 because it's jam-packed with that much information. But here's what we're going to do. For a very short time, we're going to discount it down to only $19. This is for a very limited time only. Think of it, $19. I'm sure most of you can't even go out to lunch for less than $25, $35 today. And that could be even by yourself. But if you start to go out to lunch with someone else, then we're talking about $50, $60, $75, okay? But for $19, you're going to get close to 5 decades of tips, techniques, and a candlestick trading edge that I've accumulated that will really increase your odds for consistency. Think of it, $19, but that's for a limited time only. Now, we're also going to throw in an extra bonus. If you decide to join the 10 video course for the $19 discount, along with your trading edges course, we will also include a 50% discount on any other product we sell. So any other strategy, any other indicator, any other technique, you will automatically get 50% off, okay? This is a great, great way to turn your trading around. It's a great way to become acquainted with us. I see a lot of new names here in the course today. So if you're unfamiliar with what I teach you, remember, we are here to help your trading. We're not trying to sell you some $10,000 system. We're here to teach you and educate you. Once again, we are first and foremost an educational company because that's what's missing from most students. It's the education, so they feel as if, well, I don't know enough. I haven't been trading long enough, so I'll let someone else decide for me. I'll let some system decide for me that spits out the buy and sells. I'll let some guy in some trading room decide for me. Or I'll let some guy on TV decide for me. And remember, once again, the entire industry is based on that concept. And if that works so well, why is it estimated that 80 to 85% of all traders fail? It's because that really does not work. And it's been that way since I started trading some 5 decades ago. So educate yourself and we'll work with you. We'll be there with you step by step, side by side with you, so that you can finally get to that point where you have enough confidence that you can be in charge of your own trading for the very first time. You owe it to yourself to take your trading to the next level. Take charge of your trading and take advantage of this deep, deep discounted offer, okay? Here's how to do it. Contact my sister site, which is Pro Trader Strategies. They're in charge of all the discounts and all the tech support. I would highly suggest giving them a call right now at area code 310-598-6677. They have trading consultants that are manning and on the phones right now. They'd be happy to either take your order or answer any questions you have about that 50% discount, what else they can include in that for you. Now, that link you see at the very bottom is the link that will take you to the info page about this 10 video course, but it's not a live link. I'm not sure if they have posted the link on the chat box or so, but you can copy that down, or I would, like I said, probably the best thing is just to call Pro Trader Strategies. They're there to work with you. Don't feel intimidated like you have to purchase anything. Even for $19, they're there to work with you, and they'd be happy to answer any question you may have. I think I just have about 5 more minutes left before the next speaker. I don't want to take up anyone's time. If there are any questions, you can read them to me now. I'll be happy to answer them.
I haven't seen any questions yet, so
well,
people from the chat, you should. Yeah.
Let me just, there's one of the main questions I get from new students, and in case someone is typing this down right now, a lot of students say, well, Steve, I haven't been trading that long. I don't really know a lot, or I don't, I've usually been a fundamental trader. I usually have been trading off earnings and stuff, and I'm ready to turn my trading around, but I don't understand this type of trading. don't worry. Every one of my new students, regardless if you're trading for 30 years or 30 minutes, you all will get my private email address. And it's the next best thing to having me sit next to you, because you can email me whenever you like, on the weekends, during market hours, prior to the market opening, after the market close, makes no difference, and I will get back to you as soon as possible, okay? So you never have to worry about being thrown to the wolves and say, well, I bought this and now I don't understand anything, what do I do? You can always contact me, and that email comes directly to me. It doesn't go to a trading assistant, it doesn't go to an intern, it doesn't go to a salesperson, it comes directly to me, so no one else will see it. So that's one of the extra perks as well. It's like having a 50-year trader sitting next to you and explaining everything to you. So if you ever have any questions, I'm readily available, okay? Well, I think if there are no further questions, I think everybody got it, or everyone's maybe calling up Pro Trader Strategies right now. And I would hand it back to you. I think we have about 5 extra minutes, but excuse me. I would just highly recommend giving them a call at 310-598-6677. They'd be happy to work with you and take advantage of that special $19 offer, because it's not going to be going on for much longer, okay?
Thank you, Mr. Primo. I put the offer link as well in the chat. So, and I put the phone number in as well.
Great. Thank you so much, Anthony. I appreciate it. And thank you to everyone attending today.
Thank you. Thank you for sharing those timeless principles and for emphasizing the importance of structure and discipline. And thanks for getting us back on time. We were a little bit behind today, so I appreciate that. We truly appreciate the value you provided today, along with your generous offer. So, I mean, $20 a month, how can you miss it? Everyone, Steven's link has been posted in the chat box. Thank you again, Mr. Primo. We appreciate you being here today.
One last thing, Anthony, I'm sorry to step in,
no,
but
it's okay.
That's a one-time fee of $19. It's not $20 a month. It's not a monthly fee. It's a one-time fee.
Oh, I apologize. I can't believe it just got that great.
Just didn't want to,
I was thinking it's $20 a month, and that was a good deal.
One-time fee. That's why I say this is discounted down from nearly $1,000 down to a one-time fee of $19. So take advantage of that before it goes back up to $1,000. I think it's only going to be lasting for the next couple of days.
Yeah, honestly. Thank you, Mr. Primo, for
You're welcome.
making that. Yeah, thank you. All right. Next, we're honored to welcome Barry Burns of Top Dog Trading, a true pioneer in the trading education space. Barry has spent decades studying the markets and is widely recognized for his contributions to technical analysis and trader education. He is the author of Trend Trading for Dummies, published by Wyse, and has been a seminar presenter for major global exchanges, including the CME Group and Eurex. Barry is also the creator of the Top Dog Trading 5 Energy Methodology plugin for Metastock. He's received multiple Reader's Choice Awards from Technical Analysis of Stocks and Commodities magazine, and has published extensively across leading financial outlets. He founded Top Dog Trading to help traders shorten their learning curves by focusing on what truly matters, price, behavior, structure, and professional market logic. Barry's presentation is titled How to Trade Pure Price Action. So everyone, please welcome Barry to the show.
Well, thank you very much. Appreciate that introduction. And I'm thrilled to be here. I really appreciate being invited to this prestigious, I gotta say, I'm really impressed, prestigious event that you put together with some of the best traders. When I saw the lineup, I was impressed. I thought, wow, you guys somehow pulled together some of the best traders out there, some of the most in-demand traders and teachers out there. And, you know, it's not easy to get people's schedules organized like this to come together. So I know that it was a logistical challenge for you. So congratulations, and you're doing a great service to the trading community. Let's test our technology here real quick, just to make sure that everything's working good. If you would please type into the questions box if you can hear me and if you can see my slide. The slide should say, welcome to the Top Dog Trading webinar, how to trade with pure price action. Make sure technology is behaving today. And let's see here. Yes, okay. Thank you. All right, thank you, Jeff. Thank you, Craig. Thank you, Dennis. Thank you, A. Thank you, Douglas. Thank you, Donna. Thank you, Luis. All right, excellent. Muy bien, ausgezeichnet, sehr gut. See, I'm international, citizen of the world. And I know we actually have people from around the world here today, so that is amazing. And I want to also tell you that what I'm going to share with you here today about pure price action, one of the things about trading pure price action is that it is very adaptable to any market, any time frame. So whether you are in another country, whether you're trading a market outside the US, whether you're trading Forex or crypto or stocks or futures, price action never lies. It is always the truth. So indicators, they can be helpful, but indicators do what they promise. They indicate. But price action, they don't indicate, they tell. So how to trade pure price action is our topic for the day. And I'm actually very, very proud of this presentation. And I want to share with you that what I'm offering here today, and by the way, I'll say this up front. Unfortunately, I did mess up. So please forgive me. I did make one big mistake, and I know you're all going to be really, really mad at me for this. But fasten your seatbelt. I'm so embarrassed, but I didn't bring anything to sell today. So at the end of this presentation, I know you want to buy a whole bunch of stuff from me, but I got nothing to sell. So I apologize deeply from the bottom of my heart for that. But I do have some stuff I can give you for free. So we'll make up for it that way. All right, so here is our legal disclaimer, and you've probably seen this before, but I know on these multi-speaker events, people come in and out during the day, so it's very important that you do see this. I'm not going to read it for you, but just understand that what I do want to say about these legal disclaimers is that they are probably the most important part of your trading because, again, just like pure price action, these legal disclaimers, these regulatory agencies require that we share these with you. That's how important they are. Again, this is the real deal. This is the non-hype part. And I understand, written in legal language like this, it's not the most entertaining thing to read or most exciting thing to read. But if you read it and you follow it, it will keep you on the right path and help you from blowing out your trading account and help you avoid any type of hype. So, here's a little introduction. Of course, you were already introduced to me very nicely, so I'm not going to spend too much time on this. In fact, I don't think I'll spend any time on it at all. We'll just go through the visuals here. But yeah, I've been around the trading world for many, many, many years. In fact, last Wednesday was my birthday and I turned 67. And I started trading when I was 8 years old. My dad was a stock trader and he started teaching me when I was 8. So yeah, almost, next year will be 60 years. So 59 years of trading this year. So been doing it for a minute. And I have seen a lot of things. I've got a lot of repetition under my belt with trades, pattern recognition I've developed. I've seen the markets evolve and move because the markets they're not static, they're always dynamic, very, very important. So learning from somebody who has that kind of long-term experience is very, 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 very important, very, very, very helpful. All right. Again, we've got a bunch of reviews. So I've got a YouTube channel, by the way. I told you I got a lot of free stuff I can share with you. So I've got a YouTube channel. Just type in Top Dog Trading into the YouTube search bar. This is an old screen capture. We got about 120,000 subscribers now and hundreds of videos on there, obviously all for free for you to take advantage of. I've got a podcast. So wherever podcasts are available, you can find the Top Dog Trading podcast there. All right, so let's jump right into it. Thank you, Luis. You wish me a happy birthday. That's very nice. All right, so let's talk about price bars, price action. I don't personally get too deep into traditional Japanese candlestick patterns. I use them, but I don't use the classic terminology. What I do is I look at the logic of what the bar is telling us. And that's why we're going to start out very, very simply, one bar price logic. Now, for some of you who've been trading for a while, the beginning of the presentation is going to be a little basic for you. But I promise you, by the end, we're going to go all the way from beginner to intermediate to some very, very, very advanced stuff. And I don't think you hear a lot of what I'm going to share with you toward the end. And even if you understand price action, again, to bring it down to the logical level and not just take, okay, you read a candlestick book and they tell you, you know, this pattern with the flowery poetic name, it means this. Well, how do you know that it means that? And so when you're trading your money, you want to be self-empowered with the why. Why does it mean that? Does that really make sense? So that's what I'm going to walk you through so that you're self-empowered with this knowledge. You don't have to believe me. You don't have to believe a book. You don't have to believe anybody. You just follow the logic of the market. All right, so this bar, what it means is we talk about the real body, the open, high, low, and close. So the open market opened here this day. I think that's a daily bar, whatever price, whatever time frame it is, 1 bar, doesn't matter the time frame. So let's say it's a daily bar. So the market, whoops, there we go. Market opened at the low. It went up here to the high during the day, and then it came off the highs a little bit and it closed at this level. So the colored part of the bar for beginners, we call that the real body, the real body. And that is the open to the close. If the close is above the open, then they color the bar green. And this part up here we call a wick, and it means that was the high of the day. So what is the logic of this bar? Well, it's very bullish. Now, there's 2 aspects to it being bullish. It's not just that it's red or green. Can't be oversimplistic with trading. The dollars are in the details. So one of the things that makes this a very, very bullish bar is, number 1, the length or the height of the bar, a very wide range bar. If it wasn't a real wide range bar, but it was still the same pattern, it wouldn't be as bullish. The second thing that makes it a very bullish bar is where it closes in relation to the high. So anywhere within 25% of the high is best, maybe 33% is okay. But those 2 things put together mean, yeah, after all was said and done, during the day, all the news that came in, all the rumor, all the gossip, everything, the market decided, market participants, when I say the market, the people trading the market, the algos, the computers, everything, the decision was, oh, after we've assimilated all the information from the day, yes, we started down here, but we closed way up here, meaning market participants said, oh, we're very bullish on this day. And conversely, exact opposite, wide range red bar. So from the high to the low, wide range. Open now is at the top, close here is toward the bottom. That's why it's colored red. Okay, small wick at the bottom, so close very, very close to the low. And so that is a very bearish bar. So the market started out up here at this price, went all the way down to this price, tested it, and then just closed here at the low, meaning market participants said, wow, very bearish day today. We think the market's worth this low price after all the information was assimilated. Now, the next type of 1 bar logic is this pattern. So this pattern is, we've got a real body here, and that's your open, and that's your close. And we've got our low, and we've got our high. Now, again, for this type of price bar, we want it to be a wide range bar from low to high. But now we've got a narrow range real body. So what does this bar mean? What's the logic of this bar? What are the market participants telling us by mapping this on our charts? And by the way, I define technical analysis as the map of mass psychology. Might want to write that down actually. Charts are the math of, or the map of mass psychology. They're maps. Now, what is happening here? There's 2 different things. So first of all, we got a wide range bar, as I said, but look at this long wick at the top. So what that means is, all right, again, market opened here, tested all these prices up here, all these prices, but by the time the market closed, it rejected all these prices and said, now we decided that the market is only worth this much. And you go over here to the y-axis and whatever price that is. So this I call a rejection of value bar. Okay, a rejection of value bar. It's rejecting all these upper prices, and that makes it a bearish bar. Now, one of the things that, referencing something that I said in passing, be careful of just oversimplifying things and saying, well, if the bar is green, it's bullish, and if it's red, it's bearish. It's not that simple. This real body is green, but it doesn't matter because the open and the close are so close together that it's negligible. It's within the realm of noise of price action. What really matters here is not that this is green. What really matters is the rejection of all these prices above it. So it is still a bearish bar, even though the real body is green. Okay, and then the opposite. Again, I just like to show you bullish and bearish versions of same things and little variations, because this is what you're going to see when you're trading real price action. They're not always going to be, perfect. But again, the let's see, a price opened here, it closed there, and I'm intentionally showing you these rejection bars with the opposite color of what the bar means. So we opened here, we went all the way down here, all these prices were traded, trades occurred, buys and sells were matched up, all these lower prices here. But by the time the market closed, it's the market participant said, no, we don't feel the market is worth these lower prices. We actually are more bullish, and that's a bullish bar, even though the real body is red. It's within the realm of noise. We close within the top 25, 30% of the bar. And again, this wick down here has to be very, very long. That's the key. If it's just a short wick, it's not a rejection of value bar. It's got to be a wide range bar, and the wick needs to be, oh gosh, at least 3 to 4 times the range of the real body. Okay, makes sense? So rejection of value to the bottom price, and therefore it's a bullish bar. Now, so those are the basics. Those are the two 1 bar patterns that I trade. Now, of course, we're not trading just 1 bar. So let's put together 2 bar price logic. But now we're building off of the 1 bar. So we got this bar first. That's a bearish bar. Open at the high, close near the low, red. Next bar, open near the low, close near the high. So this is a 2 bar bullish pattern. And that means that everything that was said and done in the previous bar, let's say it was a 5-minute bar this time, just for giggles. I was just going to say something else, but just for giggles. So for 5 minutes, yeah, the market was bearish. And then something happened in the next 5 minutes where the market changed its mind and said, oh, now we're bullish. So from bearish to bullish, therefore the 2 bar pattern together is a bullish pattern. And if I see this at a cycle low, then I'm very happy to buy that pattern. Markets, as I said earlier, are dynamic. They're constantly changing. They are not static. So things are always changing. The market's changing its mind. Sometimes it's uncertain. It doesn't know what to do. And I'll show you examples of that as well. And then other times the market comes to a conclusion, a decision, a sentiment, if you will, and that's when we trade. So these patterns we trade bullishly. Here we trade this one bearishly. So again, same thing. And this time we have a green bar and then followed by a red bar. Now again, wide range, both are important. Wide range bar, the green bar, wide range bar, the red bar. If either one of these was a narrow range bar, it would not be a 2 bar bearish pattern. So this shows that, oh, the market has completely discounted the previous bar's sentiment. This bar says, oh, we've done a 180 on our evaluation of the market now. And who knows what happened during that time? It could have been news, it could have been gossip, it could have been rumor, could be anything. It doesn't even really matter what it is or what the reason is, because you'll hear all kinds of reasons from people on CNBC and Bloomberg, Financial News Network, whatever. But all that really matters, again, is the price action. The reason could be interesting to know, but the price bars never lie. This is the sentiment of the market, and we follow the money. Basically, when we follow price action, we're following the money. And I like to say, follow the money, honey. And now, here's another 2-bar price logic. So here we got a green bar, not a real wide range bar, but definitely closes in the, toward the top of the range. Then it's followed by one of those rejection of value bars. So this 2-bar pattern is bearish. Again, from this day to this day, or from that 5 minutes to that 5 minutes, or from that 1 minute to that 1 minute, the market sentiment has changed. Okay, and so this is a bearish pattern. If I saw this, and by the way, these price patterns are very important to read in the context of the overall chart. We don't just trade these 2 bars just because these 2 bars set up. We want to see it in a certain context, and I will get to that here in a minute right now, but we're doing building blocks, right? We got to start with 1 bar, then go to 2 bar, and then I'll show you how we trade it in the context of the overall chart. All of it is important. Here's a rejection of value 2-bar pattern to the upside. This bar had been somewhat bearish, and then rejection of value. Notice trades occurred all the way down here. So some of the sentiment from this bar, some of the people said, oh, bearish, okay. But all these trades, when all was said and done, were rejected. And by the end of the bar, it closes up there. Bullish 2-bar pattern. And if this was at the cycle low, I would be very happy to buy that. Now, what's this 2-bar price logic? So, as I mentioned, sometimes the markets don't know what to do. Sometimes the markets are uncertain. And so this is what uncertainty looks like visibly on price bars. So we have a very bullish bar on bar 1. Bar 2 is narrow range from the low to the high, narrow range. So remember, this is why I said that for these previous price patterns, we need a wide range bar, because when we have a narrow range bar, it always means neutral. It always means uncertainty, no matter what. So again, the real body is green, but that is not a bullish bar just because it's green. The open and the close, very close together. Again, narrow range real body, narrow range from high to low. So this is a neutral bar. Now, how do we read this as a 2-bar price pattern? When we get a neutral bar after a bullish bar, the bullish sentiment is retained because it hasn't been reversed. So anytime we get a neutral bar, the bar before it, whatever sentiment that was, is retained. So we are still bullish in this pattern. Okay, now as promised, we need to read these in the context of the bigger picture. We're not just going to trade these bars just because they happen to occur somewhere in a chart. No, where they occur in the chart is important. Now, you've been able to sit back, relax, and listen to my little monologue. And of course, I wanted to give you the basics, the instructions on how to read these bars. Now, to really help you to own this information, to help you come into a place where you are empowered with this information. Real learning occurs when you interact. So guess what? I'm going to give you some quizzes. All right, so we're going to interact with each other here, and the rest of the seminar, the middle of the seminar right now, we're going to do some interaction. And by the way, don't worry about getting any questions wrong, because if you get a question wrong, that means that you're actually learning something. And that if I didn't ask the question, and if you didn't get it wrong, you would have come away from this webinar getting things wrong when you're trading real money. So here we're in a safe place, right? This is learning. You're supposed to get some stuff wrong. So this is the place to make mistakes. So I hope you get some answers wrong. In fact, if you get an answer wrong, I want you to go over to your window and open it up and yell to all your neighbors, hip, hip, hooray, I learned something new today. All right, will you do that? Well, you don't have to do it literally if you don't want to. But anyway, you understand what I'm saying. It's more important than you learn than to be right. And this is the safe place to learn. All right, so here we go. So for the bars marked with these arrows, did they validate or invalidate the price action of the bar that precedes them? All right, so what I mean by that is we'll take this first arrow, or this first bar that has the arrow underneath it. So we've got a bearish, 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 3 bearish bars, or 3 red bars, I'll just say. Okay, we'll just say 3 red bars. Now, this green bar, just this one single green bar, does this invalidate the downward movement? Does this create a bullish entry from price action? Go ahead and type that in. Thank you, Rob, our first brave soul. By the way, anybody who responds, whether you get it right or wrong, I just respect you for participating, because to me, that tells me that your learning is more important to you than your ego. No egos here, no egos. We're just here to learn. So again, when you go to trade with real money, then you really know what you're doing and you actually make money. All right, so again, I'm not going to call anybody out. I would never embarrass anybody, but I will just acknowledge people have answered. So thank you, Rob. Thank you, Lewis. Thank you, Lorna. Thank you, Tim. Thank you, Abeg. Thank you, Hans. Thank you, James. Thank you, Rod. Thank you for waiting for a name 30025 offline. Is that the name on your birth certificate? Thank you, Jose. Okay, so very good. So the correct answer is, does this, and thank you, Bill, does this bar invalidate the downward movement? And the answer is no. No, it does not. And why does it not? Now, I intentionally put this chart up and use this specific chart to try to fool you, because I wanted to find a place where the market actually did go up, but you can see it obviously. And so that's called forward-looking bias. When you can see what happened, then a person is more likely to say, oh yeah, this did invalidate the down movement and created a 2-bar buying pattern. But that's only based on what you historically see, and what you historically see here has nothing to do, in other words, what actually happened has nothing to do with whether that was a high probability buy trade or not. It's just, again, is it a high probability trade? No. Did it go up? Yes. But probabilities by definition mean there's not certainty. So sometimes what is lower probability will happen, but you don't want to trade low probability, because then you will have more losers than winners. So again, based on what we talked about, the reason it does not invalidate the downward move is because this green bar is not a wide range bar. It's a neutral bar. And so the bearish sentiment is retained. Okay, so very good. What about this one up here? Okay, let's look at this short. So we've got an upward move. Does this bar invalidate the upward move? In other words, would this be a valid 2-bar bearish signal? Type that in, and yep, very good. Good, Tim, Joseph, Jeff, Dennis, A, Jose, Rob, Lewis, Hans. Oh, gosh, absolutely. I think everybody got this one right. So yeah, so this one does, and I don't think I need to explain it too much since you all got it right. But so now it's a wide range bar as opposed to this one, which was narrow range and inside the red bar. But now, yes, we've engulfed the previous bar, wide range, close near the low, 100%. Okay, what about this bar? What about that bar? Does this bar invalidate the downward move? How would you define that bar? Type that in and show everybody your prowess. Yeah, that's right. It does not invalidate the previous down move. This is a neutral bar. Open and the close are equal. Got a little bit of a high there, but it's not super wide range. So we retain the downward movement. Right, and the bearish energy is still the sentiment that we maintain because it's a neutral bar. Nothing has changed. Nothing's gotten bullish. That market just paused for a bar and then continued to go down. Last one. What about this one? Does this bar invalidate the downward move? And would this be a bullish signal? Type that in, and that'll be your last quiz here for at least this chart. Yeah, you guys are getting it. You guys are all awesome. So, yeah. So thank you, Lewis and Dennis and James and Hans and A, and yeah, Lorena, very good. So yes, this one does invalidate the previous ones. Again, wide range bar from high to low. Remember, there's two things. The range, when I talk about wide range bar, I'm talking about from the high to the low. So we're including the wicks, or the shadows, sometimes they're called. And then wide range also in the real body from open to close. So this bar completely rejects and reverses the sentiment of the red bar. All right, you guys are doing great now. But wait, that's not all. I gave you an easier exercise to get you warmed up. And I made it easier by letting you see what happened afterwards. So now we're going to make it a little more difficult, because when you go to trade real money, you're not going to be able to see what happens afterwards. You got to trade on the hard red edge of the screen like this. So now our quizzes are going to be on the hard red edge of the screen, and you don't see what's going to happen. You can't have that forward-looking bias that I mentioned. So based on price bar formation, what would you expect to happen next after this bar? Go ahead and type that in and impress your friends, your family, your children, your husbands, your wives, your neighbors, members of the opposite political party. Okay, good, 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 good. And so a lot of people, now I'll give you bonus points if you can add why you think it would go up or down. Okay, because when you can tell me why you think it would go up or down, that tells me that you're not just getting it right because you got a 50-50 chance of saying up or down. But if you can answer correctly the reason why, then you know you understand the logic of the pattern, right? So let's see, James says closed higher to the higher side. Luis, wide bar 4 and 6 days before invalidated the bearish sentiment. Tim, long lower tail, closed above the previous close. Rob, up because of the rejected bottom. Okay, good. So yeah. Oh, that's a good one. Robert, I'm going to read Robert's fill the gap. The wick, thanks to you, Hans, the wick reject going down. Yeah, okay, so very good. And there's more too, but I'm not going to take time to read all of them just because we only have a certain amount of time. But very good. So that is correct. We have a rejection of value with this long wick on the bottom, wide range bar, long wick on the bottom, close near the high. Actually, also you could see it went down and it touched this support zone here. By the way, support resistance are not lines. It doesn't have to go down to the bottom of this bar exactly. Look at the real bodies. Where the real bodies are is where the real value of the market is, and it does. It goes down, bounces off support, and the market says, hey, you know what? We gap down. That was a good comment, by the way. Gap down, move down a bit, and then goes up, tests this low again, and says no. And kablambo, it goes, that's the bar that we looked at, goes up, and sure enough, it closed the gap. So very good. I'm really impressed that you understand the logic of it. That's the most important thing. let's do one more of these. All right, so now what about this one? Again, on the hardware edge of the screen, what will happen next and why? Again, if you can explain the why, then you've proven to yourself that you understand the market logic and reading the bars with the logic and not just guessing. So go ahead and type in your answers. Okay, good, Robert, good, waiting for name, good, Jose, good. Yep, very good, Bag, good, Lewis, good, okay, so yeah, and you guys are getting it. This red bar invalidates the previous green bar, so close enough to equal highs. Again, remember, we don't need it to go all the way up to this high of the wick. The real bodies is where the real resistance is. So it goes back up, basically a double top, equal highs, whatever you want to call it. Very good. You guys are rocking and rolling now. So now a double top confirmed with the red bar that completely negates the construction of the green bar. And that's exactly what happened. And down we went. All right, now let's add one more element. Okay, so you guys are doing awesome. Now let's introduce a third element to reading price bar logic. Again, as I said, we can't just look at price bars in isolation. We need to put together various things on the chart. So this one's a little more advanced. I'm going to introduce something here that I haven't mentioned yet, so we'll just see how it goes. On this one, what will happen next and why? Okay, with this green bar, what do you think? Answer now or forever hold your peace. What do you think? What will happen next and why? Why? Proves that you know what you're talking about. And it's not just that, oh, it looks good or it feels like it should do this. No, there's got to be a market logic reason. Okay, very good. Thanks, everybody. Appreciate that. So let's see what actually happened. So I didn't introduce you to this concept yet, but here's what happened. So this was the bar we were looking at on the previous chart on the hardware edge of the screen. And it did go up. Now, here is the new concept that I'm introducing to you. Support and resistance in combination with price bars. So with the previous one, let me go back to the previous slide. I didn't point it out, I did that intentionally, but here's our resistance levels. These two swing highs. And if you see, it kind of comes right into the middle of the green bar. So when we go to see what happened next, there's the resistance level. Now I've drawn it on. And so with this wide range bar closing near the high, we know that's a bullish pattern. But now there's also another thing that adds to the bullishness, that it slices through and closes above the previous resistance. So that becomes another factor in interpreting price bar logic. In fact, look over here. Here we've got the opposite. We've got a wide range red bar. So one bar logic is, yeah, that's a bearish bar. Wide range, open at the high, close near the low, but it didn't go down. Now, why didn't this one go down? Because support of the previous swing low, that's where it closed. And so the market participants saw this previous low and they stopped selling at that support level because they didn't have the confidence that it would follow through. So they had enough bearishness just to take it to the support level. And then they said, no, we're not confident enough that it's going to go through that low. So, because that low was already a place where the market participants had said, no, we don't think the market's worth less than that. We think it's worth more than that now. And so the question is, well, has the market sentiment still changed that they think this market, what is this, the Dow futures, is worth more than this? And so one bar impulse move, but then done, and up and up and up. Now, in this one, they had enough confidence to say, yeah, we think, even though previously the market participants thought, oh, at this time, we don't think that the Dow is worth more than whatever, 10,642. Oh, that's right there. But now they changed their mind. Again, markets are always changing their mind based on all kinds of factors. So now the market has changed their mind. They say, yeah, we do think it's worth more than that. We know that by the fact that it closed above it. It just sliced through that resistance level like butter. Okay, so there you go. That's price logic. Now I'm going to introduce you to something that is a little more, even more advanced, and that is volume logic. So we always use this along with the 5 energies. So what we're going to do now is we're going to look at large volume versus small volume. We're going to look at enough volume, but not too much volume. Too much volume, I mean, we can trade that, but in a different way. But not just large volume. That's not enough. Again, dollars are in the details. Remember I said dollars are in the details earlier? Well, the dollars that are in the details are, it can't just be a lot of volume. It's got to be smart volume. And what we mean by smart volume is smart money, professional participation. The professionals, well, they're called professionals because they make money doing this consistently. And so they're good. They know what they're doing. All right. And then finally, we're going to compare the professional versus the retail volume. Most retail traders lose money consistently. Most professionals make money consistently. So we want to compare these two and trade in the direction of who? Well, the people who make money. All right, so now the tool we're going to use for this is called the time and sales window. The time and sales window, this is not level 2, this is not level 3, by the way. Some people mistake it for that. Those are good tools as well. Well, level 2 is not that useful. Level 3 can be very useful. But today we're going to just talk about the time and sales window. Now, what is the time and sales window? The time and sales window will actually show you every trade that is taken. And this is much more valuable than just putting the volume bars down at the bottom of your chart. That tells you very, very, very little. That only tells you how much volume. But the time and sales window shows you every trade and breaks it down. So as you can see, we've got our timestamps over here on the left. Okay. This, by the way, this technique is for day trading, intraday trading. So we want to make sure when you pull up your time and sales window, you're going to want to change the settings. And so the first setting you're going to want to change is you only want it to actually show you actual trades. Normally, the default time and sales window will also show bids and asks. I don't want to see those. I don't care about those. Okay, those can come into play when you're using level 3, and they can be used. But for our purposes with time and sales, we only want to see trades. Why? Because bids and asks are not filled trades. Again, we want to follow the money. And a bid can be put in and pulled and taken out without being filled, meaning there was no commitment there. And we want to see where people have committed their money. That goes back to the saying, actions speak louder than words. So we want to see where people actually put their action of committing their money, which we know is very, very important to them. And so again, this does not lie. This is facts. This is not an indicator. This is data, real, raw data. All right, so we want to look at only the trades. Now, let me go back and I don't think wait a minute, oops, okay. Previous, good thing you don't have to be a professional PowerPoint presenter to be a good trader. The other thing we're gonna do is we want to size, see this column for size? So we wanna edit that as well. Otherwise, it's gonna show us every trade of any size. Now, this is the NQ, NASDAQ 100 futures. So generally, amateur traders, again, what we're doing is we're looking at the difference between professionals and retail traders, and we want to trade with the professionals. So retail traders usually don't have big trading accounts. So how many contracts are they going to be trading? Maybe one, maybe two. That's pretty typical. Maybe 3 or 4. Or you might get a few wealthy amateur traders that do more, but that's the outlier. The vast majority of retail traders are trading 1 or 2 contracts. I don't want to see that. All I want to see is what are the professional traders doing? And we do that by changing the parameters in the settings to, in this case, I said, okay, I only want to see trades where one trade, remember, each one of these is a single trade. This is different than the volume indicator, which will tell you how much volume was traded in a bar. This makes it more microscopic. This makes it more granular. I want to see the people who have enough money to trade at least 20 contracts on one trade, 20 or more. And so that's the key to set this up to do what we want to do. All right. So now some trading platforms, not all of them, but I wanted to show you this because this is actually pretty darn cool. Some, by the way, we call these our block trades. Okay, so when they're large amounts like this, that's called a block trade. So not all trading platforms have this, like I said, but some do. So you can plot volume, just like we were talking about volume at the bottom of your charts, but we're not going to chart regular volume. We're going to chart the block trades on the bottom of our chart and watch for them at our entries. So notice not every price bar has a volume bar below it. And in the middle, there's no block trades. So have you ever noticed how, or have you ever heard how people will say, wait for a trend and get in at the middle of a trend? Well, that's not what professionals do. And here's proof. No professionals are getting into the middle of a trend. When did they get in? They got in down here. They got in before the trend started. And then what's going on here? Oh, now they're getting out at the end of the trend. This is a hallmark of professional trading. They're getting in early and they're getting out early. The price, we don't know if this price is going to go up further or not, but the professionals are already exiting. They're not waiting for the market to turn around and get back profits. Now, as I mentioned, we want to compare amateur and professional volume. So now we're going to bring up 2 time and sales windows. The one on the left, I filtered to show only 1 or 2 contract trades, and that's it. So these are the amateurs. Then this one, I programmed to, let's see, oh, it looks like I programmed this one for 10 or more contracts per trade. So now this window shows the amateurs or the retailers. This one shows the professionals. Well, looking at this, here's another quiz for you. Just looking at this intuitively. And by the way, look, these are the same prices, 1205.75, 1205.75, 1205.75, 1205.75, 1205.75. There's a couple of 50s in there. So they're trading at the same price levels. But which would you rather, just looking at these 2 time and sales windows next to each other, type in, would you rather buy this market right now or would you rather sell this market right now? And why? Type that in. Again, answering these questions ingrains it into your brain cells so that after this webinar, you will have this, you will own this information. Right, good, Dennis, exactly. Yep, so Lewis, good, Jeff, good, Rob, good. Yeah, so you guys all got it good. Craig, Hans, Robert, perfectly. So yeah, see, it's pretty intuitive, isn't it? It's pretty intuitive. So, yeah, the big money is buying, the amateur money is selling. So we want to buy. Very good. Now, here's something that, again, I just threw this in. It's not, again, this is NinjaTrader, by the way. So NinjaTrader could do this on their time and sales window. Not all can. But some of them allow you to do things like this. So use a different color when they buy above the ask. So here we see at 10:08:34, they bought at 38:18.75. That's the ask. And then the next order comes in just a few seconds later, and see how it's light green? That means they're buying above the ask. That's very aggressive buying. They're willing to pay more. And you can do the same to the bottom. The color coding is not super, doesn't have a big contrast to it in mind, but you can make these any colors you want. So if you're colorblind, by the way, Jose, as you said, just, make them the colors that work for you. It doesn't have to be red, green, doesn't have to be, just so you know, whatever color it looks like to you in your eyes, you'll know what it is. And so anyway, I make magenta when they sell below the bid, and that again means an aggressive sell. Now over here, so we've got, let's see, the minimum I put here was 20 for the block trade. And so that's nice. But now there's a third level we can go. And here what I did was I set a minimum order size to show up on the time and sales as block orders. And I set this as 50. So now any block order that comes in as 50 or more will show up on this fourth column, and it just plots this block. It makes it real easy. So now if I'm seeing, like here, okay, there's green, there's red, there's green, there's red, there's green, there's red, there's green. So there's more red than green among the professional traders, but let's go to the next highest level trader, the people with the really big money, 50 contracts or more per trade. Every single one of them is red. And that takes it to the next level. And by the way, this can also work for breakout trading. So people ask, well, how do I know when the market's going to break out? So here we've got consolidation between this high and this low. And look, again, plot your block trades here. And boom, kablambo, right there. By the way, that is a professional trading term, kablambo. All your better traders use that term. But yeah, if you see a breakout with a block trade, that is a good trade. That's a confirmation of a good breakout. Okay, so my time is up. I already went over 1 minute, I believe. But as I said at the beginning, I messed up and I didn't bring anything to sell you, but I do have something to give you for free. And that is my rubber band trade strategy. It's one of my favorite trade setups. I still trade this every time. In fact, I scan for this trade every single day to this day. That's how good this trade is. So I still personally trade it. You can do it on any market. It's very robust and adaptable. You can do it with day trading, swing trading, crypto, stocks, futures, Forex. So what I'm doing is I'm giving you a little mini course. And in this mini course, there's 5 short little videos. And again, as you know, I'm big on quizzes because that's how you get feedback, right? Feedback loops, so that you can correct if you don't quite understand something. You go through the quiz and it's like, oh, okay, I missed that. Now I got it. Now it's locked in. In this little 5-day video course, you're going to get my rubber band trade strategy. Now, this is a strategy that is a real trade strategy. You can just take this and make money with it. And I'm not charging anything for it because my approach is that, yes, I do sell courses, but I totally understand your position. You don't know who to trust. You don't know if, this guy's trading is good, that guy's trading is good, whatever. So the best way for me to prove myself to you is to give you a trade setup for free and for you to actually make money with it. Who cares if I'm making money, right? Can you make money with it? Will it work for you? That's the key issue. Please try it on a demo account or a simulator account first. And then if it's working for you and you're making money, I figure, hey, maybe you want to come by and pick up some of my other courses. If you do, great. If you don't, great. Either way, we're friends. So also included in this course is my cycle indicator. This comes in a recorded webinar, and I show you the cycle indicator. This is how I time my cycle lows and time my cycle highs for buying and selling with incredible precision. So you'll get that, but not only do you get the indicator, the reason I put it into a recorded webinar is because I've got to show you how to trade it. And again, of course, you know me, market logic. So all that is in there so that you can trade the indicator with knowledge, with understanding. And you get it all by just going to topdogtrading.com/free. All right, and there you go. So, yeah, in fact, I think I'll type that in. Top dog trading. If I could type, it would be helpful. And /free. There you go. And that's it, over and out. I don't know if I have any time for questions or not, but Anthony, I'm available if you want me to answer some questions, or if you need to get to the next presenter, I totally respect that as well.
Hey, thank you, Dr. Berry. Audience, do you have any questions? What I'm seeing is everyone just seems to be interested in what you're doing today, so they just had encouraging comments. I'm seeing a lot of encouraging comments, so thank you, audience.
Yeah, thank you, everybody. I really appreciate that, and I really appreciate you participating as well. You know, some groups don't do that, but you guys have done that incredibly well. So you've earned my respect. That tells me you're very, very serious about your trading. So you got a good group here. And by the way, thank you also for the very nice comments. I appreciate those tremendously.
Yeah, thank you, Dr. Berry. And we have like a very educated crowd, and it ranges in demographics like majorly. We got some really great traders here. So thanks for being here today. Not just our presenters, but the audience is really great. Yeah. So thank you, Barry. Thank you, Dr. Berry.
My pleasure.
Barry, thank you for that excellent breakdown of price action and how professional traders read the market. We also appreciate the special offer you've shared with the audience. I put the free strategies in the chat, and you did as well. So everyone, Barry's offer link is now available in the chat box, the free strategies, all of his links, check out his homepage and all of his social media, and be sure to email him as well. To close out today's summit, we're joined by David Wyse of Right Line Trading. David will be presenting the SPY Super System, trading options with laser accuracy. He'll show how he leverages Heikin-Ashi candles alongside high volume price action to trade SPY options with precision and confidence. David, welcome and take it away.
Thank you very much. Can you hear me okay?
David, we can hear you.
Excellent, great. Just kind of setting the webinar up. Thanks very much. I appreciate it. I appreciate the nice introduction, and look forward to spend a little bit of time here and talking about what I do here at with the SPY Super System software. So thank you very much. Again, my name is Dave Wyse, and I've been trading professionally for about 17 years now, full time. And we're going to talk about what's called the SPY Super System software. This is a piece of software that I run on Thinkorswim. I don't trade there, but this is going to tell us when the institutions are coming into the trades, when they're not. And I have a live trading room, an options room that we trade. I trade every day. I'm in there every day from market open to market close. I do take a little time for lunch, but I'm in there every day live. And I also have a text alert service where we send out alerts on our highest probability trade setups that we find. All right, so let's get started. First thing, of course, I have to do is my disclaimer. All signals and trading opportunities we provide here are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. Okay, and if you have any questions for me, just pop them in the question box. I'll leave it open along the way. If I can't answer it or you haven't got time, if you go ahead and put your name and phone number or your team username, Skype doesn't exist anymore, but team username in the chat box, and Rory from Right Line will give you a call back and answer any questions you might have as far as subscriptions and any questions I can't answer. Okay. First, I want to cover what kind of trading we do in the trading room and on the alert service, just so you can get a feel for what we do. Again, most of these trades we do, they're going to be either intraday trades or relatively short swing trades, which would be overnight up to about 3 weeks or so. We obviously do straight calls and puts. This is the most common thing to do with options. But we also do straddles and strangles. These are non-directional trades where you're just looking for a move, big move one way or the other on a stock. You don't really care which way it moves. They're excellent strategy, especially with volatile stocks that you never know what they're going to do. I did some of these on silver this week, and they worked out pretty well. Debit spreads using weekly options expiration. This is another option strategy. I also do what's called time spreads. These are a calendar spread setup. This is where we take advantage at earnings time. Just before earnings comes out, we take advantage of capturing what's called the implied volatility crush. Option prices get jacked up before earnings, and after earnings they come right back down again because the implied volatility comes out once the market makers know which direction the stock's going to go and approximately how far it's going to move. And then we also have a strategy called the weekly ATM strategy. We just put one on yesterday on Schwab. This is where we sell puts every week against a neutral to bullish stock, and we capture that premium as basically a credit every week. And meantime, we keep a longer dated put further out in time to protect ourselves to the downside. So this is a very, very forgiving strategy. It works really, really well. And if it goes against you, you can adjust it and still make money on it, which is pretty nice. We also do credit spreads to capture premium over a few weeks. We also have intraday strategies. These are the strategies we use in the room for trading intraday trades, relatively quick trades. Two of these, I have the SPY super system for very high probability trades. This is to catch moves in the SPYs, the Qs, the IWM, the Russell futures, and even stocks. You can use this for stocks, but these are quick trades. If you're using 5-minute candles, which is what I do for the intraday trades, they may be 1, 2, 3, 4, 5, 6 candles long, but they're not going to last a long time. So they're relatively quick. The other thing we have now is what's called the UMCAT, high momentum, high volume trades. This is a new strategy we've added recently to the room, and this captures high volume trades with a catalyst, and we use out of the money calls and puts on this. And I have a video on this. This is very, very specific because taking out of the money puts and calls is not generally a good idea. But if the criteria is set up good, if the criteria is set up good, right, then you can make really, really good returns on these. So I use these, and I use the SPY Super System as well. Now, the reason I'm bringing up these SPY Super System intraday strategies is something's going to be happening this year in 2006. This is a fairly dramatic change. There's a thing called the PDT rule. That's pattern day trader. And as of right now, for trading stocks, options on stocks, if you don't have $25,000 in your account or a cash account, but if you don't have $25,000 minimum in your account, then you can only trade 3 intraday trades in a 5-day period. That's what's called the PDT rule, pattern day trader. But they're going to reduce it, being reduced here sometime in the near future, and it's going to go down to the estimate is between $2,000 and $2,500. So this is going to open up intraday trading to an awful lot more retail traders. And what we want to do is we want to take advantage of that by having more fast, disciplined, momentum-based strategies for intraday trades, because there's going to be a lot of retail traders in there, and most retail traders that you trade against are not going to know as much as you do. They're not going to have the strategies you do or the information you do. So this is what we're trying to do is prepare traders now for a far more accessible, far more active market environment. And this UMCAT trade that we've got here, we're talking about here. I'm not going to go into a lot of detail on it, but it's very, very effective. And the gains are percentage-wise much larger than regular because of the fact that you're taking out of the money. But it has to be done on specific conditions, and your exits have to be very quick. Okay. This, by the way, is just a graphic of the alert service. We call it Compass alerts, but it's actually the SPY Super System now. But these are how you get the alerts. It's an SMS service. When I put out a high probability trade setup, they were talking about in the room, and we take it in the room. I'll send an alert out, and you'll get it in. It takes to get to my phone. It takes about 10 to 15 seconds or so. So it comes out pretty quickly. Okay. So we'll talk a little bit more about in detail about this now further along here. First thing I'm going to talk about here, and this is obviously really, really important, and that's what moves the markets. What moves the markets? What creates trends? What breaks trends, etc. And so the market consists of many retail traders like this, many small retail traders with the little marbles right here. We can't really move the market. but there's millions and millions of retail traders. What moves the market is the institutional traders right here. And I'm going to get into a little bit of detail about this right now. This is more what it looks like. Here's your institutions, and here's us with the little marbles down here. Keep in mind, when the institutions are not in a trade, or they're not in a trade in force, institutions are in trades most of the time, but a lot of times they're trading against each other and not with very much volume. When mostly retailers in the market, when that's mostly retail traders are trading a stock, it's going to just basically chop around. You're going to get a lot of chaos, a lot of chop. It's very difficult to make any money. So what we want to do as traders that are trying to be consistently profitable is we don't want to be in the trades when there's just retail traders are in there. We want to be in when the institutions are in. And to understand institutions, they're made up of basically 4 categories. They're made up of obviously they're made up of investment banks, Goldman Sachs, JP Morgan Chase, Bank of America. All those big institutions are part of those big investment banks are part of the institutional group, right? Now, it also includes pension funds, which are huge, huge funds of state workers, firemen, police, hundreds of these pension funds with billions and billions of dollars, by the way. And then you have the next category, which is hedge funds. And hedge funds make up another huge part of the institutions with more billions of dollars to trade. And the last one would be pension funds. I'm sorry, the last one would be mutual funds, which would be things like Vanguard, T. Rowe Price. There's a lot of big mutual funds who again have billions of dollars, but all these groups is what makes up the institutions, and this is what pushes the market. And this is what our job is to identify when they're actually doing this. Now, it's important to understand that especially investment banks, most of their trading is done through computers, computerized programs, which are called algos. You probably heard about algos. Algos are computer programs that are coded to look for specific conditions or specific news. They actually optically read news, and they trade accordingly. So that's what they're looking for, and that's where most of the volume comes from from institutions. It's coming from algos. They do have some desks where they actually trade, but mostly it's all coming from the algos. And if you want to see a prime example of this, if you look at for example, the FOMC, the Fed, when it made their announcement on Wednesday at 2 o'clock, if you look at the volume that was on the SPY, and you look at it at 2 o'clock and about a second, what you're going to see is a big burst of volume coming in, either driving the market up, driving the market down. Now, there's no way humans can actually enter a trade that quickly. You couldn't even get to your mouse in time to do that. That's the algos who have already read the Fed report, and they're basically trading based on that, and they have specific conditions they're looking for. But that's what the institutions use mostly is algos. All right, so this is what drives the market, and our job is to identify when the institutions are pushing a trade and when they're not, and it's really important for us to know that, because this is going to keep us out of trades that we shouldn't be in because they don't have as high a probability of being successful, and it's going to keep us in trades where we have a much higher probability of being successful. Okay, so that's what drives it. Now, one thing here I want to just quick talk about. This seems a little off topic, I guess, for most people. This is a blackjack table, ace, jack, spades, blackjack, couple $100 chips, and this is what blackjack is. So what has this got to do with trading? And when I first started trading a long time ago, a lot of the feedback I got from friends and relatives was that it was gambling. It was fixed. You can't beat it. You're just wasting your time because you might as well just go to Las Vegas. And interesting thing is, when I was much younger, I did go to Las Vegas, and I was actually I made my living playing blackjack as a card counter. And just so you know, card counting is not actually counting individual cards. It's keeping track of what the composition of the remaining cards is, how many big cards and how many little cards are left in the deck. And just as a kind of a primer, as the little cards are removed from the deck, and there's more big cards than there normally would be in the deck, the advantage swings to the player. And if there's more little cards in the deck than big cards normally, then it swings to the house. And what we did was we kept track of what the composition of the remaining deck was. So this gave me a mathematical edge over the casinos by knowing when the cards are in my favor. And I did this for a couple of years, and you know, I didn't really have any responsibilities. It was pretty nice. It was an interesting life, and but I did this for a long time, made good money at it, and I didn't know that it would have to come in handy as far as trading is concerned. But the reason I bring this up is I had a method and a strategy that had a mathematical edge. So trading stocks and options is very similar in that without knowing what the institutions are doing, the trader doesn't have any edge. So in essence, they're gambling. So you really are gambling if you're trading stocks and options without knowing what the institutions are doing, without a strategy and without a methodology that you can consistently trade. Now, it's important to understand one other thing, and that is whether you have a system that works and it's the greatest system in the world, you both playing blackjack, counting cards, and trading stocks and options, they both require discipline and emotional control. If you don't have discipline and you can't stick with a strategy and you don't have emotional control, you start getting impacted by your P&L. You're suffering from greed or fear or enthusiasm or revenge. All these kind of emotions come into trading. You've got to be able to keep the emotions out of the trading and have discipline. Stick with the strategies that you know work. All right, very, very important. Now, I consider the SPY super system, which I'm going to show you as this piece of software. That's my card counting system. It gives us an edge over the other traders, allowing us the ability to become consistently profitable. Now, that's typically what we're in the business doing this for, is to make money. And now the SPY super system, the software, in conjunction with identifying the very best high probability trades, can lead to consistent profits. So we can identify a lot of stocks that institutions are in. Then we have to drill down and find the very best ones of those. Okay. Now in the room and on the in the alert service, I have a couple of rules to trade by. Trade the best and skip the rest. And we only trade the very highest probability trade setups, and we skip all the others. And this is really important because if you can bypass trades that would have been losers, that's just as good as taking a winning trade. And so we don't take a lot of trades. We take, you know, we take a limited number, just the very best, and we skip the rest. And again, our objective is not to make trades. Our objective is to make money. Now, this is kind of geared toward people who, retail traders who trade too much. They're sitting in front of their machine. They want to make a trade. They haven't taken 1.5 an hour, so they justify any kind of reason for taking a trade. And so basically what they're doing is they're trading to trade. They're not trading to make money. And this is important. Our objective is not to make trades. Our objective is to make money. Maintaining discipline. We have to learn and follow the process. Learn the criteria. You use the SPY super system to let you know when the institutions are in the trade. Follow the process. Learn the process and stick with that. That's where discipline comes in. And remain patient. And this is really important because you're going to have a lot of situations where you feel like you want to get into a trade, but it's not where it should be. You've got to wait for it to come to you. So be patient, remain patient, wait for those setups. And we're going to look at a lot of those here today. Profitable traders, we need an edge over other retail traders because that's who we're taking our money from. All right, we're not taking our money from institutions. We're taking our money from other retail traders. We're trading with the institutions when they're in the trade. Our edges are the SPY super system software. This is the #1 thing. This tells me whether the institutions are in the trade or if they're not. We trade what's called relative strength and relative weakness. This is really, a lot of retail traders, this is very much overlooked. This doesn't mean RSI. I'm not talking about an RSI indicator. I'm talking about looking at what your stock is doing and how is it moving in relationship to the S&P 500 or the triple Qs, the SPY or the NASDAQ. How is your stock trading? If your stock is moving up steadily and the SPY is moving sideways or down, you've got relative strength. This stock is going to outperform most other stocks. And same thing on the relative weakness side. If your stock is moving down and the market's moving sideways or up, it's got relative weakness. It's going to outperform most of the other shorts that you take. Okay? We trade with the market trend if there is one. There isn't always a market trend, but we trade with a market trend. And we try to buy near support and sell near resistance. This, again, is extremely important because if you can get into a trade right near a support level and the stock turns against you, your exit's going to be really quick. You're not going to lose a lot of money if you get out right after it goes below your support level. So buying near support and selling near resistance is important, and it's very important to keep people from chasing trades when they've extended up too much. All right. All right. So those are the 4 keys here. If you're trading like this, if you're trading with the institutions, trading relative strength and weakness, trading with the market trend, if there is one, buying near support and resistance, you're already ahead of about 98% of the other retail traders in the world. The compass system, which is now called the SPY super system, I'm going to show you. It identifies the highest probability setups by sidestepping setups that look good, but they'll fail more often than they succeed, right? And again, it does this by identifying when institutions are driving the move, and I'll show you these charts. It analyzes a lot of complex data and displays the results in an easily identifiable visual format. And this is kind of important because this allows a fairly new trader to take a look at the SPY super system and determine whether the institutions are in the trade or not, whether it's a decent trade to try to take. And that speeds things up a lot as far as your learning curve and your ability to get profitable quickly. Okay, again, so this gives us an edge over other retail traders. We only take trades that are being driven by the institutions. We're trading stocks that have relative strength or relative weakness to the SPY or the Qs, not RSI, and we trade in the direction of the overall market. This is the key here. Again, our trades will be supported by institutional buying and selling. They'll be outperforming the index with the SPY or the Qs, and they'll be moving in the direction of the overall market. This is a very key thing because if this is the kind of trade you're taking, you're going to be head and shoulders above every other retail trader in the world, and there's tens of millions of them. Okay, going to talk briefly here about the SPY super system. And again, this is a piece of software. Now we have strategies called SPY super system strategies that we use for high volume trades, etc. But the system itself is called the SPY super system. It's important to understand this piece of software is the critical element in finding and trading the highest probability trades. The SPY super system software is the engine that drives our results. Now we're going to talk about the results I've had trading this over the last over 4 years now by using this software. And the results are pretty extraordinary. I've had by 85 to 90% win rate. 85 to 90% of our trades over the long term are winning trades. And we make some really, really decent percentages on these, and I'll show you those. But it's important to understand when you see these results, the ability to identify when institutional players are driving a bullish or bearish move, and when they're absent. This is the key factor in pinpointing the high probability trade setups. It's really important. And that's the function of the SPY super system software, and it's a critical component of trading successfully with the institutions. Okay, Rightline has a YouTube channel. I'm on there every day at about 11:30 for about an hour, 11:30 to 12:30. If you come on there, you'll be into the room. You can see the room where I'm there every day, and I'm there every day from market open to market close. I answer a lot of questions. The traders will ask to see a chart. We'll take the charts. We'll take a look at it on the SPY super system. We'll take a look at more technical analysis on it. But I'm on there every day from 11:30 to 12:30. Okay. The SPY super system, by the way, we've got on it's color coded for our indicators. 4 colors: green, obviously bullish strong; blue is bullish trend; red is bearish strong; yellow is bearish trend. Right. So those are our colors that you're going to see on the chart. And what I'm going to do here is I'm going to show you the chart. Then I'm going to move over and do a section on Fibonacci candles, because I know a lot of people want to talk about Fibonacci candles. So I'll do that next before I get into any more detail. But this is what the SPY super system looks like on Thinkorswim. All right. And it also can run on Ninja, but I use it on Thinkorswim. I do not trade on Thinkorswim. Don't think that because you have the software on Thinkorswim that you have to put your trades through there. You can if you want, but I don't. I use Tradier, as a matter of fact. But this is the indicators right here on the SPY super system. This is a 5-minute chart. You can have daily charts, whatever time frame you want, but this is what the indicators are. The bottom thing right here is called the Laguerre oscillator, but it's modified. This is a Laguerre that we strip out divergence and just do straight momentum in this indicator. And these are the indicators that are going to reflect that. This is called the current time frame momentum. This shows what the momentum is, just strictly momentum on the current time frame, the 5 minutes, right? And it's green or blue for bullish, yellow or red for bearish. Right? That's where your colors come in. This is multi-time frame momentum. On a 5-minute chart, this is looking at the 5, the 15, and the 45. This is looking across 3 different time frames to determine if the institutions are in this or not. So this is obviously the same colors, and this is the long-term trend. On a 5-minute chart, usually during the day, I'm just focusing on this pretty much because I'm not going to be in the trades very long. But when I'm looking at swing trades, I need the multi-time frame momentum and the current time frame momentum to be aligned, and it helps to have the trend aligned. Now on the 5-minute chart, these are our indicators that we use on the chart. This is called the VWAP, the volume weighted average price. I hope everybody knows about that, and I hope everybody uses it on the 5-minute chart. This is critical. This VWAP, this volume weighted average price, is an indicator that all the institutions use. This is the main level for entering and exiting trades on an intraday basis, right? The next one I have is this green line right here. This is the 15 EMA. I've got this identified as the 15 EMA. And then the last one is this white one. This is the 8 exponential moving average, 15 exponential moving average. These 3 levels are the support and resistance levels that we use to enter and exit trades, right? We go short if it's going down below the VWAP, and we go long if it's going above the VWAP. Same thing on the 15 and the 8, all other things being equal. All right, so those are the indicators that we use up here. We also have something up here called VOLD. This tells us what the market internals are doing. Market internals are, this is looking at all of the New York Stock Exchange stocks. This does not apply to the individual stock. This just says, what's the market really doing right now? Is 1,600 stocks, for example, is it generally bullish right now or generally bearish right now? This is what's going to tell you what's going on in the overall market by looking at the total amount of volume on stocks going up minus the total amount of volume on stocks going down. So it's there to kind of tell you what the overall trend in the market is that day, not necessarily this stock, right? Now, the interesting thing about the 8 and the 15 is if you're looking in this on any time frame, 8, the 5-minute or daily, when the 8 is above the 15, you have a bullish trend. When the 8 is below the 15, you have a bearish trend. So it gives you a good indication of the actual current trend that you're trying to take advantage of. All right, and we also have these colored candles. This I'm going to talk about in a little bit after Hikanashi. This is really important. These white candles right here that are going up, these are high volume bullish candles, right? This not only says that the stock is moving up, but it's moving up with very big volume. And a lot of times you'll get multiple ones like this. This tells you that here when this went blue, the institutions were coming in, and they were coming in again here. They're coming in with really a lot of volume, and that's pushing the market up. When you get high volume with a break of support or a break of resistance, that's really, really a tremendous combination. And the yellow ones, by the way, are bearish, right? These are bearish candles that show high volume to the downside, right? So these are really, we're going to talk about these quite a bit. This is really quite a combination, and it's really honing in on not only just institutions based on the momentum, but how much volume is there in there as well. Okay, all right. Now we're going to talk now. I'm going to spend time now on Hikanashi because I know a lot of folks came here to see about that. So we're going to talk, probably spend 5-10 minutes about Hikanashi candles. We're going to look at some examples of live charts from yesterday to find some Hikanashi candles that could be set up for Monday. All right, so let's talk about Hikanashi candles. This is a chart of Hikanashi candles. It says it's British pound, Japanese yen. I'm not trading FX, I don't really care, but these candlesticks are exactly the same as they would look for Microsoft, for gold, for pork bellies, for the futures, anything. All right, this is what the Hikanashi candles look like. The key takeaways initially is any candlesticks that have flat tops, no wicks in the top, flat top candlesticks, those are bearish Hikanashi candles. Bearish Hikanashi candles with flat tops, bullish Hikanashi candles with flat bottoms, just like that. Flat bottom, flat bottom, flat bottom. These are bullish Hikanashi candles. These are bearish Hikanashi candles. These become dojis with wicks and tails. Right, so another thing to be aware of is each Hikanashi candle starts in the middle of the previous Hikanashi candle, right? Because it's made up of 2 candles. So they always start in the middle of the previous candle when you see a Hikanashi candle. See down here, see halfway up, halfway up, halfway up. always start halfway up the previous candle. Right, so that's kind of the overview of Fibonacci candles. Now, how do we use these trading is the question. And what typically that I'm looking for is I'm trying to find, for example, a stock that maybe is, I like it long and it's falling down. And I want to go long the stock as soon as it gets to reverse and goes through a support resistance level and heads back up again. How do I do that? I'm looking for what's called a Fibonacci reversal, right? And Fibonacci reversals are one of the key ways to use Fibonacci candles. So this is a bearish trend, and they're pretty big candles. Now, as we come down here, you notice we're getting wicks and tails, wicks and tails. Here's a flat bottom right here, right? So that's a Fibonacci reversal candle to the bullish side, right there. So technically, that's actually a Fibonacci reversal that you could take. The problem with this particular one, and I want to point this out because I do this in every webinar, it looks like a good Fibonacci reversal candle, and you would have made a little bit of money on it. But when you get a Fibonacci reversal candle, one of the things you look for is how big is that candle in relationship to the candles that created the trend, right? These candles that created this bearish trend were pretty big. These are pretty big, so I wouldn't take that, all right? If you did, you'd have made money on it because it is a Fibonacci reversal candle. But what I'm looking for is a real serious reversal. So I look for, I would stay in basically I'd just be viewing this. Now, again, it reversed back here with a bearish Fibonacci reversal here and here. Now we're getting a Fibonacci reversal candle here that's big. See the flat bottom? See how big it is in relationship to these? That is your Fibonacci reversal candle to jump in on this trend. All right, this is where you want to get in. You take it right here, and obviously you're getting more Fibonacci candles with flat bottoms all the way up. Get a wick and a tail, but still nice and bullish. You stay in this trade until you get this red candle and a bunch of wicks and tails. Once the momentum starts to fade, you're out of the trade. That is your Fibonacci reversal trade right there, and that's a nice trade. And that's what you're looking for. You're looking to get in early on the trend when it first just reverses. Okay, that's your Fibonacci candles. So this is kind of the whole thing in a candlestick chart. And I'm looking at Fibonacci candles. Let's say, for example, this blue line right here, blue dotted line. Let's say that's a support resistance level, like the VWAP, right? So that's right. That's it right there. So the stock's bearish coming down, but I want to get bullish on this when it gets back above the VWAP again. So here's the VWAP. Here's my Fibonacci reversal candle right here that goes through the VWAP. This is where I take the trade, right here, and I get in right here as it breaks above there. And then I ride this thing all the way up until I start to lose momentum, and then I get out. That is the perfect kind of a trade where you're getting, you've got a resistance level here or a support level here. It went through the resistance level. If it breaks down below it, that blue line, you would get out, but notice it never does. And then you just follow it up, and then you just will follow the momentum. And one other thing to mention on these candlesticks here, that's kind of important, and I get asked this question a lot. Do I have to wait for the candlestick to close before I enter the trade, like on the Fibonacci candle? And the answer is you do not. Once you're about, let's say this is a 5-minute candle, once you're about 2 minutes, 2.5 minutes into that 5-minute candlestick construction, then the likelihood of this thing being flat bottom is about 95% or more, right? So you don't have to wait. And if this was a daily chart, after about 1 o'clock in the afternoon, if you've got a Fibonacci reversal like that, it's most likely 95% or higher. It's going to be that setup at the end of the day. This allows you to get into these trades when the candlesticks are developing, when the Fibonacci candlesticks are developing. Typically, you can't do that with standard candles. You really need to wait for the confirmation. That's because Fibonacci candlesticks, by definition, are a confirmed reversal. They are a confirmed reversal because they're taking 2 candles to do this. Okay, so again, here's what we just talked about here. The nice move right here through the VWAP with a nice big Fibonacci reversal candle to the upside. You just ride this thing up. Okay, so key things to know about Fibonacci candles. Bullish Fibonacci candles have flat bottoms. Bearish Fibonacci candles have flat tops, always. The bullish Fibonacci reversals are identified by a flat top candle, followed by a flat bottom candle. And bearish Fibonacci candles are exactly the opposite. Flat bottom candles, followed by flat top candles. That's how you identify a Fibonacci reversal. All right, this is really important in trading because this is going to give you a really edge if you're able to find some of these and enter the trades at that point. We're going to look at some as well. So what's the some of the advantages of Fibonacci candles? First thing it does is smooths out price action, reducing the noise. This makes it much easier to stay in a trade. And this is really important for retail traders because if you're a retail trader looking at 5-minute charts, you get an awful lot of herky-jerky action, and you get a big red candle all of a sudden, and if you panic, and it panics you out of a trade, and the next one comes right back green again, moves right back. If you were watching Fibonacci candles, that would not be the case. You wouldn't know it until there was a reversal, until there was at least 2 candles. So that's important. Smooths out and reduces the noise. It obviously makes identifying trends much easier. It improves identifying confirmation of trends because they are a confirmation candle, or trend reversals. And this is where I use them the most, looking for trend reversals. And again, it helps identify potential exits when the candle bodies shrink or a reversal occurs. Okay, so those are the recaps of the Fibonacci candles. Now, I'm going to show you, this is just kind of a graphic of, I use another program called TC2000 for my charting, but this is a TC2000 chart. Now, this is one I picked out. This is quite old, but I wanted to identify some regular candles versus Fibonacci candles. This is Uber with regular candles right here. I want you to look at this May 1st time frame right here, this May 1st. All right, so here's a kind of a bounce. This is the 200-day moving average, this pink line. It's bouncing off of there, and then you gap up, and then you gap up. It's very difficult to determine whether you should actually get in on something like this because they look like they're extended, right? So let's take a look at the exact same chart with Fibonacci candles, and let's look at May 1st. All right, gonna look at May 1st. Here's May 1st right here. See the Fibonacci reversal candle? Here's your bearish Fibonacci candles. Here's your Fibonacci reversal candle right there, flat bottom. This is the candle you would get in on. So you would be getting in on May 1st right there. That's where you would enter this trade. It's a flat bottom candle, Fibonacci reversal candle, and you notice it keeps going up with flat bottom, flat bottom, flat bottom, flat bottom. But notice something about the Fibonacci candles here. Go back to this. See the gaps? Gaps in regular candlesticks. Fibonacci, no gaps. All right, so you would have been getting in right here, this on this candle, and this you would have got this tremendous nice gap up the morning, and you'd stay right in it up till up there. That's the difference here. And again, there's no gaps in them. And this candle was on that day is where you would enter this trade, right? You had all the things to indicate that you should do that. Okay, so I'm going to look at some live charts here, and we're going to look at some Fibonacci candles for. I got some daily ones. We may look at a couple of 5-minute ones. I just kind of want to see what they are. So let me go ahead and bring up my my SPY Super System software. Where is it? There it is. Okay. All right, so here's my SPY Super System software. This is actually the software. These are scans that it comes with it. This is a cascading up scan. This is a relative strength scan, relative weakness scan. These are scans for swing trades. This last one, we get a bear, we get a bull, and these cascading scans, cascading up, cascading down, can be set for 5-minute, or you can set them for daily. So I use them mostly in the daytime for looking at for intraday trades, but this is what you've got here. All right, so that's your scans that you get with the software. Now this is I'm just looking at the stock here. This is APD. Now this is a daily chart. Okay, see it's daily. And what's the style on these? I've got them set to Fibonacci candles. That's all I have to do is set them on Fibonacci. So this is a Fibonacci candle right here. Now remember what we just talked about, right? There's a flat bottom. You see the flat bottom? That's a Fibonacci candle. Here are my indicators, all right? Current time frame momentum is gone blue. That means the institutions are coming into this trade. The institutions are pushing this stock up, right? And also green on the multi-day. So this is definitely a bullish trend right here that I can take advantage of, and this is an excellent trade. And notice the color of the candle. It went from bearish to bullish high volume. They had bearish high volume followed by bullish high volume, which is also a Fibonacci candle. This is a huge, huge setup, and this is a beautiful setup for Monday. Really a beautiful setup for Monday on APD, Air Products and Chemicals, and that's what you're looking for. You're looking for a big volume candle that's got the institutions buying across the current time frame and multiple time frames, right? A beautiful one. I've got a couple more I want to look at. Let's take a look at VeriSign, VRSN. All right, so here's VeriSign. This is a Fibonacci bearish candle right here. See the flat top? High bearish candle. Now it isn't got high volume. It's not yellow. It's red. but it hasn't got high volume, but it's definitely bearish because you see your current time frame momentum and your multi-time frame momentum are still both bearish right here. So that's a beautiful setup here on VeriSign. All right, so that's another nice bearish one right there. MNDY. This is one that I'm actually planning on doing Monday if the stock opens down. See the compression here? Flat top. This is a Heikenatsu reversal. There is where I should have caught it, but I didn't. But now we got another one. And notice the high volume. Yellow candles, high volume. See what it's doing down here? Red across the board. Institutions are selling the heck out of this thing. They have been for a while. You can see it started right here. I mean, if you had caught them right here, you would have caught this whole move. But this is a Heikenatsu reversal candle to the downside on MNDY on the daily chart. All right, so it's a beautiful setup for a for short. Take a look, another one that people might be familiar with, Oracle. How's Oracle look? All right, how's it look on the SPY super system? Looks bearish. Institutions selling, 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 right across the board. Heikenatsu reversal candle. The original one started way up here. When you get Heikenatsu candles like this, where it actually has a reversal and then compresses, and then you get another one, that's called the Heikenatsu continuation. This is a Heikenatsu continuation to the downside in Oracle. Looks like a pretty good short. Couple of other nice longs here, I think. Let's take a look at CL. All right, so here's CL. This is Colgate-Palmolive. All right, you can see the institutions are buying this thing, but notice they had a little bit of selling right here. It's not really much. The momentum indicator was just slipping down just a little bit, but it's right back to blue again. And there's a Heikenatsu reversal candle on CL, another excellent long. And again, what you're looking at is are the institutions in? Yes. Is it a Heikenatsu reversal? Yes. Are they pushing it up with volume? Yes, they are. They're pushing it up with big volume. When you get these white candles like this, just like you got them here, they go white and green, more white. That's a bullish trend right there that you can follow up with high volume candles. And we're going to talk a little bit more about that because this is a very big deal when you use Heikenatsu candles or even regular candles, but you've got high volume and you've got the institutions coming in at the same time. Very big deal. All right, anything else I wanted to look at here? Let's try KMX. Okay, now I did this for a reason. This is KMX. This is a short. See the high volume? It's not high volume. See the regular Heikenatsu reversal candle here? So would you want to short this? Now take a look down here. All right, now on the daily chart, the current daily is bearish. Institutions are selling this. But look at the multi-time frame on this trade. The institutions are not selling it yet. So would I take this? I would not. I would not take this until it can prove to me that the institutions on the daily. This is the 1 day, the 3 day, the 9 day. I would need all of those things to be pointing down for me to take the bearish trade to the downside. Okay, so those are what Heikenatsu candles look like. That's how you can use them in your trading. We do this all the time. And again, if we look over here, for example, on this bear list right here, if I take a look at the stocks that are coming up on here, all I have to do is click on this, and it's going to take me right to the chart, and it's going to show me, are they all bearish? They certainly are. Sophie looks like a good bearish one. Doesn't have a Heikenatsu reversal right now. It did here, all right? But it's definitely a good short. Here's you. This is one that I traded yesterday intraday. Look at how bearish that is. Microsoft, very bearish with just Heikenatsu candles here. And JOBY, very bearish. Institutional selling. So these give you some really excellent swing type trades right here. These will show you swing trades for bear. There's also another one in here that's bullish. You can take them. It says bear. In one page it says bull. You can take those. Palantir looks weak. Snap looks weak. Roblex looks weak. So these will give you some really good. There's Oracle in there. This will give you some nice trades for swing type trades. Right now, if we switch over to 5 minute, by the way, we can use this for 5 minute candlesticks as well. And if I look at the get over to the current time frame right here. All right, so this is looking at Oracle at the end of yesterday on the 5 minute. So if I'm looking up here in a cascading scan, I'm going to find, look how strong this one is. Right, here's SanDisk. Look how strong this is. This is a 5 minute chart. See how strong SanDisk was very strong all day yesterday. It gapped up, looked great. Right here is a big gap up in the morning, up earnings, big candle, but kind of pulled down during the day. But look at this nice reversal here and going up to the 8 and the 15. You see that right there? And roomed up to the VWAP and high volume candles. right? This is how we trade intraday. There's Teva right there, another decent one. MDT, beautiful, beautiful 60. And you can see this. I'm going to show more of these. You can see this thing going. See how this went bullish right here? Went blue right there. Went bearish to bullish. Institutions are coming in. They're coming in. They're coming in. They're coming in with big volume now. Look at that nice run up in PCG. Same thing with Disney. Now, if you're going to swing it, you'd have to look at your daily chart and see if you wanted to swing it. But this would be a good one for intraday. One of the couple I traded yesterday was I traded silver short. And if you look at the silver chart, I traded this thing short in the morning, big gap down, and I actually took it over here where see how it broke below the VWAP and came down. See the bearishness here, institutions selling. See, we're getting yellow candles. Look at the volume of this thing. This was a really, really good trade. These options, the puts really went up in value quite a lot. Do I trade futures like NQ and 5 minute? Yeah, you can. You can. I don't trade futures generally, Ken, but you can trade futures. You can trade commodities. You can trade anything you want. The candlesticks and the information that you're looking here, as well as the colored candles, they apply to anything that you want to put in here. You can't do it on FX, of course, but you can do it on everything else. Absolutely. Bear spreads, yeah, I do put spreaded spreads and put debit spreads. I'll do a put debit spread for a bear spread, or I'll do a call credit spread for a bear spread for a spread. Yeah, we do a lot of spreads. What does silver look like on the daily? Take a look. You're not going to like it if you're long. Right there. There's your daily silver. Heikin-Achi reversal candles at the downside. I mean, this was a very unusual flush yesterday in the market. If I switch this off of Heikin-Achi and I go to regular candles, all right, there's this big gap down yesterday on silver. And this is why I took it long. I had a catalyst to the downside on the 5 minute chart, which is what I was interested in. And that's why I traded this short to the downside. I wouldn't hold it overnight here because you see what you saw in the daily chart. Is it going to keep going down? Maybe, but I'm not going to trade against this. Okay. Do I do 0 DTE? Yeah, typically, Luis, thankfully you're not long. Yeah, you and a lot of other people. It was, listen, the silver was parabolic. I mean, look at this thing. I mean, if we look at the length of time, what this has been doing, this was a parabolic move in silver, same as it was in gold. So it's very dangerous to try to be taking up there. That's where greed takes over. All right, so this is what I traded. One of the ones I traded yesterday was silver. And I'm going to try to talk about this in a bit. I do 0 DTE on SPY, Qs, IWM, any of the indexes that have 0 DTE. Like for silver and gold, they expire every 2 days. They have Monday, Wednesday, Friday expiration. So what I took yesterday was Friday, so it was a 0 DTE. But when I trade the SPY, the Q, the IWM on a 5 minute basis, I'm using 0 DTE until after 1:30 in the afternoon. After 1:30 in the afternoon, I switch from 0 DTE to 1 DTE, and not because I'm going to hold it overnight, because I want to mitigate, reduce some of the time decay that can occur. All right, because the time decay on a compression is pretty high on 0 DTE day. Okay, all right. So those are Heikin-Achi candles. Let me go back to the presentation here. I'm trying to do stuff with live charts, and so we looked at some live Heikin-Achi reversals. Going to look at the SPY super system just a little bit more here. Again, on the SPY super system chart layout that I showed you, it's optimized for clarity and precision. I added the 8, which really helps a lot because it can be used in conjunction with the 15. And then I added the high volume candles. And the high volume candles aligning with the SPY super system current momentum indicator for bullish or bearish increases the probability of success and larger profits. This is a huge buying signal and selling signal. Really, very, very profitable. All right, so here's the system. We looked at this already. There is your gear indicator right here that's modified, current time frame momentum, multi-time frame momentum, long-term trend. This is all you need on a 5 minute chart to trade intraday. This is all you need, along with the VWAP, the 15, and the 8 exponential moving average right here. Here's your support resistance levels. Here's things telling you what the institution is doing, and here's your high volume candles, right? Very, very important. The high volume candles have been a new addition in there. They make such a big difference. All right, you also, if you buy the software, if you're interested in mostly intraday trades, you get you get two formats. You get this one here, and then you get this template, which just shows the current time frame momentum. Because if you're trading intraday, this is all you're interested in. You don't have to look at the multi-time frame. It's not that critical on a quick trade that's going to last 5 or 10 or 15 minutes, right? But so you get this, also get this particular method template, all right? So here it is again, same thing. I'm not gonna beat the death on this thing. This was a trade we took in NVIDIA, by the way. This was a 5-minute trade here. This was before I put the high volume candles in. But you notice the institutions here went from selling, red, to buying, blue, right here. And notice how the stock broke up above the 15 and above the 8, right there, and off the VWAP. That's where you enter the trade. That goes from 185 to 187.47. Nice trade for I think we made about 35 or 40% on an intraday trade on that one. It's a SPY trade. This is a beautiful SPY trade to the downside, right? This is a 5-minute chart again, right? So the SPY is coming sideways. You see how we get this flush down right here, and the institutions were buying it, and then they started selling it right there. And they did it with and I don't have high volume candles. I'm going to show you some more of those. But see the pop out of the box symbol? These arrows, they'll tell you when the compression is breaking. This is breaking to the downside. So this is where you would grab the trade right there, which is where we did grab the trade. Institutions are selling, and they stayed selling all the way. And as long as it stays below the VWAP and below the 8, you stay in the trade. You notice how it stayed all the way down. It popped up through it here and then came back. And I probably would have got out right here because it's losing momentum, but it hasn't actually broken momentum yet. Okay, and again, this is another SPY trade here to the long side. Selling, buying, popping up, moving up beautifully right there. Another nice trade. This was a Tesla one we took in the morning. Same thing. Institutions went from selling to buying. It moved up off the VWAP, and it topped out right there. And that was Wendy's. This was an overnight trade on Wendy's right here. Again, the institutions right here were buying, and then they went to selling, and the stock broke down. We took it right there, and we flushed down overnight, and we took profits right there. That was a fairly quick day trade, overnight trade. Okay, so just to kind of emphasize what's going on here, you've got a person here trading with emotion. Remember, I said you've got to be able to keep emotion out of your trading. All right. What are the green and red dots on the candles? Oh, okay. Let me see if I find these. I took this out, but these green dots here and the red dots, but the green dots here. These are acceleration dots. These tell you that the momentum down here is about 100. It's about as high as it can get when you've got green dots. It tells you that there's a lot of volume coming in. Not a lot of volume, but there's a lot of upward thrust in this, and the momentum is at pretty much near the high. You get green ones for long and yellow ones for short. These I've removed from the chart. You're not going to see these trend dots anymore. I don't use them. I don't think they're any good. Okay. All right, so this is what we're going to do. We don't want to trade like this. This is somebody who's watching their P&L. They get into a trade when it was shooting up in the morning, but they paid no attention to support or resistance levels. And now all of a sudden it's coming back down towards support. And this is what they look like. And again, they're probably sitting there with a bunch of antacids next to their desk. You don't want to trade like this. And the way to keep emotion out of your trading is to have a solid methodology, have indicators you can have confidence in, and don't be watching your P&L, because watching your P&L automatically creates emotion in you. You look at the P&L, it's green, all of a sudden it's red, it goes back to green again. You don't even look at the technicals, you just get out because you're relieved. You don't want to be trading like that. Okay, and here's what it looks like if you've got some methodology, a system that you can use. You get the SPY super system, you know when the institutions are in there, you can see that they're pushing volume. This is what gives you confidence. And not every trade is going to work, of course, but 85 to 90% of the time they will. All right, so again, the process precedes results, and what I'm trying to get across here is to learn the procedures that we teach and what we have with the SPY super system, and they're not very complicated. I'm going to show you them in a minute. All right, and once you focus on those and learn those, then you're going to be in a position to start to make money. If you're focusing on your results without having a solid process to follow, it's going to end in failure. It's just, I've seen it over and over, hundreds and hundreds of times. Just because you were a losing trade doesn't mean the strategy that the trade was bad, and just because you were a winning trade doesn't mean the trade was good. I've seen a lot of people take really bad trades, make money on it, and then do the same thing again and again and again because it worked one time for them, and the next thing they know, they blow up their account. All right, so this is the high probability trade setups. Now I put up at the top here, a daily and 5-minute chart should be aligned. The most important thing is here, if you're going to take a swing trade, the daily chart needs to be bullish if you're going long, bearish if you're going short. This is important. Now, if you're only doing intraday trades, you're only going to be interested in the 5-minute chart. But if you're going to be taking a trade for a swing, you use the daily chart first. And any of the alerts that I send out typically are structured to be swing trade trades. So you don't necessarily have to get out of them the same day. I may get out of them the same day sometimes, but if you're on an alert service and you can't intraday trade, for example, then you can hold them overnight because I'm using the daily chart as my key for any trades that I do an alert on. Then you want to trade with the trend, both the stock and the market. We've talked about this. Bullish trend, you want to go long. Bearish trend, you want to go short. Then the SPY super system must align. If you're going for a swing trade, the current time frame momentum and the multi-time frame momentum have to both be bullish for a long and bearish for a short. If this isn't the case, I'm not going to take the trade. I mean, I scratch it out. I'm not going to take it. Then you look for relative strength and relative weakness in the stocks that met those criteria, and then you look to buy near support and sell near resistance once they come down here. And you know, we do some additional technical analysis to find the best of the best. But this is key. This is basically the trade setup funnel that you're going to learn and use. You don't have to use your MACDs. You don't have to use RSI. You don't have to use Fibonacci. You don't have to use anything else that there's out there. There's a million different indicators, which, by the way, I've used all in my training career to try to find out which ones worked. Okay, now in the alert service, by the way, it's designed for day trades and short-term swing trades. This is not an investment service. Designed for traders who can't watch the market all day. It's going to send out real-time alerts on high probability trade setups. And again, high probability trade setups, how are we finding them? Institutions are in them, and market internals are in our favor. Okay, and this is my equity curve for the year. You know, I don't like to talk about myself and my profits. What we're really interested in here is, and you are, I'm sure, is your profits. Can you make money? That's the key here. All right, now I'm going to talk about these high volume candles again with the SPY super system, and I'm going to spend some time on this. And then I'm going to show the results. I'm going to zip through those fairly quickly, but I want to talk about using the SPY super system indicators in conjunction with the high volume candles to find the best entries, because this is something that's really effective. I mean, really effective. High volume candles are white for bullish. High volume candles are yellow for bearish. Okay. We're going to look at some live charts to see the SPY super system indicators and the high volume candles in action. And this combination identifies not just when institutions are buying or selling a stock, but when they are buying or selling with major volume, right? Very big deal to know. And that's whether you're looking at a daily chart or a 5-minute chart. All right, so let me go ahead and I got some I want to look at. Let me go ahead and bring up my super system again. Let me go ahead and run this back a little bit so it's not going to be so small. Okay, so some that I talked about here. Silver, I noticed I traded yesterday because here's silver. So here's the trade I took in silver yesterday. Here's the time along the bottom here. Here's the gap down. Now that's a pretty big catalyst in silver. This is pretty bearish right here, right? But you notice it's just kind of compressing. The institutions are selling, they're buying, they're selling, they're buying. Now it's all of a sudden I get a pop out of the box symbol right here to the downside. So I'd be interested in looking at it there. But what I was really looking for was this high volume candle to the downside with the institution selling. So this is where I took the first trade right there. After that 11:15, I took this and I rode this thing down to about here. I don't think I stayed in it all the way down here. I think I stayed in to about here. But you have to understand something. That went from 87.99 to 84.89. This on a option, a put option on SLV, that was an increase of over $2.50 a contract. That's a lot. I mean, that's a lot of profit right there. And then I traded it again in the afternoon. wrong way. All right, traded again in the afternoon. And where did I do it? Yeah, right here. I traded in here. It came back down again here at 12 o'clock. See, it compressed. I took it again right off the 8. See the 8 exponential moving average? I see the high volume. Institutions obviously still selling this thing. I took it here, and that went from about 83.09 down all the way to 71.03. That's $12. This was a massive trade. I mean, it was a massive trade. You're talking about $12 on these options. So you might have got $8, even if you get $7 or $8, $700 or $800 a contract on this. That's what these working with these high volume candlesticks, along with the current time frame momentum down here, does for you. So silver was one I traded yesterday. I also traded U, because U was another big one in the morning. You go back to U in the open, right? So here's U in the open, right here. So where it opened, I took this pretty early, right here. High volume candles, institutions selling, rode this thing down. This was another very big trade, but I didn't ride it all the way down. Once I got a candle like this, I'm out. All right, I got a high volume bullish candle. I took the trade off, right? But U was a good one. I only traded that one time yesterday. I also traded Roblex yesterday, short. I don't think I took any long for yesterday. So here's Roblex. Where did I take it? Well, you see here, here's Roblex in the morning. Didn't do much of anything, just kind of opened flat. But then look at this candle right here. And look at the institution selling this thing, and look at the volume that's coming into this thing. Huge. And pop out of the box, breaking below the VWAP. This is where I took Roblex. I wrote it down here, and I got out 4 candles, 20 minutes on Roblex yesterday. For, I think I made, on the options, I made about 80% on the options on that trade right there. Right, that's a big trade in Roblex. Let's see, was anything else I wanted to look at? Might have had some those. I took all those shorts yesterday, but I can just look at these and go back and see what because I obviously, and during the day I can't trade everything because I'm working with the room all the time. But here's the SPY, and the SPY was kind of doing nothing yesterday. Notice how few high volume candles there are in here on the SPY. Very few till late in the day. Very, very few. So I didn't touch the SPY yesterday. IWM, which is the Russell 2000, right here. Russell was a little bit more volatile yesterday, right? So here's this morning candle in IWM, big volume, opened up here, came up here again. But you could have shorted it right here. Institutions were selling it, but again, the indexes were kind of choppy yesterday, so I didn't trade any of those kind of things. I did trade Tesla yesterday. Again, here's Tesla in the open, gapped up, made a nice move up here. That was a good Tesla long. You see the institutions buying. This was a perfect entry right there. As it came off the VWAP and above the 8, you could have ridden this thing right up here, and then you get out. It came right back to the 8, and you go from these candles here, white ones, to yellow, high volume. These are high volume candlesticks, right? And then I didn't trade it the rest of the day. It wasn't doing anything. I much prefer to have high volume candles when I'm in there. Okay, Doug, when I have a high volume candle, do I wait for the close because it could change? No, the high volume candle, once it's painted, it's not going to change back because it's already got too much volume in it to do that. It's not like regular candles. Once it's a high volume candle, it's a high volume candle. It's the chances of it ever going back to a non-high volume candle. It may flip right at the beginning, but not once it's created. All right, so there was Tesla. Anybody have anything stocks they want me to look at? I'd be happy to pop one up here if you happen to be trading some yesterday and show you what they look like on the chart. Nope, no special. All right.
Hey, David.
Right, so let's take just arbitrary look at something. Here's IBM. All right, so these are the high volume candlesticks used in conjunction with the SPY super system. IBM all over the place here. Look at this. This is see how it changes color. It's just not going to trade anything like this. This is junk trading, and you're not going. There's nothing in here to find that it would work. But if you're looking at these during the day, you're going to find some good ones in here because this of course is at the end of the day. But if you're going to find something like this, Lucid at the end of the day, see that is TDC. See that nice short that is Stitch Fix on this Divine Energy on the 5 minute right there. So that's what you're looking for, all right? Do I always trade the 5 minute? I always trade the 5 minute on intraday trade. Yes. You don't have to. I mean, I know people, I prefer the 5 minute. It's less noisy. I don't like using 1 minute. I don't like using 2 minutes. Sometimes I'll switch over to the 2 minutes if I'm getting ready to take profits to try to identify the institutions getting out of them quickly. But generally speaking, I'm always trading on the 5 minute time frame, except on swings. On the swings, I'm always taking a daily to look at a daily chart. And it's important to understand that if you get into a trade using the daily chart, then you need to get out using the daily chart. Don't let 5 minute noise on a chart chase you out of a long or a short that you base the daily chart to get into. Do the cascade results change when you change time frame? Oh yeah, like, of course. Yeah, because it's looking at the cascading is looking for 3 candles. 3 candles to the upside that had a higher close, higher close, higher close, and the red downside, higher down, higher down, higher down. I mean, I can change this cascading up to a daily setup over here, cascading up daily, and it's going to show me stocks that that look good. If I switch over to the daily chart, it's going to show me exactly what I want, what these look like. So I look at SanDisk. See that it had a low. See how it's got the high volume, but it's yellow. That's because it closed below the open here. But it still was a big day yesterday. But I wouldn't take it. There's SCNTX. That's a nice look on one. BKD. That's another nice one. See how you have 3 candles or more showing a higher close like that going up. So absolutely, you can use that for that. And the same thing in down. I'm not going to go through each one of those, but these scans will find these stocks for you pretty nicely. Paul, ADMA. Okay. You want it on 5 minute or daily? It's 5 minute. You put ADMA in there. Right, there's ADMA 5 minute chart right here. You want it on the daily? Okay. There's ADMA right there. Had a little pop up at the end of the day yesterday. Daily chart's pretty ugly right now. I mean, you see what's going on here. Bearish across the board. I certainly wouldn't be taking it long right now. Barry still bullish. I'm not sure which one you mean. Hey Kirk, does this work on futures? Yeah, it works. And yeah, I mean, you can put it on anything you want in here. If I put ES in there, it's going to show you the ES. Whatever symbol you put in there, it's going to give you those whatever time frame you want. That's a daily. But if you're trading the ES, you're trading off of a much faster time frame. So here's the ES right here. That's yesterday's ES. It's kind of all over the place. Yeah, you can use it for anything you want. Barry, Pepsi, which has been pretty bullish because of the risk off trade. But there's Pepsi right there. This is a 5 minute chart on Pepsi yesterday. See, if you were trading this, if you like Pepsi and you happen to be watching it and you spot something like this, it goes selling to buying right there. There's a pop above the VWAP, the 8, the 15, with a pop out of the box, high volume candles. You just ride that. You just take that in and just ride it up. That was at the end of the day right there. But that's a nice little trade in Pepsi. And I don't know if they had any other situations or yeah, you had a short in the day. It just depends on whether you want to short Pepsi or not, because it was green for the day. Typically, I'm not going to go short a stock that's green for the day. I'm only going to take bearish ones. BRKB, Berkshire. I'm not sure how they. Oops, I'm not sure how they abbreviate that in English. BRK. Where's BRK.B? All I get is Berkshire Hathaway A. I'd have to. I'm not sure if they actually have that in here. I mean, sure they do, but I'm not sure what it is. BRK. I know that's Berkshire. Okay, oh, Sophie. Okay, SOFI. This is one right here. This was a 5 minute chart on Sophie. Were you interested in the daily or the 5 minute on Sophie? Berkshire. Okay, it's Berkshire/B. Okay. Here's the day. Sophie right here. Here's the daily right there. Looks. We got a Heikenite reversal. We got a big ugly candle here. on Sophie for a bearish, definitely bearish on Sophie. Let me try the BRKB. This oh yeah, Berkshire Hathaway B, there it is, right there. So there's Berkshire Hathaway, there's the daily on Berkshire Hathaway. And if we're trading it to the 5 minute, there's the 5 minute on Berkshire Hathaway. Barry, OKLO, put daily on OKLO. I'll take a couple more of these, but I don't want to spend too much time on these, but I just want you to see how effective these things are. All right, there's the daily at OKLO. It's definitely short. It doesn't have high volume on this big candle yesterday, but it's definitely a short setup. Selling here, selling here. Kurt, Google. Google, fairly bullish, kind of a big compression here. This is what's called a dynamic compression zone that it's coming out of, this shaded area right here. And there's a 5 minute right there on Google. Pretty wild day yesterday, up and down, up and down. All right. Rob, silver, yeah, we looked at silver already. That's that's an ugly chart. Again, I said I traded this short twice yesterday. I took it here in the morning, and I took it again right here in the afternoon. And the daily chart on silver is a horror show. Okay. All right. Thank you very much, everybody. I appreciate it. I don't want to take too much time. I do want to go over a couple more things here on this webinar. But now you can see what I'm talking about, this combination of high volume when the institutions are selling based on the current time frame momentum. This is a big, big deal. This is really gonna find some really, really good trades for you. Okay, so I'm gonna talk about the results. I've had this room since 2022. I didn't put everything in here, but this is starting my 5th year. But in 2023, if you took $2,000 in each trade that we took in the room, you would have produced a little over 60,000 in profits. 2024, same thing, about 55,000 in profits. Again, a lot of the profitability is dependent upon whether the market is trending or whether it's choppy. Choppy markets, you just can't get as much profits as you can out of trending markets. 2025, was through September was 47,765. It ended up around 60,000 again this year, so I haven't updated it yet, but it's about the same as it was the last 2 years. Again, it's very consistent. That's the whole key here. This is something I'm probably gonna take this off. But I was pretty proud of this. This was back in April when the market went way down and then way up on the tariffs when they went on and tariffs came off. The SPY was down 10% in 2 days. We had 4 trades on in the room and on the alert service. We had these on the alerts as well. These were all swing trades. We had AVGO, which is Broadcom. We get in for $75 a contract. We got it for $1.04, 39% profit. We get into Nike for $285 a contract. We closed it for $9, 216%. And this is not normal. This was the biggest trade of the year, and this is really an outsized trade. This tariffs helped us a lot on this. Nike makes all their product in Vietnam. It was supposed to be a 39% tariff in Vietnam. Nike dropped like a rock. We took advantage of it. And we had Sarepta short, made 78%, and we had NNE short, made 25%. Only 4 trades that we had on. That was a big month for us. All right, so just kind of looking at what's going on right now. I haven't updated this through the end of the month, but so far at the beginning of the month, we started with 7 wins, 1 loss, 2,000 invested so far, about $1,800 in January. And look at the percentages. This is what you're going to get. You have to get used to seeing. 11, 15, 22, 51, 34. This is the range that most of us trades are in. Right. This was June of last year. Again, I was on vacation. I was out for a couple of weeks. We had 10 wins, 1 loss, 91% win rate. 2,000 in each trade generated 37.90. But again, 20%, 23%, 25%, 42%. This is what you'll see on your trades. Don't be thinking you're going to get 400 or 500% on the trade. All right, this was July. We had a lot of trades in July. Back from vacation, I must have been well rested. We had a lot of, it's just how many setups we get. This is a lot of trades for us in 1 month. And you can see the percentages are hanging around the same. 30 wins, 3 losses in July, 91% win rate, a little over 16,000, a lot of almost 17,000 in the room on 2,000 per trade. But really a huge month. August, 84% win rate, 5,900. September, I don't know why I put all the trades in here. 47, 44, 84% win rate. Again, here's their percentages. See how they stay around the same amount. And we do have losses. Please be aware. We have losses. January to September, this past year, 155 wins, 28 losses, 85% win rate, and 2,000 invested in each trade and produced 47,765 up through September. All right. These are, I'm going to zip through these. This is back to 2024. I did this because I wanted everybody to see what the percentage gains you can expect. All right. This is what you can expect on these trades. On the UMCAT trades, the ones that are the out of the money catalyst trades for the 5-minute chart trades, and the SPY super system trades, which are 5-minute, they're going to produce more money than this. None of those are in any of these. Those are all separate. Okay. February, again, 24 and 2, 92% win rate. So I'm just going to skip through here. Again, we had winning months every month except for September last year. We had a losing month that lost 1786. The room lost 295. Terrible month to trade, but embarrassing win rate. But again, we had in August, we had 45.35, lost 1786, and then made 74.48 in October. So pretty nice recovery there. All right, there's November. So I'm going to just kind of run through these things. I think, you know, you can see that we make about 85 to 90% each month on the trades. And, you know, the profits vary from, you know, 15, 1,800, 2,000 up to about, well, 16,000 is a lot. Typically around 7,000 or 8,000 is normally about max on the months we make. At 2,000 per trade, obviously it's going to be dependent on how much you put into each trade. All right, and here's what the alert looks like, by the way. You're going to get an alert that's going to say the date. It's going to say the stock symbol. It says, like in this case, it was by the April 11th, 67 puts. So there is your expiration date, April 11th. Is your strike price, the 67. You're buying puts, so we were short for 285. That would be the whole first alert. The next one would come through, it would say the same thing, and then it would say sell order for $9. Going to tell you what to put it in for. And then when we sold for $9. It comes through. And if we had adjusted this later on, there would have been another alert to tell you when the adjustment price. Okay. Okay, how do we achieve such stunning results? I'm not even going to talk about this. We know how we do that. You saw the SPY super system. We know when the institutions are driving a trade and when the market internals are bullish or bearish, we take advantage of that. All right, and how we do this again, we look at momentum. I showed you that. This is a big, big deal. We look at trend. We also look at some money flow in there, but this is the main thing that we're focusing on the chart, right? And here's the charts again. Here's the one with the SPY super system for just intraday trades. If you want that one, you'll get it with the software if you buy the software. Again, here's that SPY super system entry right here. This was a hike and action reversal candle we took. Notice it was green and then yellow, bearish right there. Take this right here, ride this thing down. Beautiful trade, institution, sell, sell, sell. This is the SPY super system trade. I'm not going to go into a lot of detail on this. This is very high probability trade setups using the both the high volume candlesticks and the current time frame momentum. These are quick trades. This was based on doing that speed, the SPY, the Q, and the IWM. These are my results because I can't post these; they're too quick. I can tell you when I see one, and I can also I also have a video on how to do it. And a lot of people have learned how to do it and trading in the room now all the time. So a lot more trades, as you can see, but I've never had a losing month on this particular strategy. This was back in 2024 that we started this, right? So I'm not going to go through every single one of those, but they're big profits on these things. Okay, and again, this was more SPY super system, more SPY super system. This was the SPY super system trades, 48.31. This was the room, 74.48. These are my results. This is the room results. These are not, one doesn't include the other. These are completely separate. There is no SPY super system trades included in the room. Those are all separate, okay? November here, December, and this was the last quarter of 2024. So you can see the profits. I just wanted to highlight that. Okay, so I'm gonna kind of run through these real quick. This is, again, the charts you can see. I think you've seen enough of these. Current time frame momentum goes blue, goes long, we buy it here, we sell it up here, $220 profit per contract. That's on the SPY. That's a SPY super system trade right there. All right, and there's another one right here. This was 2 candlesticks, boom, in and out. They went red, yellow to red. SPY here again. And SPY here again, see that right there? We take it here, we get out right there. $120 profit per contract on this on the IWM Russell 2000, which doesn't move that much. Okay, couple of questions. Cost for the service, I'm going to tell you that in just 1 minute. Do I use trailing stops or watch the trade all day to know when to exit? Well, it depends on the trade I'm in, Ken. If I'm in a SPY super system trade or UMCAT trade, I'm not going to be in them very long, and I watch them. Now, one thing I have done is once it gets to a certain level and I've got good profits, I'll put a trailing stop on it. But I don't use stop. I'm gonna get out of that. If it goes against me, I'm gonna exit the trade myself. Okay, I'm not gonna put it on. I'm not gonna put a stop in there. It's automatic because the market makers and institutions can see that. So I don't do that. So I'm watching those, but I'm not in them very long. Those SPY super system trades or the UMCAT trades, you're in one at a time. You don't have multiple ones on, and you're getting out pretty quickly. Okay, so I just wanted, this is going to look at some, this was a trade we took recently. This was a line. This was supposed to be a swing trade. I'll get it on the 5 minute because we get in it, we get out of it. This was an alerted trade. We made 51% in an hour. And I decided that to me, that was the time to take the trade off. You could have kept it overnight and probably still even made more money, but I decided to take it off there. That was a line. This was URGN. This is an old chart. So I'm gonna get rid of this because it's got the VWAP on here on the daily. It shouldn't be on there. But again, this was a nice trade. And the NVIDIA, same thing, pulled down to the 15 and we cut it on the bounce. These are fairly old charts right there. So I'm not going to cover. This was a Nike trade. This is where we get in it right here, 328. And actually, we made money on it the way down, but we stayed in it. Notice how sell. Everybody's selling. Institutions are selling the heck out of it. We catch this gap down, 216% profit on that one. Right, and Sarepta, that was another one. You can see what are the institutions doing? I mean, it's really not hard to see when they're all red like that. With Hims, this was a nice bullish trade we took. Right up. Again, so now that's all the charts I'm going to show you. There's millions of them, obviously, but I think I tried to show you the Fibonacci. I tried to show you how to use the high volume candlesticks along with the current time frame momentum on the SPY super system and how effective that is and I'm gonna print some results on this pretty soon because I haven't been using the UMCAT very long, but it's producing really outstanding results. All right, so again, here's our strategies we use. We talked about this: straight calls and puts, straddles and strangles, etc., debit spreads. All of these we talked about. Here is our intraday strategies, SPY super system, and UMCAT. UMCAT is kind of like this, except we're using out of the money for very specific setups, which they produce a much higher ROI, return on investment. Okay, so these are the offers for the room. This is the live trading room and the text alert service. You can get a 2-week trial here, which you're going to get the text, you're going to get the trading room, you're going to get. I have 31 modules out there, videos to watch on everything relative to the software in the system we're trading. All of the indicators, all the strategies. One on straddles and strangles, one on SPY super system trades, one on UMCAT trades, debit spreads, credit spreads, weekly ATMs, everything. I've got videos on all of that and how to use them. You also get access to a private Discord chat. We've got a couple of other professional traders over there, right? So that is for the quarterly membership is $396 right now in this special. If you put save 50%, $396 for just for a quarter. And you get 2 weeks, and of course you can opt out anytime you want on the first 2-week trials, or you can do a one-time payment on the text alerts and the trading room. This is forever. You get into it and you're in for good. It's $24.96. Now there's one here that's not showing up, but you can also get this annually. If you talk to Rory, he'll give you the annual price. It's about $11.97, I think, for the annual price on the one-time payment. For the week yearly, that would be annual. We get the text alert, you get the trading room, you get the options modules, all the training modules in the Discord room. So $24.96, $11.97 for the year, and $3.96. Of course, this is the best deal because it's cheap over time, but the annual is also pretty nice, a lot cheaper than the quarterly. Okay, now you also have the SPY super system, and this is the software that we just talked about. This is the SPY super system. This is exclusive pricing. This is if you save 50%, this is an annual membership for the SPY Super System, the software. You get the software. Rightline will put it on your machine. They'll put it on Thinkorswim. You don't have to be a member. You can download Thinkorswim and they'll put it on there. You don't have to pay for it. You get the software. You don't have to pay for Thinkorswim. You have to pay for the software. The SPY Super System software. You get 1 month in the options trading room if you buy this for a year. You get the scanners, of course, with the as I showed you. I didn't spend a lot of time on those because there's more of them, but I just kind of want to touch on them. You get obviously my modules on training, and you get an installation and setup. You get any updates that come along. We just added these high volume candlesticks recently, so everybody who owned it got that. All right, and so that's $9.98 for a year. That's put in, save 50%. If you want a one-time payment, this is forever. The SPY Super System software, you get 3 months in the trading room. You also get the scanner, the Discord room, and all of my training modules, and it gets installed in there. $19.98, you own it forever. So whether you're in my room, not in the room at that point in time, it doesn't matter. You're going to have all the indicators that we're using in the room to find these high probability trade setups. All right, really, really cheap. That's 50% off. This one is save 50%. These are the this is for the software, and the software to me is it's like a no-brainer. I did this return in subscription investment looking over the last 3 years, and annual subscription $1,600. This is obviously the most you'd pay if you're doing quarterly. But the average trade, if you're putting 2,000 into a trade, assume all trades were taken. The historical results is the return right now is 40x return on investment. So you're getting 40 times what you paid for the room. You're getting 40 times that back each year. 40 times the subscription cost. Obviously doesn't include how much you're putting in the trades, but this is what the results have been. And so the subscription is consistently paid for itself every year. Again, ROI, simple math, proven results. And of course, past performance is not indicative of future results. Trading involves risk, and I think we all should know that's the case. So those are your offers: the text alert service and the trading room, a 2-week trial, a quarterly membership $396, one-time payment. This would be having it forever. You'd be in the room forever. You'd have a text alert service forever, and $24.96, or I believe $11.97 for the annual. You'd have to check with Rory. He'll give you the information on that. All right, and then here is the SPY software, SPY Super System software. $9.98 for a year. This is really a tremendous deal. $19.98 forever. That I got it for forever when I got it. Of course, I wasn't part of this when I found the first software, but it's been we've improved it tremendously since I first got into this. Okay, and if you go to the chat box right now, I believe that yep, you'll have all of the links are over there. Yeah, sorry, just reading the message here. Yeah, all your links are for both of these are over there in the chat box. You can just click on them, and it'll take you to the offers. Okay, and sale ends Sunday. Just to be aware of this. There's Rory's number: 786-732-4656. Again, 786-732-4656. Sarah, is this recorded? It is. Yeah, you'll get one. I don't know if I went over the high volume candles. I did. I spent quite a bit of time, Sarah, on the high volume candles. But there'll be a video. They should probably get it tomorrow or on Monday. Okay. Okay, great. Thanks. Thanks, Sarah. Appreciate that. Okay, so that is wraps me up for the day. I appreciate the opportunity to speak here at Traders Corner. Thanks, Anthony. Appreciate it very much.
Oh, thank you so much, David. You had so many questions today. I mean, you were just on it, so we really appreciate it. And he's really excellent what he does. David, thank you for that excellent presentation and for clearly walking through your SPY Super System. We appreciate both the insight and the generous offer you've made available today, and you've really proven your work too. Everyone, David's offer link is now posted in the chat box. On behalf of Traders Corner, I want to thank all of our presenters for sharing their time, expertise, and strategies. And I want to thank all of you for joining us today as well. You guys are the separators in the retail world, I believe. A replay of today's summit will be sent out shortly. We appreciate you being part of the Traders Corner community, and we look forward to seeing you at our upcoming events. Have a great rest of your day and happy trading, and I hope you're profitable next week. Thank you so much.